Let's begin with what the US markets look like in trade. It was actually two very contrasting pictures. If you look at what the indices ended up at, the Dow has zoomed while AI valuation fears weighed on the NASDAQ. So quite a contrast there. Let's pull up those indices, and you saw I think you're looking at the futures right now, because if you look at US markets, you saw the NASDAQ down in the green as well. Now, private payroll data has shown job cuts in October, and that is adding to economy concerns. Oil prices have risen as impact of US sanctions on Russian crude have grown. The Brent was above the $65 mark. Let's pull up Asia for you as well. Before we go to Asia, let's pull up the US markets once very quickly. Yeah, there you have it. So the NASDAQ down and the Dow Jones was up about 560 points. Let's pull up Asian markets at this point, and mirroring what you've seen across the board. SoftBank seeing a huge hit, saying they're going to exit their positions entirely in Nvidia. So some pain there. But India is the story this morning, isn't it? And let's just pull up the India implied, 163 points up. Alex, we'll get to trade recap and setup, and then maybe you talk a bit about polls.
Yeah, absolutely. Let's do that, because yesterday was an interesting day of trade, purely because you saw a pretty sharp bounce back from the low point of the day, and you had the benchmark end in the green, the Nifty 50 in fact rising as much as 1% from the day's low, and it just fell short of that 25,700 mark, just a whisker away. Bajaj Finance's drag, and it was a pretty heavy drag at that. It was balanced on the other side of the spectrum by HDFC Bank, as well as M&M, ICICI Bank, and Bharti Airtel. So quite a few of the heavyweights contributing. Nifty Defense was by far and away the top sectoral gainer, gaining 2.5% in trade yesterday. But the second fastest gainer, which is the Nifty IT, is a standout this week, because just in the last couple of sessions, it's up 2.8%. And it's made a stellar up move led by some of those frontline players. Small caps underperformed in trade yesterday, and they failed to rise with the rest of the market. In fact, they ended in the red. The market breadth, and if we can pull up that line graph of the advances and declines through the session, it improved throughout the session and pretty much ended very close to even Stevens, but it still favored the declines just by a shade. Bajaj Finance, of course, was the standout underperformer, but on the flip side, you had several stocks that were reacting positively to news and earnings. Hind Copper was one, KC International, Bharat Forge moving from negative territory to positive territory, one of the top gainers in the broader markets as well. Some of the standout performers, but there were several more, which I think will take the next 2 hours to talk about.
As would be the case every day, right? I guess. But yeah, you're right. Yesterday was an interesting day of trade, because simply from the bottom, we had a very nice rally, as you guys marked in the closing show as well, right? So from a technical parlance, I was reading a couple of notes. A higher bottom formation and a close above the 20-day simple moving average, you could construe that that's a positive from a trading technical parlance. No question about it. Now, murmurs of a trade deal and the exit polls as they stand will spur the market today. And I use the term carefully, murmurs, because we do not now believe it until we hear from New Delhi, but there is a consistent reference happening around a possible trade deal soon. It does bring about some excitement in the markets. You've got to accept it. But yes, believe it only when it eventually comes out. So keep that in mind. But both of these factors, they certainly help the market, with the exit polls even more so, you would presume. The only caution, viewers, that I felt was that comes in from the consistent, persistent FPA outflows the right 8 days, both in the cash and the futures market. There have been persistent outflows. Remember, we were at 92% shorts, and then a rally ensued which brought down the short percentages from the FIs to nearly 76%. Last 8 days, we've again seen futures selling as well as cash market selling. So that's a bit of a caution. And I reckon that the defense stocks would continue to be in limelight today as well. It took an unfortunate incident for the sector to be 2.5% above. Maybe it stays in the limelight today as well. I wouldn't put it out of the realms of possibility to do that. And guys, just a small, boring, but an important development which kind of skipped by the sidelines yesterday, and it would naturally so. But I happened to see it, and therefore I just thought I should bring it about. We're moving to better data management in India. A lot of countries are now plagued by data not being strong. The India Statistic Department is actually addressing some very persistent issues. So just a small thing, in the IIP figures that get calculated, closed factories used to be counted in IIP, and that used to always be distorting data. Now the MOSPI, which is the Ministry of Statistics, has put out a paper yesterday proposing a methodology to keep moving out these redundant factories. So I think over a period of the next 12 months, IIP, because we always used to this refrain that IIP itna acha bura dikh raha hai, but actually nahi dikh raha hai. IIP will statistically be a lot more dependable than what it is right now. So these small incremental changes happening in India, which are brilliant.
At a time when US government is unable to give any data at all because of the shutdown.
Yeah, and but on the topic of data, you will have CPI data today as well, and
Important.
that basket requires to be updated quite significantly because you still see cassettes.
Yeah.
And a few other things in there.
Having said that, all things remaining equal, the expectation is to have a multi-year low CPI, maybe at 0.5%. That's what's being penciled in, so watch out for that. All right, what else should be on your radar today in trade? Asian Paints will report Ashok Leyland. So I'm starting off with some of the earnings which will come in, because even as we get to the fag end of it, some important ones out there. Hindustan Aeronautics, Tata Steel, Prestige, Pfizer, Cochin Shipyard, etc. Just wanted to bring to notice this Goldman Sachs India strategy as well. They have earmarked 14 stocks to own for the rally. Titan, Godrej Consumer, Newland Labs, Piramal Pharma, Havells, Indigo, PTC Industries, Solar Industries, Make My Trip, Eternal, RIL, NTPC, Uno Minda and Maruti Suzuki. So interesting mix of stocks that they have brought in. As far as the markets and levels are concerned, the bulls of course defended 25,450 to 25,500 beautifully yesterday. Sharp recovery of over 200 points seen from the day's low. Now if the Nifty holds above 25,670, it's a buy the dips market. A clean breakout only above 25,800. If that happens with volume, then we're heading to 26,000 plus fast. Supports at 25,500, 25,450. Immediate support for intraday 25,600, 25,800 is the resistance. For the bank Nifty, also rebounded smartly, signaling buying at lower levels and maintaining its status as a market outperformer. Banking, in fact, led yesterday's reversal and the structure is bullish. Supports at 57,750, 57,600. Resistance at 58,350, 58,550 for the bank Nifty. Apart from this, today, because of exit polls, Friday when the results come in, watch out for those couple of days as well. So maybe that journey to the road to 26,000 may lead through Bihar over the next few days, but we'll have to wait and watch. Meanwhile, Puneet joining in for the setup for the derivatives. Good morning, Puneet.
Good morning, and to all three of you actually. And it's going to be an interesting day to say the least, because we are getting that additional fillip in terms of murmurs of a trade deal, and that'll be something to watch, at least for the markets in this particular point of time. We are expected to be above 25,800. If we can able to maintain that at least in the near term for a couple of days to form any kind of trajectory will be a key positive for the market, at least in the near term. And a similar trend will be hoped from the bank Nifty as well, where largely the heavy lifting has been done by the PSU banking stocks. So you will want to see participation from the Nifty Bank, at least in terms of the private names as well. That seems to be lacking in terms of any kind of trend right now. In terms of course, today is also the expiry, and the foreign invest position has seen some selling in terms of the futures, and because of that, the subsequent impact on the index long position for foreign investors have actually now hit another low today at 12.6%. This does indicate an increase of shorts in the systems and also cutting of long positions, as well as the bullish momentum being cut by foreign investors. And a similar trend is being observed by the put call ratio, where the number of puts compared to the calls have now inched up to 1.18 from roughly about 0.9 starting Monday. So that's the other key trend. In terms of the open interest distribution across levels, we have started to see some kind of buying at 25,500 as well as 25,700 from put investors versus 25,200 to 400 at the start of the week. So that the level seems to be consolidating somewhere between 25,500 and 25,700, and that could be the near-term support. Hopefully, we can go on the upside from those levels as well. And in terms of stocks, there's been a limited impact in terms of open interest, both for the gainers and the losers. So within this list over the last couple of days, there has been limited formation of any kind in individual stocks, but a lot more focus on the earnings. We have some big names today, as Tamanna did point those out. So largely, that will be the key aspect, while IT as well as defense, that'll be the other one I'll be watching out for if the momentum continues from what we've seen from the start of this week compared to the last week, whether that wasn't the case at all.
Okay, thank you for that, Puneet. 153 points. Nice to see that gap up on the screen after a while, and some of the results may help as well. So first on my watch list on stocks is Unique Commerce eSolutions, relatively recent listed company and a good set of numbers, so giving it a thumbs up. Margins and profits have sharply expanded. Margin expansion is because of cost efficiencies. Shipway has continued to drive strong growth for the company. They've signed over 100 clients in the second quarter, and total clients now is over 1,000. Post Q2 annualized revenue run rate is over 200 crores. Here are the financials. Revenue up 14% at 51.3 crores. EBIT up 59% at 7 crores. EBIT margins is up 390 basis points at 13.82 versus 9.91, and net profit is up 46%. It's looking like an interesting play on the whole consumer sentiment as well, because even though this was mixed during the quarter, the fact is that strong recovery of demand is being seen in what Unique Commerce does. So Shipway by Unique Commerce, by the way, which has performed well, is a logistics company and helps sellers reduce shipment costs. So if you're looking at, in that sense, micro proof of what demand scenario is turning out to be, these numbers really show that sharp expansion positively in their metrics. BSE is the second one that is on my watch list this morning. It's a thumbs up. Revenues up 11.5% at 1,068 crores. EBITDA up 10.5%. Margins have stayed, I would say, steady, a slight dip to 64.7% versus 65.3%. Net profit up 3.5%. The index option volume surge has driven strong revenue growth. Transaction charges increased. They increased it by about 56% for the year and 7.5% odd for the quarter. Expense control has kept margins in check, and index options market share has increased to 29.2%. Here's what Jefferies is saying. They've maintained a hold and hiked the target price on the stock to 2,930 rupees. They're saying healthy growth in options revenue, softer trends in cash segment, lower SGF chart lifts estimate, clarity on norms for index option expiry is key. Well, that's for the entire space. Having said that, good set of numbers from BSE. Now, PI Industries is an interesting one. When you see the numbers, you think this is not a good set of numbers. It's a weak quarter. It is, yet we're giving it a thumbs up. Here's what's happened. Revenue is down 15.7%, EBITDA is down 13.8%, margins have improved though from 28.3 to 28.9%, and net profit is down 19.5%. But what was expected was far worse. This is why perhaps Jefferies has maintained a buy, target price of 4,315. They say it's weak but ahead of muted expectations, growth likely in the second half. Pharma growth has surprised positively, but losses continue along expected lines, and management has maintained guidance for single-digit revenue growth overall in FY26. So as we get to the last of the result season, at least 3 thumbs ups on my list this morning.
Yeah, so mine as well, and a pretty strong set of numbers across the board, and I've chosen earnings as well. Fortis Healthcare. This is something you should keep on your radar because strong operational metrics across the board. You had a revenue growth in the hospital business that was led by increase in occupied beds. Key specialty, which is oncology and renal sciences. And remember that oncology is something that a lot of players are focusing on very strongly. Look at the kind of growth there, 29% in oncology. That's certainly something to watch out for. The average revenue per occupied bed, it's abbreviated as RPOB, it has increased by as much as 6%. The occupancy stood at over 70%. What is interesting is that the international patient contribution has risen to about 8.1%, and that revenue has grown about 26%. Even their diagnostic business gross revenue has grown as much as 7.3%. But take a look at the metrics, because that clincher is going to be that 28% odd EBITDA increase and the expansion in margins by as much as 200 basis points to 23.9% versus 21.9%, and that has led to a strong PAT performance up as much as 82.4% to 322 crore rupees. The second stock on the list.
Sorry, before you get to Biocon, can I just add for
On the
Fortis?
hospitals.
Yeah, and all of the hospital stocks. So
Yeah.
Piyush Goyal has said that visa on arrival for patients traveling from the European Union and US
Yes.
are under consideration for medical tourism. And you've talked
It
about
would be
how
a huge boost.
Yeah, you've talked about how international patients have increased. So for the entire space, not just Fortis, I think watch out for that today as well.
Yeah, and I think, look, some of the jokes that are cracked, somebody like Nilesh Shah from Kotak has said very clearly that his friend got his daughter from the UK back to India for a dental surgery because she had to wait 3 weeks there, and the cost of the tickets along with the dental surgery was less than what you would pay in the UK. That's par for the course, really, and so therefore medical sciences could get a big boost from that. Watch out for these hospital stocks. Biocon, it's a thumbs up on account of, again, a reasonably strong performance on the revenue front, on the EBITDA front, but it's actually missed the profit expectations, the consensus expectations. Remember, it's a PAT versus a loss in the comparable quarter. The growth was led by biosimilars, which obviously is a focus for Biocon, but they've also seen an improved momentum in generics. The Biocon biologics revenue has increased by as much as 25%, and they have launched 4 new biosimilars. Take a look at some of those metrics. Revenue uptick of close to 20%. EBITDA has also grown pretty strongly at 22%. Margins have expanded just a tad bit, and the PAT number is coming at 84.5 crore rupees. The consensus expectation was slightly above 100 crore rupees, as a result of which it's missed by a pretty big margin, but it's still a PAT number versus a loss from the comparable quarter. Gujarat Fluorochemicals is the last stock on the list, and if you remember Naveen Fluorine, you will remember that similar businesses have actually done incredibly well, but their key metric to watch is the strong bottom line performance in a tough quarter. Why is there a tough quarter? It's because the sales of both their fluoropolymers as well as fluorochemicals, which is their primary business, accounts for most of their revenue. Both of that was impacted by the tariff announcements by the US. Fluorochemical sales were also impacted by quota reduction as well as seasonality. This is from their investor presentation. But they've seen a sharp margin expansion on account of changes in the operational efficiencies as well as the mix, which has been beneficial. That's led to a 48% rise in the PAT. One issue for them continued over the last several quarters, that their battery materials business, which does not contribute a lot to the revenue at this point, continues to make EBITDA losses. But then going forward, they're saying that a key raw material for some of these batteries, which is lithium hexafluorophosphate or LiPF, is going to commence operations soon or production soon, and that could be a positive to watch out for their battery segment. All told, EBITDA is up 23% odd. Margins have come in at 30%. Watch out for this one in trade.
How did you say hexafluorophosphate?
I practiced.
I was wondering.
Yeah, interesting. Well, 2 decent numbers and 1 not so decent on my list. So Torrent Power is the first one. Revenues were up 9.8%, which was okay, but the margins really expanded. 16.8% was the corresponding quarter last year. They've come in at 19.1%, and this is because there's an increase in the contribution from merchant power sales for Torrent Power. I think that was the key reason why EBITDA performance and the operating performance got a bump up of this nature. And no comments on whether this can be sustained or no as yet in the PPT either. So that is a bit of a bummer. But the profit after tax was up 50%. So purely on the grounds of what's been reported, especially in the operational front, you would reckon that the street might be pleased with these numbers. The street might not be too pleased with the numbers of Thermax though. Revenues were down about 5.4%. And the margins cracked in equal measure. I mean, for Torrent Power, they expanded nearly 300 basis points. In this case, 7% versus 10.6%. So nearly 350 basis points decline in the EBITDA margins for Thermax. It was the weakest margin performance in the last 5 quarters. And as a result of which, the profit after tax was down about 39% to 120 crores versus 197 crores. Now, the order booking was okay. Whether they're able to execute in the timely fashion, whether the export revenues and the domestic revenues all match up at the right operational metrics or not remains the key, but not the best of numbers for Thermax. Belrise, the recent listing, has had no such problems, decent numbers. So revenues at 13.8%, Margins at about 12.6 versus 11.8%. The bottom line went up 81%. But unlike Biocon, where there is a high other income, in this case, it's below the operating line. The net interest expense fell 62% YOY because they used the IPO proceeds to retire debt, and that sustains for a couple of quarters more. So you might well see Bell rise. It's fundamentally a completely operational performance, plus the below the operating line interest expenses cleared off, which has helped this one. The only problem was that the operating cash flow was actually down by about 73% because of higher current assets. It's not something that Street really likes when the EBITDA is strong, but the operating cash flow isn't. But be that as it may, the numbers look good. Maybe the Street might be happy with these. So these are my three.
Yeah. I think many more which didn't do that well because we've sometimes it's that preference to pick stocks that are pick the winners. But even at Tata Power, Kolte Patil, not that great. I thought Godrej Industries was not that good.
It was okay.
Either. RVNL, Gokuldas Export. So there are quite a few pain points there as well that you would see.
And not just that, okay, I want to extend the list of winners as well, in my opinion. You had a margin expansion for IOL Chemical, watch out for that. Torrent Power, you did Torrent Power, yeah. Hindware was actually good, PAT versus loss in the previous quarter. PC Jewelers, this is a company that has been maligned in the past for good reason, but it's actually seen a pretty sharp recovery on the operational front as well. 60+% revenue increase for this particular company.
But that's, you want to look under the hood on some of those
sure.
numbers as well. All right, here's some of the other stocks that are on the watch list this morning. And Adani End is something we're talking about. There's a fundraise via rights issue that they have announced. So that will be a positive. Apollo Hospitals as well, medical visa on arrival will help with this. Bharat Forge, 250 crore defense ministry order has helped Paras Defense, 36 crore defense ministry order, which is why keep an eye on defense stocks today as well. BASF India is the other one that we're watching. CleanMax, Amalfi stake acquisition is the reason for that. Hexaware, new offerings for Google Cloud. Very good notes on Hexaware as well, saying that they're way ahead of the pack in terms of AI adoption. Panesha Biotech, 41 crore supply. Reliance Power has an LOA from SJV. Okay, one more be quick, the other one. New Forex payment service, True Alt Biology, Wari Energies, First Source. All of these on our watch list this morning for various reasons. So you have quite a few to pick from if you're looking for ideas this morning. All right. We'll take a very short break, but we're looking at an interesting day. The implied open now surged to 140 points. What's working, what's not, and decoding the Bihar elections after this very short break.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band Jala will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you Varanasi.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
All right, the Battle of Bihar seems to be a slam dunk if you go by exit polls. Now, I'm going to start this piece with the regular caution that exit polls are not exact polls, they are indicative, and two very key exit polls are yet to be put out today. Having said that, from the 9 polls that were put out last evening after 6:30 p.m. when polling ended in the second phase in Bihar, this is the average of it. So the poll of poll, the NDTV poll of polls says the NDA is going to come back to power with even bigger mandate in Bihar, this time with 147 seats. The Mahagathbandhan, meanwhile, seems to have lost steam, and the Jan Swaraj party, which was Prashant Kishore's debut, seems to have fizzled out and not taken off at start. This is what the poll of polls is saying. Now, we'll go into the details of the exit polls, but it's actually astonishing because usually you at least have some outliers. Here, it's very clearly showing a sweep for the NDA. This is perhaps why you're seeing markets so excited. Now, what does this tell you? Exit polls are indicating an even bigger mandate for NDA. And this is also about Nitish Kumar. Make no mistake, he's been chief minister for about 20 years now. This election came at a time when there were talks of whether there were some health issues, whether there was cognitive issues, does he know what is happening? Well, the people of Bihar are very clear. They want him back one way or the other. And this is a clear mandate, not even a post-poll alliance that he needs to hobble together. Prashant Kishore's Jan Swaraj doesn't seem to have taken off at all. If at all, if these numbers do hold, one would say they've eaten into the Mahagathbandhan vote rather than the NDA. The Mahagathbandhan, of course, faces a major setback, question of whether that opposition alliance stays the course even at a national level. Record voter turnout is the other question. 67% voter turnout in Bihar. This time, women at the forefront of it. Has never happened before for several years actually that you've seen such a high voter turnout. Is usually a sign of anti-incumbency. In this case, seems to be a sign of pro-incumbency. Could also be because of the fact that the change in the electoral rolls and the cleanup of the electoral rolls because of SIR has ensured that a lot of people, duplicate voters were taken out, which automatically increases the voter percentage. So those could be some of the reasons. But I'm going to get in Amitabh Tiwari to give us more insight into what this means. And of course, markets already seeming to celebrate. Amitabh, you're seeing a 140-point gap up on the Nifty. And the only thing that we can put it down to maybe is what the exit polls are saying. Shayad bahana hai market ke liye. But in terms of Bihar and what you've seen here, wouldn't it be astonishing to see this kind of a mandate if the exit polls actually go through?
No, essentially one has to keep in mind that some of the top agencies and including VoteVibe are agencies, and I'm not saying that we are one of the top, is we have not released the data yet. So the data is going to be released today. That is number one. The turnout figures for male and female came only at around 9 p.m. yesterday. And as you have mentioned that the gap between the female and the male voters is around, or the turnout is around 9% this time. That's a huge number. However, that number officially was not available before that time. So this election is largely a hyper-local election with only one meta-narrative, or you can say a statewide theme, which is this Mahila Rozgar Yojana, in which around rupees 10,000 were transferred to 1.5 crore women, which is around 40% of the women electoral voter base. So that's a huge number. That's why perhaps we've seen an increase or surge in the votes cast by women. For the first time in Bihar, even the absolute votes cast by women is more than men. Not only the turnout, even the absolute votes cast is more than men. And we've seen historically that a higher women turnout has benefited Nitish Kumar specifically, and whichever party he has allied with in the past, be it the BJP in 2010 and 2020 or the RJD in 2015. So this is a number which will be keenly watched, and we'll have to wait and see how the results pan out and whether this high turnout really gives a big leg up to the NDA or not, like in other states.
Yeah, Amitabh, good morning. Alex here. I'm just wondering what your take is on the new entrant, Jan Swaraj. The tendency of new challengers is to eat into the share of others clearly if they are not runaway winners. The latter does not seem to be likely this time for them. I want your opinion on that. And are they more likely to have eaten into the share of the Mahagathbandhan or the other way around?
No, essentially Prashant Kishore has emerged as the CM face for people who have been voting for others and smaller parties in Bihar, and others and smaller parties have a very high vote share, around 20% plus in Bihar. So we'll have to wait and see whether which party Jan Swaraj has damaged more, because just like the LJP in 2020, it damaged more. It damaged both the NDA as well as the Mahagathbandhan. So on a net basis, it damaged NDA more by 8 seats in 2020. So this time around, if you see conceptually, yes, whatever votes Jan Swaraj is getting is largely helping NDA split the anti-incumbency vote or the opposition vote conceptually. And if you see the social composition of the Jan Swaraj voters, it's largely youth. Youth are disenchanted, and that is also an opportunity loss for Mahagathbandhan. But caste-wise, if you see, is also largely polling a large section of upper caste votes, which again could damage the NDA in some seats. So it's largely the role of a spoiler. In 83 seats, the victory margin in 2020 was less than equal to 5% votes. So if he polls more than 5% in those 83 seats, then he's likely to damage some or the other alliance, and only the results will show which alliance or party he has, or the Jan Suraj has damaged more. I think it will be damaging both, but on a net basis, we'll have to see which party or alliance is damaged more after the results.
Amitabh, you said at the beginning of your comments, and I want to welcome Mayuresh Joshi to this conversation as well, as we talk election and markets. He's Head of Research Market Smith India. Hi, good morning, Mayuresh. Just to follow up to what Amitabh was saying, you started by saying that, some agencies have not released their polling data. This polling data would not take into account all of phase 2, right? How much of a change do you expect once phase 2 is completely accounted for in the exit polls?
No, essentially what happens is that on the day of the last phase, people take samples up to 1 o'clock or 2 o'clock or 3 o'clock, depending upon the operations of that entity, and then do some kind of projection. Normally in the last phase, what happens is that a smaller percentage of seats go for polls. In this case, 50% of the seats have gone to polls in the last phase. So the weightage of the poll happening on the last day or the last phase is very high compared to other states, correct? So that's why I think some agencies and we've at VoteVibe consciously taken a decision that we would need more samples to arrive at certain conclusion. And we have been working by the night and probably will be releasing the data today.
Is there a potential, and Mayuresh, sorry to keep you waiting, just a follow-up, is there a potential that we're reading these exit polls too early and something might swing the other way? Or, I mean, of course, I'm just asking whether there's a possibility, in your opinion.
See, I mean, Bihar is a tricky state for pollsters. In 2015, everybody said NDA is winning. The Mahagathbandhan won a landslide. In 2020, the consensus was Mahagathbandhan is winning and the NDA emerged as the winner. So, of course, I mean, we will have to take the exit polls with a pinch of salt. They are not exact polls and things could go wrong between today and the results day. However, the overarching theme again is the Mahila Rozgar Yojana and the higher female turnout, and to what extent it has been able to neutralize the local level anti-incumbency against sitting MLAs of the NDA, and also to what extent this Mahila Rozgar Yojana is able to pull silent voters from the core vote block of the Mahagathbandhan, which is largely the Muslim Yadav females. If that happens, then I think, yes, it would be advantage NDA.
Mayuresh, I'm guessing investing for events is also, as normal investing, about a hypothesis that you build out and then test it whether it works or no, right? Into your mind, would this exit poll outcome as it has come out thus far pave the way for a sustained uptick? Would you ride that uptick?
Morning, Neeraj. No, I think based on the exit polls, you will see a sentimental uptake, that's for sure. But again, I think the markets would wait conclusively for November 14th and when the actual results are declared. Because I think in the recent past, you've probably seen most exit polls probably go wrong. And therefore, I think markets will take it with a pinch of salt, wait for the actual results on November 14th. And then probably, I think, one of the political overhangs probably gets over. But I think this is not a swing factor for a market. I think even if it goes the other way, you might have a sentimental downtick if it goes the other way. Yeah. But I think the markets will then revert back to mean in terms of core earnings, tariff resolutions, etc.
Mayuresh, having said that, the day of the first voter turnout and the high numbers in the first phase did spook the markets a bit. And you are seeing a gap up today. So what is it? Is it markets really looking for a reason, an excuse to rally? Or was there actually any big credence given to the Bihar election results?
So, morning, Tamanna. I think the markets probably were going a little bit tentative whenever a political event probably comes through. Yes, Bihar is an important state as far as the overall politics of the nation is concerned. But I think it is not a game changer for markets itself because strategically, I think decision making still remains with the center. And whatever I think the roles and responsibilities are happen out there. And therefore, I think this was something to do with how earnings will play out, and earnings have played out absolutely fine in Q2. I think there have been a lot of positive surprises as far as earnings are concerned. You're hearing of news yesterday of resolutions on the Trump tariffs as well. And add to that, I think if this turns out the way it is predicted, I think the markets will take it with both hands.
So it's just an add-on and an incremental factor to boost that bullish sentiment. Thank you so much, Amitabh, for joining us. You've burnt the midnight oil tabulating those numbers. But then, yeah, that's the fun of election season. Amitabh Tiwari there, pollster, political analyst, and has been speaking with us on elections for a while now. Mayuresh, of course, stays on. We introduce and welcome Somil Mehta, Head Alternate Research, Mirai Asset Share Khan, to talk about technicals this morning. Welcome. Somil, to you too. Let me start with where you're seeing the indices. A strong gap up there on the Nifty is being indicated. Closing session was good. Do you see that strength continuing? What's the Nifty and Bank Nifty outlook?
Good morning to everyone. Yes, absolutely. A great start after taking support at 40 daily moving average. 3 trading sessions back on last Friday. A sharp recovery from the 40 daily moving average. I think the next target here is 26,100, which is the previous swing high. And I'll be expecting this rally to continue. The medium term on the weekly charts, on the monthly charts, we are already having higher tops, higher bottom formations. So bias remains positive on in short term as well as in the medium term outlook. On the downside, I think that 25,300 will now become very, very crucial in the medium term outlook as well. And I'm not expecting markets to go below those levels. On Bank Nifty, again, it is outperforming on Friday's session, 20 daily moving average support, upward trend line support. That was a great sign, and I think the outperformance will continue here. Now the large caps, I'm expecting the large caps to participate better than the PSU banks. So the targets on the upside for Bank Nifty is around 58, 700, 800, and in the medium term outlook, I'll be expecting 60,000 for Bank Nifty.
All right. Let's talk about your individual stocks, though. Somil, what's looking interesting this morning?
As I said, private banks are looking great. Axis Bank is just taking support at the short-term averages, 20-40 daily moving average. A small flag pattern has formed on the daily charts. I think from here, Axis Bank could do really well in the medium term as well. In the short term, the stop loss would be 1195 and the target would be 1300. The second stock I'm chosen is from the IT side. It is LTIM. LTIM, very similar, has been in an uptrend, a very very slow uptrend in the medium term outlook, but in the daily charts, a small flag pattern has formed, and I'm expecting this to break on the upside. Great momentum. Stop loss would be 5,600 and target would be 5,950.
Mayuresh, a couple of earnings to talk about, and I say couple, but there are actually several more than just a couple. But out of the entire list, and quite a few that we've already marked, but what stood out to you? For me, Biocon, Gujarat Fluoro, Torrent Power, a couple of others, BSC as well. What was the strongest set according to you?
I think Torrent Power had a decent number that they reported, and therefore I think as we head into the next couple of years, where the large part of the expectations is that one of their untied units, if that probably goes through, I think the overall numbers will see a huge shift probably happening even on the base that they have created over the past few quarters. Obviously, I think the kind of business dynamics that they've got probably in terms of generation, in terms of transmission, as well as the distribution assets, I think that should work very well for them. With government initiatives, with expectations of the rollout that is expected to happen in terms of renewable targets as well, and the need for power, my own sense is that the untied portion that Torrent Power probably has at some point will go through, and if that probably happens, FY27 numbers will be a totally different ball game for Torrent Power. So I think Torrent Power is something that probably looks good.
Okay, and a bunch of others that we'll talk about as well, by the way. There is, as Alex said, a mix of Biocon, BSE, Thermax, Belrise, and a bunch of others. But it's 8:45, and that time of the show, when I note down everything that Somit Sarkar brings out in the dealing room chatter. Somit, good morning. What are you learning from all the calls that you've dialed?
Well, if you look at the markets, obviously it's expected to be a strong start, but what dealers are indicating is that 25,800 is the level that Nifty needs to hold needs to cross on a decisive basis. If it does not manage to cross that, then it could be a sell on rise market, is what dealers have indicated. But when it comes to stock-specific action, Trent is one counter that we need to focus on. A few days back, we did see a sharp drop in the share prices, but that was largely because of high selling that we had seen in the mutual fund desk. In fact, dealers have indicated that Motilal Oswal was one of the biggest mutual fund who had sold shares and is completely now out of Trent, and that was the biggest reason why we had seen this downtick, and that selling is largely over. So we could see a rebound when it comes to Trent from current levels. Voltas is another counter. There are sell flows on expectations of weak earnings that the company could report. So keep an eye out for Voltas in trade. The counter has been down for quite a long time now. So even if they report pretty much inline set of numbers, we could see a rebound from the current level. So Voltas is one counter that we need to watch out for. Then there is Oberoi Realty. There are buy flows on institutional desk. Both foreign and domestic institutions have been buying this counter, and delivery volumes are also on the higher side. So keep an eye out for Oberoi Realty as well.
Okay, thanks a lot for that, Somit. So some interesting names out there and some buy flows on some real estate names and defense names. That's the interesting piece, right? I mean, specifically Oberoi Realty as well. Somil, can I ask you if you have any thoughts on Oberoi Realty in particular and any of the other real estate stocks in general?
See, real estate stocks are looking good. DLF is looking good. Lodha is looking good. Oberoi Realty, very specifically, was having a little bit of selling pressure yesterday, but I'm expecting the stock to take support around 10 daily moving average. But right now, my pick would be Lodha. Lodha has been on the uptrend since last couple of weeks, and it is forming a small flag pattern. The stop loss would be around 1183, and the next target for Lodha would be 1328. So my top pick would be Lodha.
You know, I'm just wondering, Mayuresh, if you have seen what a Unicommerce has done and a BSE has done in terms of numbers, and if you have any view over there, especially capital marketplace and Unicommerce, I thought was interesting from the point of view of a demand play.
So not really looked at the Unicom numbers, but BSE again, Taman, I think is more a structural play over a longer period of time. Obviously, I think you've got your intermittent headwinds that have come through in terms of expiries. How will that play in terms of exchange volumes? The impact in terms of the overall transaction-based revenue as well, the annuity-based income that BSE also generates. But overall, I think as India probably matures into a more investing market, and that we've seen through monthly SIPs that have continued in spite of the consolidation seen over the past 1 year. I think the next few years, it's going to be different in terms of volumes. And therefore, I think all aspects of the BSE business, whether it comes to their Star MF platform, whether it comes to the core transaction volumes, when it comes to the annuity business, should probably grow at a steady compounded pace going forward. And therefore, I think it probably becomes a structural story. Same as the story with asset managers. The TER ratios that might get tweaked will have an impact, no two ways about it. But do they ultimately compensate that with volumes going forward and the kind of operations that they've been running for years? I think they've built in that operating efficiency to probably ensure that costs are probably covered, to cover those absolute EBITDA and EBITDA margin deliveries that is probably expected out of them. So I remain constructive on BSE, a few asset managers like HDFC.
All right, point noted. It is time now to talk about Transrail Lighting, and pull up the 1 week chart and you will see quite a considerable drop and then a little bit of a rebound towards the end. In trade yesterday, the stock was up as much as 3.7% after clarification that was sent out by the company to the exchanges about this whole World Bank ineligible list story. But there's also the earnings to talk about, and Anushi is joining in to tell you about some of that before we get the management in. Anushi, strong quarter in terms of execution and top line, but there was some pressure on the margins, correct?
Right. So what we are seeing is again execution in transmission and distribution has played out well for the company. Hence, we are looking at a more than a 43% or so of a growth in terms of whether top line is concerned. While if you look at the order inflows also, that has also remained on the stronger side. 66% is the kind of uptick that we are seeing for the quarter. Strong set of inflows is what we are seeing now. That target is about 9,000 crore plus of inflows. So how the second half would shape up is something that we should be watching out for as well. But the current book to bill, if we see based on the FY25 revenue, now that stands at about 2.8 times. So good revenue visibility is what we are seeing there as well. However, margins, as you correctly pointed out, there was some bit of pressure there, and this is on account of high subcontracting expenses. In fact, that was up over 3 times is what we are seeing compared to the last quarter. So what led to this particular spike is something that we should see. Apart from that, net debt stood at about 703 crore at the end of the quarter. So this is the overall picture that we have for Transrail right now.
Okay, Randeep Narang joining in. Thank you for that, Anushi. Randeep Narang is Managing Director and Chief Executive Officer of Transrail Lighting. Mr. Narang, the numbers look good, and I'm going to come to the numbers, but I'm going to start with this clarification because this literally seems to be a typo effect that has impacted your stock. The news was about Terrell, and I think Transrail Lighting got caught up in it. Am I understanding that correctly? That's what you've said in the clarification, that you have nothing to do with these World Bank orders and their debarment list?
Yes, ma'am, this is true. It is TARIL and we TLL. So this is transformers and rectifiers.
Yes.
And we have nothing to do with any kind of problem with World Bank. Yeah. So that was actually a misunderstanding, and we clarified that yesterday.
Yeah, but the fact that your stock dropped because the street suddenly jumped to this it says a lot about how the markets function at some time. Let me come to your numbers, and the numbers are looking strong all round. Margins still seeing a bit of pressure. I wouldn't say pressure flat, but slightly mildly down. Why do you think this has happened?
Ma'am, actually, if you see our guidance, what we spoke in first quarter, we said we'll be between 11.5% to 12% this year. And we are at a level of 11.9. So it's very much in the planned zone. What you see is a marginal dip over last year, quarter 2. That is because we had some high margin projects which got finished last year, and we have now finished 1 or 2 legacy projects. So therefore, there is a margin little drop versus last year. But if you see our H1 results, we are fairly much into the zone of 12%, 11.5 to 12 is what we said. So our margin guidance stands good for H1 and for the year.
I do want to ask about that top line growth though, Mr. Narang, and very good morning to you, Alex here. 40+% increase in the top line, and that seems to be on the back of strong execution. In that context, would you say that the full year guidance of 22 to 25% revenue growth is conservative?
Well, this question was asked in Q1 when we grew by 61%.
I remember asking it, sir. I'm asking it again.
So we are actually hopeful we'll do 25% plus. We are in that zone of H2 is always stronger than H1. So we are hopeful that we will beat our guidance of 25%.
Specifically on the margins, I know that you've clarified that this is within expected range, but it has been pointed out by my research team that the subcontracting expenses were 3.2x, which seems to have had some bearing on the margins. Why was there such an increase in the subcontracting cost?
So there have been almost 8 projects which we closed, and we were crashing these projects based on the customer timelines. Also, the revenue has grown by around 60%. So therefore, we have to actually execute faster and deliver. And that's a normal philosophy of execution cost, subcontractor cost going up, which is very much within our planned, let's say, revenue and cost plan. So we have nothing to worry about, and the margins are intact.
Mr. Narang, good morning. Neeraj here. There are a couple of research notes which spoke about two factors which I thought I should get clarification from you because it'll help your investors as well. Is unbilled revenue rising because of aggressive sales recognition, or you don't agree with the statement?
No, unbilled has risen because there are 2-3 projects where the billing happens based on milestones, and the milestone happens in a month or 2 months' time. So therefore, as you are growing your revenue, there will be marginal increase in the unbilled also, which gets handled in the quarter.
Believe that while that number is rising, it will come off over a period of the next 1 or 2 quarters to near normalcy.
Absolutely. Within the next quarter, you will see improvement. It keeps on building, and we keep on billing based on the unbilled done.
Got it. The other question, Mr. Narang, is this, and you explained to us in the past how your business model is slightly different from some of your peers, and which is why you enjoy these higher margins, etc. You've just responded to the answer on margins as well. I'm wondering if you have given a formal guidance for FY26 or a view for FY27 or 28, and do you stick to that view, or do you up that view or lower that view in any fashion?
No, we are actually very focused and stable. Our margin profiles in the orders we book.
Not just margin, sir. I mean overall. Yeah.
I know that. So it's not about the order booking also. So the guidance was 11.5 to 12%. We maintain that for this year, and we are quite confident that we will do the same next year.
But yeah, again, I'm just sorry, just one repeat question on that. So that's on the margin front, but beyond that, the revenue front and the volumes front, is there a formal guidance that you've given? Do you stick by that at the end of the first half? That's my question.
So we are, as we mentioned last time, we are looking at a 20% to 25% revenue growth going forward next year too. This year, again, as I mentioned, 23 to 25% plus. So we stand by our guidance, and we are comfortable to achieve that.
What about your export targets, sir, with what's happening in the US, etc.? Just first want to get a sense if there has been a pain point on that front, and are you revising your export targets, or those are on track?
Actually, we are not really big in US. In fact, we are very marginal or negligible. Our focus is principally Africa. We are into Southeast Asia and SAARC. And therefore, our guidance remains. Our international order book, as you see, will also grow based on the H2 numbers. So US does not impact us in any way.
Just want to ask about the net debt picture. Am I right in understanding that it could rise to 800 to 900 crore by the end of March 2026? If so, why is that, and what's the trajectory you're expecting?
See, we are at 703 crores right now. And if you see, we were at around 613 earlier, last quarter. So principally, this is the capex expansion we are doing for our factories for brownfield and a greenfield plant. And almost 80% of the expenditure has happened. So we see that not going to the manner you are mentioning, but it will be a marginal increase.
Okay, Mr. Narang, thank you so much for speaking with us today, coming on NDTV Profit and talking about your numbers. Numbers looked strong. You saw that bump up, and also the clarification of the difference between TLL and TARIL. Thank you so much for speaking with us.
Pleasure to be here.
Thank you, sir. We'll take a very short break. We're right back with the pre-open session. A lot of action expected today. Implied open showing a whopper of a start. What should you do in today's market? Stay tuned for all that and more when we return.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than
Welcome back. You're watching India Market Open. Quick look at the implied open. We're looking at a strong start of the day with 135 points up. In part, this is because of the exit polls that have come out from the Bihar election that is indicating a sweep and a very clear mandate for the Mahagathbandhan. Not for the Mahagathbandhan, for the NDA. And this was not what was expected. It was expected to be a tighter fight. Clearly it isn't. It's a pro-incumbency vote that has come in. First rates ticking in, and of course these will settle in just a few moments, so keep an eye on that. Meanwhile, Mayuresh Joshi joining in. Mayuresh, if you had to make a call on the next 3 or 4 sessions, would it be in part looking at the possible trade deal outcome? We seem like we're inching towards a trade deal with the US. So your textiles, your export-oriented stocks which have been hit, some of those, do you think that you would look at them favorably if that was a trade that you had to set up?
Eventually, yes. I think if this does turn out, I think all these sectors are beaten on Tamanna, and they will show you a huge bounce back, specifically textiles, specifically shrimp makers, specifically gems and jewelry players who operate out of the US. And therefore, I think if there is some positive traction that probably happens, most leadership stocks within this sectors will bounce back very, very smartly. For shrimp makers, I think the additional advantage that has probably come through the last few weeks is also that Australia has probably removed its restrictions. And therefore, I think if the US comes back, which is the main market for them as far as shrimp exports are concerned, I think they will have the dual benefit of more markets opening up and US reverting back to mean. So yeah, I think leadership stocks within this Avanti feed is obviously there, but leadership stocks in textiles, ICIL, Gokul Das might very well remain in focus.
Okay, the first rates and some soft names, maybe I start off with, so Jupiter Wagons, we know the execution looked wobbly, down about 3%. Thermax, the numbers didn't look all that great, and that stocks looks like starting off okay. C info from yesterday's result losers is looking soft. What's doing well? Well, the initial ticks suggest that Bharat Forge, despite the bout of underperformance ratings that have come in, but maybe because of the strong commentary is looking up, so 3.5. BSC, about a couple of percentage points. Torrent Power, which Mayuresh highlighted, about a couple of percentage points. Biocon, not too bad. And I wonder if Fortis Healthcare is only a Fortis Healthcare phenomenon, or are all hospital stocks looking okay? Because Global Health is looking okay. We should pull up Apollo Hospitals too and see if that is doing okay. Okay, Fortis is now coming off a bit. So these rates will keep on changing. But mind you, some names look like BSE, etc., look like starting off okay for themselves.
Even Global Health, because we talked about the hospital stocks, that might be one point that is working. Chandan Taparia joining in this morning. He's head technical and derivatives research at MOFSL. Chandan, very good morning to you. Let's start with your take on the indices. So far the implied not really revving up like what not the implied indicating a very strong start. We're seeing what the pre-open session is looking like. Do you think this is going to be a good day for the Nifty?
Good morning. Thanks for having me. I believe the declines could be bought. We have noticed in last 2-3 trading sessions that intraday volatility is visible, but supports are intact. And I believe the profit booking of last 2 weeks is now getting absorbed, and index has taken support at its 50-day exponential moving average. And the important part is 2 days back, Index is negated its lower top, lower bottom, and it took exactly supported the previous resistance zone. So some sort of role reversal kind of pattern is visible on the daily chart. And now the higher formation or higher base is taking the indices to higher level. So I believe till it holds above 25,550, index has again potential to head towards 26,000 marks. Talking about Bank Nifty index, here also declines are being bought, and I believe Bank Nifty is one of the strongest setup, which is also forming a pole and flag pattern, which has bullish implication, and a small follow-up could lead the Bank Nifty towards all-time high. So till it holds above 57,750, it can head towards its lifetime high of 58,577 and a rally towards 59,000 marks. So positive on both the indices, but looking out performance in the banking index as well.
And picks this morning, Chandan?
Yeah, so first trade will be buy on Mahindra and Mahindra. One of the strongest setup. In fact, the margin of safety with positive derivatives data indicate the bullish sense could be seen. In fact, we have seen build up of long position with put writing. So M&M could be in bullish stance. Already it has entered into lifetime high territory. So one can buy with support of 36.75. And this time this counter has potential to rally towards 3900 marks. Second trading idea, that is buy on BHEL. And this counter has seen a fantastic run up in last couple of days, has been making higher top, higher bottom. In fact, on monthly chart, the counter is completing a cup and handle pattern, which has a bullish stance from current zone. So one can also look at buying of BHEL with support of 278. And this time this counter can head towards 300 marks.
Okay. Interesting stocks to keep track of. Chandan, good morning to you. Big brokerage call of the day. Morgan Stanley and Jefferies as well as CLSA have hiked their target for Bharat Forge, and the stock is up about 0.8% after yesterday's bounce back from negative levels. Sharad, we were watching this take place in the newsroom and wondering what the trigger was, and we figured that it had to do with the outlook. What are these guys saying though?
Alex, you're correct. The internals were very strong for Bharat Forge and we saw strong up move coming in. But these foreign brokerages, they have given the significant target price hikes for the counter. Interestingly, Morgan Stanley has maintained equal weight rating, but the target price has been hiked from 1,050 to 1,341. That's a very big target price hike coming in, and they're very bullish on their non-auto business. Of course, there was weakness coming in the CV exports. Also, Jefferies, they're maintaining underperform, and the target price has been hiked from 950 to 1,050, and they have even raised the FY26 EPS numbers that range between 6%, but it's broadly in range with the estimates for the next 2 odd years. And CLSA, they have maintained underperform rating, and the target price a significant up move, more than 10%, coming in at 1,180 odd rupees, and the positive margin surprise is auguring well for the company. So overall, foreign brokerages are very bullish on this counter, and we might see up moves in this counter today as well.
Thanks for that, Sharad. Well, as the rates settling down, Bharat Forge is reasonably quiet, but talking of growth, as we said, for the second half. And you'll hear from the management at 9:40 a.m. on NDTV Profit, so you want to maybe tune in for that commentary. Stay tuned until that commentary is out of the way. Actually, stay tuned for the show. It's a packed show with some really good conversations coming up. But, Bharat Forge or auto ancillaries per se. Chandan, any trading ideas in any of the auto angs? There are 2 or 3. There is Balrampur, which has come out with numbers. Bharat Forge is there, and Bosch. A couple of others. Bosch as well. So anything out there in the auto ang space that you like?
Yeah, so I'll focus on Bharat Forge, and the way counter has been moving upwards clearly indicates now some momentum in the counter. In fact, on the weekly chart, it started to form higher tops, higher bottom, surpassed previous hurdle at 1360 marks. So I think Bharat Forge could be one name. In fact, a positive price pattern could kick it for a upside move. So one can buy with support of 1370. This time it can head towards 1444 kind of level. Apart from that, I believe one can focus on the counter like Minda. A strong price pattern, in fact, has been consolidating in a range from last couple of weeks. 2 days back, it witnessed a decent run up. After that, consolidation is visible. So I believe that could be bought with support of 1275. And Uno Minda can head towards 1350 kind of level. So Bharat Forge, Uno Minda could be on focus.
All right. Some of the winners. Chandan, I want your view on BSE. Good numbers, and Street seems to be rewarding it, at least if I look at the pre-open rate. One of the top gainers, about 5% up. Would you buy a BSE today, or would you sell if you're stuck in it?
Yes, Tamanna, I have very positive stance on most of the capital market theme, and BSE is one of our preferred pick from last couple of weeks, couple of days. In fact, we have positional target of 3,000 to 3,100 level. So I'll stay bullish for the counter, and I believe till it holds above 2600, it can head towards 3000 after the gap up opening. Use the support near 2700. Look for an upside target towards 2820, 2850 marks.
A couple of these chemical players, and it's a pretty broad space, but I'm looking at IOL chemicals, I'm looking at in the fluorochemicals or refrigerant space. We were talking about Gujarat Fluoro earlier in the day. IOL is up about 5%, quite a dramatic expansion in the margins during the quarter gone by. I'm just wondering, Mayuresh, this seems to be a bit of a trend where a lot of these companies are witnessing some of that margin pressure easing. In fact, they're seeing significant expansion. Is this now a turnaround for quite a few of these? Would you bet on any one of them?
I think, Alex, I think would love to ideally give it a quarter or more, because I think it still depends on how the global situations are playing out. And therefore, whether there is consistency in terms of reported numbers, specifically when it comes to realizations and the expectations in terms of margin performance as well, would really depend in terms of how Q3 plays out in terms of global events. So I think decent set. But again, I think Q3 will be a more defining quarter for most chemical players.
Well, list of stocks, and clearly at the end of 8 minutes, I mean, as we highlighted, BSE is doing very well. But I don't know if you spoke about this whole benefits from this medical tourism conversation and the possible visa on arrival for tourists from UK, US, etc. It's gotten some of these stocks active for sure, including a Max Health, Fortis, maybe Dr. Lal Pat, though not strictly within that, but never know, right? Even that could. Mayuresh, is that a big bump up for an already steady industry? Is that something that would induce you to look at investment opportunities in that space?
So I think, Neeraj, that would be a trigger, but I think it's not the only enabling factor for most hospital stocks, because even now you probably account for how much does medical tourism actually account for in terms of the overall revenue pie. It's not that significant for most hospital players. And therefore, it's an enabling factor as things become more easier in terms of processes. I think it will be one factor that can play out positively over a longer period of time. But the existing dynamics that play in favor of hospital stocks is still the underpenetration in terms of health services that comes through outside major metro cities, the sheer lack of medical support staff as well. And therefore, organized players, as they expand capacities to an asset-light mode, I think that creates efficiencies in terms of their balance sheet growth. And the technological advancements that they're probably bringing about also bring in efficiencies. Obviously, I think the rate tweaks that have probably happened as far as the tax incidences are concerned, with GST rationalization as well, that will abet part of earnings as well.
Sure.
So I think these are enablers for hospital stocks.
Okay, very, very quickly, big day for Tata Motors investors. The company's commercial vehicle business will list on the exchanges. Puneet is at the location, at the exchange actually, where the listing will take place. Very quickly, what is expected today, Puneet? What are the prices that we're looking at? Oh, we don't have the audio.
Oh, unfortunate.
Puneet, we can't hear you. But we'll try and fix that. Mayuresh, I wonder if you've looked at, this split, Tata Motors PV and now CV listing today as well. How are you looking at it?
No, positively, Taman, and the acquisition that they probably learned should probably aid on to and abet the kind of valuation that one can derive from an FY28 perspective. So I think a fair case assumption is anywhere between 280 rupees to 300 rupees. I think that's the range that the street is probably working with.
But then would you be buying into Tata Motors CV right now, considering the headwinds that JLR has been facing, and Tata Motors PV, of course, is plagued by that?
To a certain extent, yes. But Alex, there are some initial green shoots that are probably appearing specifically in the Indian context. And therefore, I think on the Indian front, the CV, specifically the MHCV and the extra heavy vehicle business, I think that should probably show signs of stability as well. The acquisition that they've probably done should start working out, as I said, from FY27. So I think there might be a couple of quarters where there might be still some headwinds being played out. But generally, I think if you draw out FY27, I think those numbers should start coming.
Okay. I'm just wondering, Torrent Power seems to be one of the big takeaways from the earnings front, but it's closed with 0.8% high in the pre-open. Chandan, anything that you would look at in terms of buying this on the charts?
In fact, we have seen positive price action in last few trading session, and the volume is also surging upwards. I believe positive move could continue with support of 13.15. It can head towards 1400 marks this time.
Okay, a minute left, so that's torrent power, and that is one thing. But Chandan, if I would push you for a 3-month call, if there is something that you would buy as a positional call, if not 3 months, then till the end of the year, is there anything that you are riding on the FLO side which you will be comfortable rolling over for 2 or 3 months?
Yeah, so I'll focus on one counter, that is BSE Bombay Stock Exchange. I believe here we are expecting the movement of 10 to 15%. Those who are looking for positional point of view can put the support of 2500. We are looking for an upside target towards 3400 to 3500 marks.
Wow. Okay. Well, Mayuresh, 15 seconds. Are you constructive BSE as well for 3500 or whatever, a bit 20% higher?
I discussed that earlier. BSE and HDFC AMC as well.
BSE and HDFC AMC as well. So there's a consensus, viewers, on BSE. The targets may be 3,000 to 3,500, what have you. Chandan is comfortable rolling it over for the next couple of series as well. He expects 10 to 15% in the next 2 or 3 series. Okay, here's how the markets are starting off this morning. 135 points in the green is a reaction to the exit polls, by the way. And we are not done with the results as yet. They come out on Friday. Nifty IT, yet again, 0.6%. I think it's had 2 or 3 very good days. So keep this one in mind. Bring up the mid cap and the small cap indices, 1/3% for the mid cap index. The small cap index, 1/3% as well. Let's get the heat map up on the screen, see what's moving and what's not. A lot of green, very little red, which is one good sign. Now what's moving? Max Health up 2.25%. Bajaj Finserv 1.5%. By the way, good strong brokerage notes on Bajaj Finserv. Some target upgrades that have come in by 2 or 3 of them. Eternal 1.2%. Bajaj Finance recovers a bit, 1% higher. Reliance 1% higher, so that is adding weight. TCS 1% higher, adding weight. And then ONGC, HDFC Life and Wipro to bring up the last. The quantum of red may be increasing a little bit, but nothing dramatic, actually not worth talking about. The biggest loser is JSW Steel, less than 0.5%. So the morning belongs to the gainers on a 0.5% day with some financials and some, well, only one healthcare name, but maybe at the broader markets, Tamana, there could be more.
I think healthcare will be a theme. Look at the India VIX. I think India VIX also something that is exciting this morning, 3.5% down. So this is a breather that the market has taken, because all said and done, Bihar does not have a huge outsized impact on the national government or the central government, but nevertheless the direction has been good. RIL now jumping up and adding some boost there. I want to pull up the Nifty contributors before we get to the broader markets. The implied open bang on this morning and telling you that there is strength there. RIL is the one pulling up the market right now. HDFC Bank. So heavyweights really coming through. On the lower side is the Sun Pharma HUL. This is a very, very strong market this morning, and you'll see that in the advanced decline ratio as well, as soon as we can pull that up. Meanwhile, let's also look at some of the broader market indices and what's happening. There you have it. Look, this is a good morning. 1700, 1688 on the advances and 717 on the declines as far as the NSE is concerned. So it's more than double over there. Let's pull up the mid cap and small cap indices as we look at what's boosting the strong start. About 0.5% up is great when the broader markets also participate. The small cap 250, a little muted relatively, but yeah, up in the green and nothing to complain at all. Let's pull up the sectoral indices and see what's firing. Is it all round? Nifty IT once again comes to the fore, but you can see this is a broad-based strong rally this morning to the markets. It's not just 1 or 2 sectors, because you have oil and gas also doing well, possibly because of RIL, mid-cap select, infra, a whole host of stocks that are doing well. Even in the losers, I mean, barely there. I think this could become a completely green screen very, very soon, with Nifty metals and Nifty FMCG also coming in. Could happen any second. So this is a good morning. Let's look at specific stocks and how they are actually panning out, because it's been a result-heavy day. Some of that action will also be seen. IFCI, Godrej Industries, just looking at those that have shown results, even as the Nifty climbs above the 25,008 mark, 25,800 mark comfortably. IFCI, good set of numbers. Godrej Industries not so great. We told you that. Biocon not looked at in the best possible light by the markets. Fortis Health Let's look at that. Let's look at PI Industries. PI Industries, poor set of numbers. Brokerages were positive, but the street doesn't think so. Bikaji Foods also quite negative at this point. Bharat Forge, just looking at Bharat Forge, the numbers came during market hours, but a whole host of notes on them, 0.5% down. BSE, clearly the winner of the morning, 5% up this morning. Thermax and Torrent Power, let's pull those up as well and see what's happening there, both down in the red. Thermax, completely understandable, and that was expected. Torrent Power also not doing too well. Just want to look at the Tata Group stocks. New inductees on the board that have come in. Not too much action, but big corporate story that we will be following here. Visa on arrival plan, has it helped? Max Healthcare, definitely. Global Health, Apollo, let's look at some of those counters. Well, all up in the green. So I would say today it's not about the individual stocks as much as it is the market sentiment. Quite unlike what we've been seeing for the last several days, guys.
Absolutely. But having said that, there are a few more stocks from the broader markets that are doing particularly well, and double-digit gains for Kirloskar Oil in the back of a 30% increase in the top line. Pull that up. The biggest gainer on the Nifty 500 at this point. Early minutes, I wonder if some money gets taken off the table at those higher levels. Interestingly, Syrma SGS is moving considerably higher today. Remember, the management spoke to Syrma SGS, not SGS Enterprises. Syrma SGS, which spoke to us yesterday, is the EMS player, and it's up about 6.4%. Remember, the management spoke to NDTV Profit exclusively yesterday and said in that conversation that FY28 revenue will be around the $1 billion mark, which implies a doubling of the revenue between FY25 and 28. Perhaps the market has watched that interview and taken note. Honasa Consumer, EID Parry, Awfis Financiers, all doing particularly well in trade today. And lesser losers than gainers, Gujarat Pipavav as well as Hind Copper losing ground from that broader market. Hind Copper losing about 2.7% after the stellar up move yesterday. But we were going to get you a word from Puneet, who's at the Bombay Stock Exchange, or the BSE, where the listing of the split entity of Tata Motors, that is the commercial vehicle business, will take place very shortly. Puneet, what are the numbers that you're anticipating? What is the level that could be looked at, particularly when the PV business is facing so many headwinds?
Well, thank you for that. Like rightly said, we're coming to you live from the BSE auditorium, and Chandrasekhar has actually just walked in as well in this particular event. So you will be seeing a lot of, commotion behind me, but largely what has been the key number is 1:1 bonus that's coming in from the Tata Motors side for the commercial vehicle arm. So if you own one share for passenger vehicle, you will get one share for the commercial vehicle business as well. And you can see all the dignitaries in the background as we pan to them as well. You have Shailesh Chandra there, you have Girish Wagh, who will be heading the commercial vehicle division as well in the background. But what's going to be interesting is the share price discovery as well for something like a commercial vehicle arm, because 660 was the pre-discovery price, 400 is the passenger vehicle price. So you are expecting roughly between 260 to 320 as the price you should be watching out for the commercial vehicle division. It also owns stakes in Tata Capital as well as Iveco, which is a global acquisition. So these are some of the key numbers that we'll be watching out for. But it's a historic day for the company, historic day for the shareholders as well.
Okay, all right. So I'm sure you're going to catch a lot of those dignitaries that you're seeing over there, Puneet, at the listing. So we have that ground report for you, and keep an eye on what Tata Motors CV business lists at. But it's result season, and we're talking about Awfis now. Strong Q2 performance with robust revenue growth, stable margins and improved occupancy. The company has also continued expanding its premium portfolio and focusing on strategic initiatives, including Awfis Transform. We're speaking now with Amit Ramani, Chairman and MD of Awfis Space Solutions, to talk about the future growth and what has helped as well. Mr. Ramani, thank you so much for speaking with us. Yeah, absolutely. Profits are hit, I think, because of exceptional items more than anything else. So let's just start off with that, because otherwise the numbers are looking good. Your margins are up, your EBITDA is up, your revenue is up. What was this exceptional item?
So we had a couple of write-offs in terms of a couple of centers that we closed, and this is the fixed assets that went into essentially the leasehold improvements. So when you end the lease, there is some still written down value. So that was about 3.5 crores. And then we gave ESOPs in July to our teammates, and because of that, there was another 2.5 odd crores. So roughly about exceptional items of somewhere around about 6 odd crores were the reason that the profit is a bit down. But otherwise, fairly strong EBITDA. We did year-on-year 44% growth in our EBITDA, about 28% growth in our revenue year-on-year. So I think clearly we headed in the right direction with the guidance that we have given for this year.
I want to speak about that guidance, Mr. Ramani. Revenue guidance of nearly 30%, and in the quarter gone by, you've hit 25.5%, which is lower than the run rate. But I'm just wondering, will the second half be better? And is that why you're saying that the revenue uptick in the full year is going to be along expected lines?
Absolutely. So we did for H1, we did about 702 crores. So if you look at our guidance on the 1200 odd crores that we did for FY25, this year we should be doing somewhere north of 1500. And with the first H1 performance of 702 crores, we are on track to do our 30% growth for FY26 as well.
Okay, you've exited the month at an occupancy of 74%, and I'm just wondering, the centers that you closed, that you mentioned, was that done in the quarter gone by, or was it done before, and did you take cognizance of it in the second quarter? And what is the overall capacity expansion that you've planned for the rest of the year, and therefore what is the guidance on occupancy?
So these centers were closed in H1, and some of them obviously were taken, some hit was taken in Q1, and some majority was taken in Q2. In terms of our guidance for the year, we are looking at adding 40,000 seats for this year. We have for H1 added about 14,000. Last year we had added, same year we had added about 13,000. So the last two quarters always have a larger uptick. And again, with some of the headwinds in the first H1 with tariffs and some uncertainties and so on, we were a bit cautious in terms of adding capacity. Clearly for H2, the capacity addition, if you look at our numbers today, we have 147,000 seats that are operational. With the LOIs and also our centers under fit out, we have a clear focus for 247 plus centers and 170,000 seats, which is the guidance is 175. So sitting in November, we feel confident that we will, meet that expectation of 175,000 seats.
Amit, is the street disappointed because the expectations around EBITDA would have been higher than what you have delivered? I mean, the stock is down 6-7%, right? And you're talking about maintaining guidance, you're talking about maintaining metrics per se. Is that the expectation is a bit higher, or are any of the ancillary businesses throwing up a surprise which the street did not expect?
Yeah, so clearly, I think the guidance for this year was, the margins that we are achieving around 36% of EBITDA. And clearly, if I look at on an IGAP basis, we were looking at about 14 to 14.5. And exactly that's what we're delivering. I really can't comment on the stock price. From our standpoint, at least in the H1 of 2026, FY26, we don't see any surprises. And again, from our standpoint, we stay, committed to what numbers we have given guidance for FY26.
What is the plan with Office Transform? I think this is something that you have elaborated in the con call, etc. as well, and to cater to retail and hospitality. What exactly is the strategy there? If you can just focus on that, Mr. Ramani.
So today, if you look at our complete business, about 25% of the business is the Office Transform business, right? I think it's gotten a sizable traction today in terms of being a business on its own. When we transfer this business into our wholly owned subsidiary, it will allow us to align all the leadership, all the focus areas, all the strategic investments, partnerships, all of those to ensure that clearly we can have a right focus. We believe that there is a great opportunity to create a strong brand in the design and build business, which has not been done till now ever in India. And we feel with this kind of a move, it will help us focus on this business holistically. In terms of today, our primary focus has been on essentially commercial spaces. with a renewed focus on third-party clients, we will expand into other avenues of retail, potentially in the future in hospitality, education, and so on. Because I think with the India growth story, all the verticals that we are looking at, I think, are continuing to grow. We currently only primarily do commercial, but that the focus is to expand that offering by moving this into a wholly owned subsidiary.
Quick last question, Amit. I'm just wondering if there are any other centers that you're closing that will have a bearing in the second half?
So when you have 250 odd centers, typically we analyze and figure out which centers we will continue, right? And for example, this past quarter, a couple of centers that got closed down were almost there for 10 years, did not fit in with our brand ethos, did not fit in with our current brand guidelines, did not fit in with the current quality of buildings that we are in today. And hence, from our standpoint, we continue to always look at some of the centers which we need to continue to exit. As far as the next quarter goes, I am not I'm not aware of any of the centers that we are looking to close, but continue to look at spaces where, we continue to improve our brand promise and continue to improve our quality of the workspace.
Well, one attributes this reaction, Amit, to the headline profit number downtick, despite the fact that you said that the normalized PBT would have been different. But I think the headline profit number and the valuations that you trade at. But all the best for the second half to you and your firm, and looking forward to talk to you again soon.
Thank you.
All right, that's Awfis Space Solutions. Management sticking to guidance, by the way, for the second half and for FY26. Thermax is the next company in focus that reported its quarterly numbers. Revenues were down for a second consecutive quarter, dragged by weakness in the industrial infrastructure segment. Ashish Bhandari, Managing Director and CEO at Thermax, joins in right now to talk about the numbers and the outlook ahead. Ashish calls a spade, and Ashish, I would love to know if the numbers that have come out for H1 as well as for Q2 are a bit more subdued than what you had penciled in, because I remember you told us 2 quarters back that don't expect magic in the near term. Now my question is this as per what you anticipated, or is this slightly tougher than an environment than what you had penciled in?
Neeraj, a very good morning to you and to all the viewers. I would say the numbers were actually better than what I expected. And I would like to share what's working well and what is one area that we can continue to improve on. First, if you just take the numbers and focus first on the orders side. I'll take that because that's what makes our backlog and shows what we can do in the future. Within the orders, you would see that our domestic order book for the first half of the year is up more than 20%, almost 25%. Last year, we had one very big international order that was 1,000 crores. And this year, we are tracking to that number, despite not having that 1,000 crore kind of a backfill. The second part is that last year, our Q3 and Q4 were weak, and not just weak, were much weaker than even our traditional run rate, because we were doing two things here. One, there were very specific kind of orders that we did not want to take. So that opportunity pipeline went away. And two, the market overall was slightly soft. This year, as we get into Q3 and Q4, we are bullish and maybe even slightly more than bullish, and confident enough to share that year on year, we will grow more than 20% on our order book. And then if you see in industrial products, which is the most profitable part of Thermax, this quarter we grew in high teens, and that growth rate we expect to continue for the rest of the year as well. So two things going on: mix improving, overall outlook lot more bullish on. Then if I take revenues, and then I'll come to PBT next. Revenues is largely driven by kind of our backlog not being as strong coming into this year, which is now changing. Our backlog is now getting stronger and stronger. And two, this particular year, even more so than last year, many of our customers had trouble at their project sites where they could not pick up material and inventory because the monsoons played havoc all across the country. A lot of that is in the rear view mirror. We are seeing good strength on execution now, and on revenue in Q3 and Q4, we'll see good pickup, which will then show up in good profitability as well. The one area that we continue to have to improve on is how we execute large multi-year projects, especially those that relate to work that we do for government. And that for the last 2 years has come down to a complete zero for us. But our backlog of what we have taken in the past is continuing to cause us pain. And that pain we are working through. Yeah, it's caused by...
What is the Ms. Bhandari, what is the time span of this pain continuing? You started your answer in a very interesting manner, saying you actually expected worse. So I want to ask you why. And when you're saying that you're seeing the impact of decisions taken in the past, or reasons in the past that continues with pain, till how long?
So we've got, and by the way, in this year's investor book, we are starting to share the backlog of these orders and then giving a sense of the timing by which this will get cleared. By the end of this year, a good chunk would be cleared, and by kind of third quarter, so a year from now, the rest of it will get cleared as well. But with each quarter, that pain is getting lesser and lesser. That said, this particular quarter, we had one specific surprise in relating to such a project where we have shown a negative cost impact of 43 crores, which is relating to one such project, which we had taken in calendar year 22. So we have been working through that. Where I say my numbers are better than expected is not actually on the profitability line, because this portion was indeed a surprise, was on the order book. Yeah, on the order book, I expected the recovery to show up in Q3 and Q4. It's starting to show up in Q2 already.
I'm just going to press in on that profitability number, if I can. The profitability and the margin number, when you say that it was a bit of a surprise. What are the factors that you think will then be reversed in second half? Because you are obviously more optimistic on the second half.
See, we always have, and last year's Q4 is a good example where we hit 3,000 crores and what it did to our profitability. And where our backlog is right now, we expect to do that Q3 and Q4 both. Yeah, our backlog now is such that we should be able to cross 3,000 crores consistently for a couple of quarters. And that should then result in the profitability. We don't expect any major negative surprises of the kind that we had in Q2. All large projects we have at least accounted for reasonably well. In our bio-CNG projects, we still carry a little bit of risk where Q4 is important, but the magnitude of that is potentially very small. And the new products and the new projects that we are undertaking, they're all in what I call as the green zone and the good zone, so to say.
So, a couple of questions, and good morning to you, sir. Alex here. I'm just asking about the margin impact on account of cost overruns in the industrial infra business and the chemical segment. Is this likely to continue in the second half? And two, you've pointed out that some of these legacy projects will end in FY26, heading to the third quarter, as I understand, of next year. So I'm just understanding what you expect the margin profile to be in FY27. Will it be materially higher than what we're seeing right now?
Yeah, I think it will be higher. We are, and you can see, yeah, we've been industrial products. We've been consistently sharing margin profile. We've been living up to that margin profile. Industrial products, also, industrial infra also. There's one, and because TBWES, which is a sub-part of industrial infra, it's publicly, we're sharing the financials of that segment separately as well. That portion has also crossed 10% profitability. We just have these overhang of projects which are at 0%. And with this particular quarter, one particular project at negative profitability. As we clear this backlog, I do expect our profitability profile overall to improve. Chemicals, because you asked a question specifically, chemicals we are priming for growth. Yeah, we have added significant capacity. We have entered newer areas. And today we are carrying about 15 crores of base cost a quarter, which is just capability that we have added for growing. And that growth, we need to show it happen. I've been talking about it for some time.
Right.
But you will see it coming through in Q3. Yes, Q3, Q4, you will see chemicals coming back, not coming back, starting to show growth in a meaningful manner.
Mr. Bhandari, forgive me for interrupting, and it's horrible on my part, but I do want to push you to give me a bit of a range for the margin. So if it's at 7% in the quarter gone by, and you're anticipating that at the end of the financial year, you will get rid of some of those legacy low margin products. FY27, what is the kind of range that you would anticipate for EBITDA margins?
Look, we crossed, last year we crossed 8% overall as a year, even though we had quite a bit of hits on a couple of products, with very easily, I think, crossing 9% and even getting into near visibility of 10% or even crossing that is definitely an expectation internally, and we need to show that externally in our numbers as well.
Okay. Thank you so much, Mr. Bhandari, for taking the time and speaking to us. Pleasure speaking with you, and wish you all the best for the second half of the year.
Yes.
Interesting primary market action right now. You have two simultaneous events taking place. One, you of course have N. Chandrasekharan speaking at the Bombay Stock Exchange for the Tata Motors listing. And then you just heard from Lalit Kechre of Grow. So talk about very, very old guard and very, very new economy companies that are both going to be available to investors just today. And, so now you have the co-founder, etc., speaking at the NSE, and you have Tata Motors there. Of course, the CV listing was something that was planned for a while. So you have the big behemoths and the new economy both vying for your attention.
Both facilitators
as investors.
in different form, right? Both facilitators in different form. On the one hand, you have goods being transported by commercial vehicles, and you have capital being deployed by Grow.
One presumes a company that does not facilitate anything should not be in business, generally speaking. But there you have it. So interesting times as far as it's concerned. Let's go across to Balrampur Chini. Pramod Patwari, the Chief Financial Officer, joining with us. We're back to back on earnings today and corporate conversations. We get you the voice of all the management. Mr. Patwari, thank you so much for your time to us here at NDTV. Absolute pleasure to have you on. Let me take, get your take on the numbers first when we start off. And what really comes to mind is a healthy improvement in margins for this quarter. It's looking good. The net profit number, though, is down. But if you look at every other parameter, it's pretty decent. So how do you break up those numbers and what you're seeing on the PAT number as well?
Good morning. On a standalone basis, the net profit numbers are better in comparison to last quarter.
Okay.
But on a consolidated basis, it is only down. So as far as the margins are concerned, this quarter, we got a power tariff revision, which accounted for almost 17.5 crores for the period beginning 1st of April 2024. So that we have accounted for in this quarter. That is also one of the reason. And sugar prices were in upwards of 40 rupees. That also helped.
Sir, I'm just looking forward, Mr. Patwari, and thinking about the second half, because I'm wondering what the implications for you specifically on the earnings side, on the financial side, will be of that center decision to allow 1.5 million tons of sugar export for the 25-26 sugar season that started from October. What is the implication on the price on the domestic side and on the international side, the rate that you're getting?
Yeah. So let me draw a sugar balance sheet for this matter. So we are beginning with a 5 million ton of sugar inventory at a country level. Expected production in our view will be 34.5 million ton at a gross level. We are expecting a diversion of around 3.5 million ton on account of ethanol on the basis of allocation which the sugar industry has got. This will result into 31 million ton of net sugar production and against a domestic demand of 28.5 million ton. So we would be adding 2.5 million ton to an opening inventory of 5 million ton. Against this, the government has allowed 1.5 million ton as an export. So the closing inventory expected by end of the silver season is around 6 million ton. Now, this is too much of inventory into the system. So when we move into the crushing season, peak of the crushing season, normally the sugar prices comes under pressure. Government has realized this, and on that basis, this year they came out with an export quota much earlier than the last year. Last year, government announced this quota in January. This year, they announced in November. Currently, the international prices are not that remunerative, but we have seen in the past also that after the closure of the Brazilian sugar season, we get an opportunity to export sugar in some form, maybe low quality white or at times refined sugar also. So we are hopeful that this decision will surely help in evacuation of the surplus inventory which is currently lying into the system, which would in the result help in arresting the domestic prices as well.
Okay.
Otherwise, on the basis of the amount of inventory what we are having,
Yes.
once we move into the sugar season, domestic prices can come under pressure.
Okay. So therefore, and thank you so much for that explanation. I think we got a sense for the rest of the sugar players as well. But for you, Mr. Patwari, you've seen an EBITDA improvement or margin improvement to the extent of 7.2%. I'm just wondering the dynamics that you've spoken about with regard to pricing and the fact that it could be under pressure in the domestic market in the second half, but there are benefits of starting sugar exports earlier. What is the implication for the margin in the second half?
So I would always request you to see the margin on a full year basis at a company level, not on a seasonal, not on a quarter to quarter basis, this being a seasonal industry. So if you see the Balrampur's performance in the last 5 years, on an average, we have delivered an EBITDA of around 680 odd crores. And during these 5 years, we have seen the ups and downs, both at the industry level as well as the company specific level, when we were badly hit by the red dot variety in 238. So that is my answer. I would not like to give any forward-looking statement as far as the margins are concerned, because we are awaiting certain policy announcements to happen. One is the ethanol price revision and some decision on the MSP.
What is the expectation from the ethanol price revision and MSP, Mr. Patwari? Can you give us both scenarios and how that works out for you?
In the last 3 years, including the current sugar season, we have seen an increase in the FRP to the extent of 16.5%, and against which we have not seen any revision in the ethanol prices. So I really don't know what number the government is considering, but we are hopeful that some revision will happen, and we expect the announcement on this front also. As far as the MSP is concerned, MSP was last revised in 2019. Currently, it is at 31 rupees. So we are selling sugar in UP at around 40 and a half rupees. Maharashtra is currently selling at around 37.5. So the best part of the MSP is if it gets revised, it raises the floor price. And during the peak of the crushing season, when the domestic prices comes under pressure, the ability of the sugar millers to borrow from the banks gets severely impaired. So if the MSP is set at a if MSP is set at a higher price, we get bank finance at the higher level, which helps in clearing the cane dues to the farmers.
True. Mr. Patwari, Neeraj here, good morning. The newer investments that you made in allied spaces, right? How are they shaping up? When do we start seeing fruitful results from those?
So as we have said in the past also, the project is on the track and we are expecting the commercial production sometimes in the month of October 26. So a year from here on. Project is on stream. We are not expecting any cost escalation or the time run. So it is doing very well.
Well, I foresee some very different conversations with you come October or the October, November, December quarter 2026 as this thing shapes up. But Mr. Patwari, for today, we'll leave it at that. Thank you so much for taking the time out and being with us, and all the best for the quarters ahead.
Thank you.
All right, that's Balrampur Chini. 0.5% higher. Can't give margin guidance, naturally so, but constructive. Okay, well, shareholders of BSE would be very happy whether the management was constructive or no. And why so? And why is it that the stock is showing a 5.5% uptick? Let's get in Sharad Dubey on that. Sharad.
A very positive surprise, Neeraj, coming for BSE. Interestingly, their important index volume options, that market share has gained really well against its competitor. The index option volume has given the revenue a very strong impetus. Revenues up 12% on a sequential basis, beating the street analyst estimates. Even the margins have actually been in a, we could say, on a flattish way, but the cost initiatives, cost saving saving initiatives have done really well. Interestingly, if you look at the transaction charges, they have increased. That's almost 57% on a year-on-year basis, and even sequentially it's up almost 8%. The index option market share, if you see 1 year ago, it was in the teens, and now it has expanded to almost 29% as per the latest data in October as well. So this has surprised the street, and even the change in the expiry dates has not actually affected negatively BSE, and actually it has gone on the positive side. So a lot of important strategic changes has helped BSE, come up with this very strong Q2 numbers.
All right, Sharad. And Sharad, I wonder if there are any brokerage notes which have come out currently which are talking about a higher price. Very quickly, 30 seconds.
Well, Nuvama has come out with its rating, but largely no big target price, because there has been an up move coming in the stock as well. But yes, most of the brokerages have maintained their ratings. Not a very big upgrade, because the stock has seen an up move, and especially the up move we see from 2200 to 2800 odd levels was on a faster basis.
Interesting. Thanks, Sharad, for that. An interesting contrast in that what NSE showed with the Q2 numbers versus what BSE done and has done for October.
Look at that margin correction or contraction that NSE had. I think a lot of people worried about BSE at that moment. But then BSE's numbers are looking solid.
Yeah, and I think their market share growth has also helped in certain segments more than anything else. But you have a whole host of numbers that are dominating, I think, the markets today. And markets going strong. I think you just quick check on the Nifty before we get to the Bharat Forge conversation. That's in focus as well. Bharat Forge doing all right. The brokerage is actually more excited than the street is right now. But as far as the Nifty is concerned, that's really good. 157 points up. But Bharat Forge in season and in flavor.
Yep. So let's take it to the management. Decent growth. And let's get in Amit Kalyani on the show to talk about what the numbers look like and the outlook ahead. Amit, great having you. Thanks for joining in. You had mentioned categorically on the call that exports will decline in H2. Should we expect, what, a 15-20% number there? And what are the reasons? Tariffs? Weak demand? What?
See, it's a combination of a lot of factors. One of the things that we are worried about is that, when something like tariffs kick in, the impact on the common man on his wallet takes 3 to 4 months. So we're just worried that what happens after that 3 to 4 months, that impact and the psychological impact. Plus you have Thanksgiving, you have Christmas, typically the high spending times of the year for the United States. If that sentiment gets affected, then there's, anything is possible. So I was just being a little cautious and, trying to see that we need to cross that period and see what happens. Obviously, I think even the government there with the shutdown and other things, they're all grappling with all these things and want to bring normalcy back. So hopefully, I think wiser council will prevail and things will start, clearing up. But unfortunately, anything that happens like this, it takes its own momentum. So it takes time to hit you and it takes time to clean up. Plus, typically, Q3 is the weakest quarter because of these holidays. So, I think it's always better to be cautious.
But because the situation is so fluid, Amit, can it happen that you are cautious, but the situation changes in Q4 even if you don't anticipate it?
Because anything can happen. The US economy is so large that if they, go from a negative mentality to a positive mentality, the flip can be quite large and the whip effect can be very dramatic. Just as the destocking hits you, the restocking can also hit you in the opposite direction. But you have to be pragmatic. You have to focus on your balance sheet. You have to focus on your other expenses. It's very important to control costs when volumes are going down, business is going down, in order to protect your profitability, protect your operations, and to build a moat. Can't let bad times affect your business. And that's when you have to look at new opportunities, look at new, products, new segments, and look at where we can double down as well. Because, at the end of the day, we need to deliver growth.
Okay. So since you're talking about new opportunities, what are these new opportunities? Can you talk about them?
we have seen that the biggest opportunity on a secular basis over the next 10, 15 years is going to be in India. So we are not going to defocus from global. Obviously, we are going to continue to focus on our global markets, customers, products. But while the growth in the global markets may be, 5, 10%, I think it's possible to grow in India at a significantly higher rate. And it's possible in India to look at growth opportunities in new areas. So that is where we are, focusing on looking at acquisitions, looking at expanding our product portfolio, and looking at doing new things in India, which fit in our core competence. So, our JS acquisition has proven to be, a good experience for us. That is now, on a growth path, and it's giving us a platform to grow in over a multi-year period and multi-sectoral opportunity. The second is our acquisition of the American Axles India business, which we now call K-Drive. So that's another growth platform that we have created, which will help us play the India opportunity for light commercial vehicles, intermediate commercial vehicles, and SUVs and the passenger car sector. So currently we're on the on-highway sector, and we also want to create an opportunity on the off-highway sector. So that is a Horizon 2 opportunity for us. So these are the kind of things that we will look at.
Okay, there is a contract for supplying artillery systems to the UAE. What's the nature of this contract? Is it a big one?
We have received an order to supply barrels to UAE, and this is our strategy to deliver MRO. So, this is a revenue procurement. This is not a capital procurement. So revenue procurement can be more steady. It can give you more of a steady annual business. So the more of this revenue business that we develop, the more certain your revenue can be. So you can have 40% revenue supplies, 60% capital supplies. So at least 40% is rock solid, and out of the 60%, there'll be something that is there every year.
What can investors expect over the next 12 to 18 months, Amit?
I would say next 12 to 18 to 24 months, we will have an overseas business that is profitable.
Which would mean Europe will improve, NA will not be so bad, all of the above?
We will do whatever it takes. So we have multiple options and we are looking at them. I don't think I can say more than that right now.
No, Amit, which is fine. Which is fine, Amit. But what does all of this mean for a Bharat Forge investor? I repeat, over the next 12 to 18 months from a consolidated piece, from a growth perspective.
A strong growth trajectory. I think from 26, 27, you should see a fairly strong growth trajectory. We have multiple growth drivers. We have multiple new businesses which will come into revenue generation mode, profit generation mode, and aggressive growth.
Okay, I think it's ended on the perfect tone. Amit Kalyani, thank you so much for joining in. What Amit Kalyani of Bharat Forge is saying is that there's going to be a strong growth trajectory, aggressive growth starting H2 well into FY27. So you heard it from the man, Bharat Forge. Yesterday the stock was up and about. Today the target prices have been hiked a little bit, but the stock is a bit soft. So I can say there's a lot of stocks which are anything but soft today. So look at Kirloskar Oil, that's now up 13.5% as we speak, trading at the high point of the day. There is a bounce back for transformers and rectifiers at 7% higher, 301. Bombay Stock Exchange continues to be, to my mind, the stock of the day, even though Kirloskar Oil Engines is up about 13%. And then there is APAR, there is Adani Enterprises. Actually, you could argue that from a large market cap moving higher, there is probably very few stocks which are trading this way. In fact, if we can get the Nifty 50 gainers and losers, I suspect Adani Enterprises would be outshining every other name. It's a big move. And I don't know if it is a confirmation of the rights issue. No, not the contributors. Can we just have the Nifty 50 gainers and losers, the heat map, because that will show you presumably that Adani Enterprises is right up there on the list of winners. And Tamanna, I wonder if, yes, it is Adani Enterprises, even though this doesn't show you, it is Adani Ent, but I wonder if this is the confirmation of the piece that the rights issue, promoters infusing capital at that price is leading to this.
And plus, there are very positive brokerage calls as well that have come in and helped out. I mean, what has happened in the markets in the last few minutes is, or the last 10-15 minutes is astonishing. You're seeing the Nifty auto chart, but if I pull up the Nifty intraday as well, you look at that sharp rise. The Nifty auto found a cliff and climbed up. So that really is moving. We look at the inputs of the constituents of the Nifty auto and see what has really pushed it up there. Remember, new entrant coming in the Tata Motors CV as well. But that's where you're seeing the excitement. Balkrishna Industries, Hero Motor, all of that jumping up sharply today. But even the Nifty intraday, pull up the Nifty intraday, because there's some smart moves coming in at this point that we have been seeing. And there you have it, above the 25,850 mark now. Very, very comfortably poised as far as the markets are concerned. So that's been interesting. I want to look at the advanced decline ratios just for a second before we get to some of the winners, because it's as if all things are coming together for the markets right now. Advanced decline ratios also looking robust. So you have a few factors that are working here. Of course, the exit polls from Bihar have helped, and that is showing a continuity, which is something that markets usually like. What a good day also for the two new listings. I want to pull up that split screen, if we can, of the Grow gang as well as the team from Tata Motors CV. This is just the most interesting visual. Here you have new economy and old economy coming together. There you have all of the kids clapping in advance as the team from Grow gets ready. And of course, N. Chandrasekharan and the Tata Motors team on the other side.
2, 1.
Child with the bell ringing in his ear. They should have positioned him better. There you have it. All right, that's not bad at all. Way above what the grey market price was talking about, to be honest. Maybe it's also a good day. That Billion Brains Garage, I hope they list it as Grow, because I'm going to fumble on Billion Brains Garage every time.
It's a cool name though.
It is, but you know, Billion Brains Garage, I think Grow is fine. So 18% up, and that's a good premium. 335 is the rate for Tata Motors CV, so great discoverability there. Value unlocking clearly as far as Tata Motors is concerned, and fantastic debut for Grow. Couldn't be at a better day when the BSE numbers have also come out, because you want to understand what capital markets is doing, and those numbers are showing that it's alive and healthy at this point. So okay, two newbies coming in, one not so new and one definitely new. You know, when the Grow listing was happening and the whole IPO was open, one very interesting exchange between Nitin Kamath of Zerodha and the Grow founder, where he came out and said that 20% of your applicants are Zerodha users. And Lalit Keshre, and best of luck, etc. And Lalit Keshre said, well, thank you so much. So I love that friendly banter between competing new age companies, because they are clearly competitors as well. Very short break. We're coming back with a lot more interviews with companies, listening to Concor on the other side, and we have a great market conversation for you. All of that when we return.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
we unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
Right, welcome back. Concor in focus, where revenue and net profit has seen an uptick and rail, freight and staff costs have seen a downtick. Before we get into that conversation with the management, let me bring in my colleague Jasmeet to set up that piece. Jasmeet, what have been the details of the numbers?
Well, right, thank you for that. If you look at the key takeaways from the result, we see revenue and the profits have moved up. While the segmental wise also we see a growth coming in from both the export-import segment as well as the domestic segment. If you look at the volumes, the export and import volumes are up nearly 9% this particular quarter, while domestic volumes are up 17%. And the overall volume for the company is nearly up 11% in this particular quarter. If we look at the revenue contribution, the export-import segment, the biggest segment of the company, has inched up by 3% in this particular quarter, while on the cost side, we see the rail cost and staff cost seeing a downtick. If you look at the key numbers, the revenue is up 2.9%, while the EBITDA shows a slight downtick, while margins have stayed almost at 24.5% versus 25.4%. We see a slight downtick in the margins coming up, but net profits are up 3.6%. We also have JP Morgan, a brokerage note coming up for Container Corp. What they see is they maintain the stance as neutral with the target price of ₹590. They see the revenue miss on their estimates, but they see a sharp recovery in export-import margins coming forward. While they also expect a slight upward tick in the consensus given the change in the numbers in this particular quarter.
Okay, Sanjay Swaroop joining in. He's Chairman and Managing Director at Container Corporation. Mr. Swaroop, thank you so much for your time to us here at NDTV Profit. Always a pleasure to have you on. I just want to talk about the revenue number for a second. It's seen an uptick of 3%, of course, driven by Exim, but the expectation of revenue number was a bit higher. Do you think that there has been a drag over there this quarter? How are you looking at it?
Good morning to you. Definitely, we had expected some more numbers in top line, but we had some subdued demand in domestic segment. Plus, in Exim segment also, there was a reduction in our lead by 2.5% because of less demand in North India ICDs. But we have recovered now, and we are in very good course to achieve the good numbers in this quarter and in fourth quarter also. Incidentally, the Q2 was the best ever for the company in terms of performance of total throughput. We achieved 1.44 million TEUs, which are ever highest in the company's history. And top line and PAT are also ever highest in company's history in a quarter. So that way it was a satisfying quarter for us, but we hope to do much better in the subsequent quarters.
That's true, sir, but for FY26 you have guided for a 30% domestic volume growth and 10% Exim volume growth. So far, like we said, Exim is meeting that guidance, domestic is not. So are you revising your FY26 guidance lower as a result of this?
Actually, I had given a forecast of 10% Exim, which we are achieving till now, and domestic we had achieved I had given a forecast of 20% guidance, and by end of Q2, for the first half, we have achieved 13% growth as against 20% guidance. But now we are quite confident that in the remaining 6 months of the FY, of which already 1 month has already over, we will be able to achieve 20% growth in domestic. The reason is that we are now going to get very good loading in bulk cement in tank containers. As I explained in my previous conference call also, because of the monsoon season, when demand of cement is less, we did not get that much loading that we were expecting. But now we have signed an agreement with Ultratech Cement. We have signed another agreement with Adani Cement also, who are the two major giants in cement sector. And they are quite bullish about their growth in various streams. And we are getting supply of tank containers. It was delayed a bit, but now we are going to get tank containers also. So we are confident that in the remaining half of the financial year, we will be able to meet 20% growth in domestic as given in my guidance at the start of financial year.
Good morning, Neeraj here. Just trying to clarify, when you meet 20% in the second half, but the first half is 13%, so console for FY26, it will be a number lower than 20%. Am I understanding it correctly?
No, actually for FY26, I had given guidance of 20% overall in domestic. But for first half, we are able to achieve only 13%. So we have to make good of that portion also. Plus, that means for the 6 months, we have to achieve more than 20%. And to achieve for FY 20%,
yes,
we have to achieve more than 20%.
Agreed, sir. And therefore, you are saying that you will do that. You will do more than 20% in the second half. So the year at large is 20%.
Yeah, exactly. We will do more than 20% to make good for the first half that we lost.
Got it.
Because cement is going to be a big pusher for the loading in domestic segment.
The other point, Mr. Swaroop, is always, one is volumes, the other is pricing and thereby the profitability. Now, the notes that have come out on your results after the Q2 numbers suggest that the profit after tax number was better than anticipated, and therefore there could be upsides to those estimates for the year at large. Now that you are confirming that volumes will be better than 20% for the second half on the domestic side, and Exim, you're maintaining guidance, could it be that the profit numbers for the second half are far better than what you've done in Q2 itself, per se, on a quarterly basis, I mean?
Yeah, actually, as I mentioned in my earlier calls also, we believe in maintaining the EBITDA of 24 to 25%, which we have been maintaining throughout without sacrificing anything on our margin front. At the same time, we are increasing our market share also, which is increasing at all the ports. So this will continue, and let me tell you, expenditure control is a focus area for the management, and that directly positively impacts the bottom line of the company. So we are focusing on expenditure control, like you must be seeing the very good reduction in the running of empty rakes and empty containers in domestic. In Exim, we have saved 18% in terms of empty running, and domestic we have saved around 7% for the first half of the financial year. This has positively impacted the bottom line. Secondly, there is a continuous growth in double stacking, which also results in positively impacting our margins. So in this first half, again, we have increased our double stacking by almost 7%, although base has become bigger now. So, and Nava Sheva coming on DFC, we will be further increasing the double stacking, which will have more positive impact on our margins.
Seeing the rail segment pair up, Mr. Swaroop, in the second half?
Sorry?
The railway segment.
Yeah, rail segment is going to see a very good growth in the second half also, because 95% of our transportation is through rail only. So we will see very good growth in rail segment.
Okay. I think interesting takeaway that cement dispatches are expected to increase because, that's a good parameter or indicator of how the economy is also going to go through. Thank you so much, Mr. Swaroop, for speaking with us. Always a pleasure. That's the management of Container Corp. And, while we're having that conversation, one large block deal has also been executed in the company. It's about 10 lakh shares. Seeing that slight spike in the stock price. Right, time for the big conversation this morning. Nitin Bhasin with us, Head Institutional Equities at Ambit. Nitin, great to have you on. Thank you so much for your time with us this morning, which is turning out to be a pretty good one. After a while, markets in good cheer. Do you put it down to the Bihar effect, closing in on a trade deal, or just the feeling and realization that corporate results and corporate performance has been maybe better than expected?
Good morning, Tamanna. Thanks for having me here on the show. Clearly, I think I would agree with the last point that you just made. Getting into the financial quarter results, we were also thinking that, how to look at the numbers, but perhaps what we saw is more beats than misses. Mid cap, small cap, large cap, and we see everywhere slightly better numbers in terms of beats, whether it is a 1% or whether it is a 3%. So hence, I would say corporate financial numbers is what is one thing. Number two, I would actually also follow it up with possible chances of a trade tariff reversals or reductions in the US. I think I would add those two things to the buoyancy today.
Not so much results. Okay. That was anyway, if there was a negative surprise, it would have had more impact than anything else. Let me come in a little more detail to you, Nitin, on the numbers part of it and the corporate action that we have seen, or at least corporate performance that we have seen. What, in your view, has been the big positive surprise and the biggest disappointment?
Without getting into the stocks, I think the biggest surprise for me was mid caps posting in closer to about, as a cohort, as an index, about 13 to 14% earnings growth for this particular quarter. At the same point in time, looking at the small caps also posting in about 11% to 12% sort of earnings growth for this quarter. I would think the mid cap and the small caps posting such reasonably double-digit PAT growth has been one of the biggest surprises for us. And alongside, what we have noticed is that the flows in India have perhaps changed the color also in terms of how the market participants, whether it is FIs or DIs, are loading up on or adding certain sectors like oil and gas. I think I would say from the earnings, as I said, the cohort has surprised. At the same point in time, the flows, we'll come to that little later, that has surprised. And I'll add last thing to this. In the last 1 month, getting into the festival season, all of us were glued on how the urban consumption would actually pan out. The urban consumption was better than expected in the festive season. So those last 1 month have been surprises for me.
Got it. Well, Nitin, good morning. Neeraj here. Did the commentary that you by and large heard about the immediate quarter ahead, particularly either from consumption or consumer financing or some such, lead you to believe that Q3 and Q4 have a high probability of a strong earnings growth? Because almost everybody seems to be telling us, rightly so, that GST is not just an immediacy effect. It will last for a bit longer.
Yeah, you can see that in the very recent times, the credit growth has finally inched up in excess of deposit growth. And even our bank's analyst believes that you could actually have the credit growth start looking up by the end of the year, closer to about 12% or so. So clearly it appears that whether it was consumption or credit coming back, and a lot of that is, again, remember, not wholesale lending or not the lending for let's say projects that much, but it's more like consumption or let's say retail loans. That clearly shows you that consumption is looking up, some green shoots visible more, or let's say acceleration in the improvement trends visible more than one could have said about 3 months back. That's how I would say. But the only thing I'll add over here is everything is not very similar, Neeraj. You saw the numbers for real estate, they looked good for this quarter, but the numbers for hotel industry, they didn't look that good for this particular quarter. Yeah. Hotels are looking up really well, but that's not what's happening. It was becoming a trend. So hence, I would say there are still inconsistencies in consumption. But one cannot say everything is firing in one direction. But if there were any worries about either stagnation or deceleration, I would put them behind today. So I would say slightly better.
You are sounding bullish, Nitin. Would it be fair to say? I mean, and again, I heard you say that you're more enthused by the broader market results. But could this plus a potential trade deal revival, Bihar elections, what have you, mean that the headline numbers or headline indices too, over the course of the next 6, 9, 12 months, stay anchored or move higher versus going lower?
You know, as market observers and also trying to make sense of the market, which is so difficult, I would still hold to my base view that 1 year back, we went into this cycle of fragmentation and concentration. You already seen about 12, 13 months of Nifty not generating any material returns, but also not losing money, whereas small cap and mid cap as a cohort of indices, which is not the best way to investing, but to watch the trends. We've seen that the large caps have held up. Companies like Reliance and SBI and the HDFCs giving you about mid-teen returns in the last 1 year as compared to many of the cohort of small cap and mid cap. That has been our call, and I still would maintain that call. Next 1 year, market can go sideways. It's a stock picker market. Large caps preferred over mid cap, whether it is small or mid. I would still maintain that. But in the near term, the next 1 or 2 months, because market also looks in the recent past for trends, we have noticed such trends of consumption, of whether it is the trade deal or whether it was urban consumption. And on top of that, even adding indicators like huge shorts built by the FIs in India, that clearly shows you when such big shorts are built up. We haven't seen, as per our team, the markets actually give away. So hence, and also I'll add last thing to this, Neeraj, is look at where the money is going. The domestics are putting in money in BFSI, so are the FIs. And domestics and FIs are also putting in money in oil and gas, large caps, where there is a valuation comfort and a large aggregate pool of profit.
Domestics are also putting in money, Nitin, in the primary market. As we wrap up this conversation, I'm tempted to ask your view there. A recent note by Ambit, a sell call actually on company before it listed, grabbed all of the headlines. But the overview on the primary market and the quality of issues that we're seeing right now, when we're in the middle of this debate on whether retail investors are helping early investors cash out.
I wouldn't disagree with that. I would say that some of these companies which are coming up for listing are promising companies for the future. But today, the valuations are primed up, very punchy, though they have moderated in the last 6 months. We've been writing about IPOs, that at the IPOs, companies are definitely getting priced punchier in the marketplace, but at the same point in time, we've seen some moderation, not getting into a single stock discussion.
When I'm not expecting a single stock discussion at all, Nitin. It's just the idea of is it because there's that amount of liquidity in the market, domestic investors coming in, even mutual funds looking at options to put out their money, where to put their money, that some of these IPOs are getting the kind of valuations or commanding the kind of valuations and oversubscription that they are.
No, I completely agree. I think we have written that and we have shared that before also, that in India, most of the flows which are coming with the mutual funds are all going into the primary market, whether it is QIPs or IPOs, or even sometimes the block sales by OFSs. So most of the money is going there. It's not going to the present cohorts, and hence you've seen the markets plateau out at the same time. But valuations have moderated, but definitely many of them are priced very punchy for possible valuation, possible business fundamentals that could play out over the next 5-7 years.
Priced very punchy. Okay, that's a nice way of saying expensive. Thank you so much, Nitin, for speaking with us, and always a pleasure to have you on India Market Open. All right, that's the Ambit view coming in. But before we wrap the show, big corporate development that we want to talk about at the Tata Trusts, the philanthropic arm that holds the bulk of Tata Sons shares, Neville Tata, son of Noel Tata, and Bhaskar Bhatt, the former Titan MD, have now been inducted into this board of the Sir Dorabji Tata Trust. These appointments come just weeks after the Maharashtra government's new ordinance that we reported on yesterday, which limits the number of life trustees on trust boards. It's a move that could have wider implications for Tata Trust governance structure. Let's bring in our corporate editor, Nisha Podar, for more on this.
It's a new era in Tata Trust with the new appointments coming in that was taken unanimously in terms of appointments in the November 11th monthly board meeting of Tata Trust. So the two new appointees are Nevel Tata, who's the son of Noel Tata, and Bhaskar Bhatt, an old-timer in Tata Group, the man who also led Titan for several years. So Bhaskar Bhatt as well as Nevel Tata are appointed in Tata Trust, especially in Sir Dorabji Tata Trust. So SDTT is where both Nevel as well as Bhaskar Bhatt have been inducted. Now also remember, and significant to note, that Venu Srinivasan, his renewal was done in October, and he has been reappointed in the Sir Dorabji Tata Trust SDTT, and he has also been given the vice chairman position. And there was a technicality that has been solved for in this particular board meeting by this reappointment of Venu Srinivasan by also terminating his renewal in October, and that is on account of the ordinance that has been passed by the Maharashtra government recently on public trusts, which limits the number of life trustees on any public trust. So having an impact on Tata Trust, where Venu Srinivasan was renewed as a life trustee, and this time his renewal and appointment is done for 3 years. So these are the big changes coming in Tata Trusts.
Clearly, this is a story which will continue to develop and we'll continue to have our eye on it. But I think the big story this morning is just the markets. The bulls have woken up and said, what's your favorite term, Neeraj? when markets are up? Mal lao.
But no, sorry, because I was on another train of thought. The other small subset within that, Tamanna, is just the kind of gains that the Adani Group stocks are seeing.
Yes.
Very, very strong moves today.
Yeah, big, strong moves there because of the rights issues. And we'll have a more detailed report on that ahead on NDTV Profit. But for now, from Neeraj, me and the team that put the show together, thank you so much for watching. Ask Profit comes up next.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money. through the masters who shaped them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Anushi Vakaria, and we'll take you through the next 1 hour of trade. This show is geared towards getting you answers to all of your stock-related questions. And to that end, there are two ways that you can get in touch with us. Either you can send us a message on the WhatsApp number on the top of the screen, or you can call us on the number at the bottom of the screen. But before we start your questions today, we'd like to talk to you about a company that has posted its results, Jupiter Wagons. And in fact, it is a company that a lot is determined on the financials with regard to what is happening in the railway space. So Anushi tracks the counter very closely. She's going to be speaking to the management. But before that, how do the numbers stack up to expectations, Anushi?
Right, Alex. So if we just take a year-on-year comparison, of course, we will see a dip in terms of where the revenue was concerned. This was, the impact of some supply chain issues which were there in the Indian railway business, which led to that shortfall in production that we've seen. It's a phenomenon that we've seen playing out in the last couple of quarters as well. So as a part of that, revenues are about at 22% of a downtick, while margins remained on the healthier side at 13%. They held up despite the revenue decline. But on a sequential side, now we're seeing a recovery in terms of where the production is concerned. So to just talk about all that is happening in this particular space and the company's outlook, we are joined in by Vivek Lohia, the Managing Director of Jupiter Wagons. Hello and welcome to the show, Mr. Lohia. Thank you so much for taking out the time. Just want to understand from you the second quarter results. Now, is the wheel set availability issue which was persisting over the last couple of quarters finally behind? How will H2 shape up, considering that the first two quarters we've seen the impact in terms of the shortage that was there earlier?
Good morning, Anushi. So I think you've summarized it very well, your outlook on the sector. The challenge was definitely on the wheel sets, especially in the first quarter, and which has eased out considerably in the last quarter. And going forward, I think the wheel set issue, I don't think will be a challenge for us. So the numbers will definitely be on the higher side, and we will try to make up as much as ground we can in future. And I think now on the private side, the order book remains to be very healthy, and we are continuing to build on the order book. We are waiting for the next big order from Indian Railways. So I think as and when that comes, that will give us a very strong, healthy order book position going forward.
Right. So, Mr. Loya, if you just take the production in picture, about 2,400 or so is what we saw in the first half of FY26. Of course, considering FY25, which was there, it was an 8,000 plus number that we've seen. So now with this issue largely behind, what's the kind of projection that we have for overall FY26? And more on this order book also, what's the kind of order book that you'll also see by the end of this fiscal?
In terms of projections, again, because the first quarter especially, which was a huge deficit for us, and everybody is aware of the supply chain issues. So we will try and make up as much as possible. Definitely to achieve last year's numbers would be very difficult because we had a huge washout in the first quarter. But we will try to definitely come as close as possible to those numbers. Again, to predict those numbers will be very difficult. We are ramping up our production capacities accordingly. In terms of future order books, we expect railways to, railway has been talking about, if you see their projections, they require close to about 50 to 60,000 cars to meet their targets in terms of their projections, in terms of revenue as well as their loading targets. So we expect those tenders to come out anytime by end of this year, beginning of next year. So as and when those tenders come out, I think the industry outlook will become very strong. All our other businesses, especially the wheel set business, the numbers have been trending very, very positively. Compared to last year, I think our growth in that business is more than 100%. Our margins are very healthy. Going forward, our plant, which is the integrated plant, which is coming up in Orissa, that is shaping out well. So I think once that plant comes
Mr. Loya,
online,
considering that the outlook for the wheel set business is there, with the Odisha expansion plans also underway, wherein you're targeting about 1,000 crore or so. Just want to understand the near-term picture. Considering that these headwinds were there, do you still maintain the 10 to 15% of revenue growth guidance, and and EBITDA also, would that be in the 14 to 15% of range?
So I think in the coming quarters, the EBITDA's numbers will become more healthier. As you can see that because of the kind of order books which we have, EBITDA numbers have not compared to the revenue decline, the EBITDA margins have been very steady. And definitely in the next 2 quarters, the EBITDA numbers will definitely go up. The revenue definitely, we will not be able to, this year for us to match the revenues would be a challenge. But for the next financial year, we expect the revenue numbers to be much stronger because again, one is the wheel set business will definitely play a very critical business, very critical role. Wagon numbers will definitely improve, and then all our other businesses also in terms of the brake business and the other businesses, those revenues also will start kicking in.
So, Mr. Loya, with the ramp up in the battery energy storage system, your electric mobility business as well, along with the wheel set, considering that FY26 was on the softer side, FY27 or 28, what would be the projection for growth be in terms of top line as well as margins?
FY28, we have mentioned that once our wheel set business comes fully online, we expect revenues there to be anything between 2,000 to 3,000 crores. So overall, our projections are about close to 7,000 to 8,000 crores of revenue by FY28. And definitely in terms of EBITDA margins, we are looking at somewhere close to 14 to 15% on a consolidated basis.
Thank you so much, Mr. Loya, for joining and sharing that outlook on the company. So that's Jupiter Wagons in focus. Wheel set availability, which was an issue before, is largely now behind. But with that, let's bring in the focus for the show and talk about the queries which are there. To talk to us all about that, Rajesh Agarwal, Head of Research of Eom Capital, along with Vaishali Parekh, Vice President, Technical Research of Prabhudas Liladhar, joins us on this show. So welcome to the show. First of all, let me take the first query, and the first query, if you're looking at, is from Suman, who's writing to us from Kolkata. It is about the Tata Motors passenger and commercial vehicle, which we just saw playing out an hour before on what was happening. Now he wants to understand whether he should sell Tata Motors and which one to sell specifically, the PV business or the commercial vehicle business that you're looking at. So let me take this with you, Rajesh. Rajesh, what is your view on this one?
Good morning, Arushi. Good morning, Alex. Good morning, Vaishali. As far as Tata Motors commercial vehicle business is concerned, we have expected a valuation of around 300, 310 odd rupees, and since it's trading at 330 odd rupees, I think the near-term targets have been already met. If somebody is having a short-term view, he wants to sell, then one can consider selling at these prices. Otherwise, for a long-term horizon, we are quite bullish on both the verticals, be it passenger vehicles or commercial vehicles. So long-term investors can continue to hold, but for a short-term investor, I think 330 odd rupees is quite a reasonable price to sell.
Okay, good morning, Rajesh, and good morning, Vaishali. Good to speak to you again. Raju is calling us from Mysuru. He's the first caller for the day, and I believe the question is on Tata Elxsi. Raju, is that right? And good morning to you. How can we help you today?
Hi, sir. Good morning, sir.
Good morning. Please go ahead.
Sir, Tata Elxsi in correct level in buying opportunity in short term 3 months, sir.
Okay, and what is the short term definition that you have? 1 month, 3 months, 6 months?
3 months.
3 months. All right. Let me go across to Vaishali on the charts then. It's up about 3% in trade today. Is 5430 good level to add?
Very good morning, Alex, Rajesh, and yes, I think from this morning we are seeing good pickup coming in Tata Elxsi, technically very well placed. I think it has made a triple bottom at around 5200 levels, and right now I think it's on its road to recovery. So keeping 5200 as your support level, I think you should hold on. The first target resistance comes at 6000 levels. If we see the stock sustaining above that, I think we are ready for another target of 6500. So for now, the range is 5200 to 6000. And either ways, we see further targets there.
Okay.
Okay, well, so that's the outlook that we are seeing on Tata Elxsi for now. But with that, the second question, if we are seeing, is regarding the overall power sector. The viewer wants to understand whether for a 1 year time frame, is there upside that we could see in some of these names. Now, we just recently saw a lot of these companies coming out with its results. That includes the likes of Torrent Power as well as Tata Power. So, Rajesh, let me take this up with you. What is your view on the space?
We are very bullish on the power sector as a whole, considering the fact that the power demand is constantly going up and the capacities are also being increased by some of the larger companies. The numbers have been pretty good. Somewhere the valuations are also good. Yesterday we have seen Torrent Power number coming that were fantastic to say the least. Some of the picks, if I have to choose in the entire sector, well, the first one would be Tata Power, of course, because of not only they are into conventional energy, but also on the renewable energy side. They're expanding very well, has a huge capacity in the private sector. The second one would be the largest power play that is in the country is NTPC. And the third one, of course, would be CESC because of its valuation, whereas the other company, it's trading at a huge discount to its peer group companies. And it has a strong balance sheet doing very well. So I think these are some of the picks which one can have a look at and have a time horizon of at least 12 to 18 months to get a decent return from current market price.
Okay. All right. So a number of stocks that you can look at. By the way, Torrent Power also something that you should keep on your radar. Wonder, it was down at the start of trade and it continues to be down about 3% or so. Any comments here or would you stay away?
Alex, I would say it's a buying opportunity because we have seen the kind of numbers it has shown. It's just what you say, sell on news kind of thing. So the results have been fantastic. It has run up quite a lot in the recent past. So maybe somebody considering to buy can buy at around 1250 odd rupees if it corrects to those levels.
All right. Yeah, it was a decent set of numbers to say the very least. Let's take our next caller. We've got Mohan calling us from Bengaluru. Mohan, very good morning to you. How can we help you today?
Just bought this S-Bank shares at the 225 at the rate of 185.
Okay.
So it is I purchased it almost 2.5 years back.
Okay. No, so you bought at, one sec, let me clarify. Have you bought at levels of 225 or did you buy at levels of 185?
No, number of shares bought is 185. I bought at 225.
Okay.
So I'm increasing a loss of around 37,000.
Yes.
So I expected that this will go, it's almost more than 3 years now.
What is the question, sir?
I just want to know whether I should hold it or whether I should sell it, or what is the view on this S-Bank shares.
Okay. And you don't intend to sell it, or if the advice is you can hold for the long term, is that right?
Well, I can hold it for the long term.
Okay, because Rajesh, the point may be that he might have to hold for the very long term if he wants to recover his buy price. Is that right?
I totally agree with you, Alex. It has to be very long period of time since the coin price is very high. But to add to that, I think the pain period is behind it. The numbers have been improving, and then the last few quarters we have seen asset quality is also improving. It's just a matter of time when it starts moving up. So I won't say that it will reach the gentleman's buying price, but yes, a decent upside from these levels is quite possible. And what I would say is, by any chance it corrects around 20 odd rupees, if he prefers, he can even add to his quantity so that the average price comes down.
Okay, so that's regarding Yes Bank that we are looking at. So that pertains to that. But coming to the next question, Mohit is writing to us from Ludhiana, and he has a question related to sale. He's bought about 500 shares at a price of around 104, and he's looking for a long-term outlook on this particular one, and that's for a 3-year period that we are seeing, currently making a profit of around 20,000. So Rajesh, let me come to you on this one. What is your view regarding this?
It's a huge capacity, I would say, the largest capacity in the country, doing very well. But the fact remains, it's a PSU, which has a whole lot of problems. I won't say that the sale is a bad company, but for a long-term horizon, like 3 years down the line, one can have a better stocks in the same sector. Maybe a Jindal Steel and Power or a JSW Steel would be a better choice.
Okay, all right. We've got our next caller. Gopi is calling us, and it's on a stock that I think might just have started a recovery. Can we pull up transformers and rectifiers? It is indeed back up about 6%. I remember dropped quite considerably on account of the World Bank debarment that was announced a couple of days back, and the stock took quite the plunge. And Gopi, very good morning to you, calling us from Tamil Nadu. Where in Tamil Nadu are you calling from, and how can we help you?
Hi, Alex.
Hi.
Hi, Alex. Good morning.
Where are you calling us from, Gopi?
I'm calling from Coimbatore.
Coimbatore, okay. All right, and how can we help you today?
Like yesterday, when TARL hit the lower circuit, I bought 1,000 shares. I just want to know, as it reaches bottom, because I saw Mr. Chansal's interview yesterday in NDTV.
Yes.
So everything is going to be perfect from next quarter. So margins, the revenue guidelines has been cut down, but still I see India's need for power is there for next 5 years, 10 years.
Right.
So have I bought it at the right level?
It's a good question, Gopi. Let me go across to Rajesh on this one. Rajesh, the management, as Gopi rightly pointed out, did speak to us in studio yesterday. They say that they are surprised and taken aback by the World Bank announcement on the debarment for those allegations of corruption. And they say that the implications for the business going forward are limited because they don't have international government contracts, and a large part of the business is domestic, India focused. So would you say that what Gopi did, which was to buy at the lower circuit yesterday, is a good strategy for the long term?
Yes, of course, I would say buy when there is blood on the streets. That's the carry. So he has done a very right thing. Normally investors, what they do is when it's falling, nobody buys. But this was the right strategy. And as Gopi said, that power demand is going to be there for the next 5-10 years. And I totally concur to that idea, which I have spoken just now to in our question on power stocks. So I think this was the right strategy going forward too. this company can give at least 15 to 18% kind of return in the next 1 year. The order book has got, yes, there were negative news, and I don't know how far that will pan out. But valuation at this point of time, I think, had discounted everything. So one can even add if it corrects for some more time.
Okay, so that is Tarrell for you. Do note that it's about 30% of a downtick is what we saw in the previous session, but some bit of recovery there on ground. But with that, let me go to the next caller, and it's Ramesh calling to us from Hyderabad. Hi Ramesh, how can we help you today?
Yeah, hi, good morning. So I have one query on the HFCL actually. I brought at 3,000 shares at 70 rupees. So this is my long-term view, and how about the sector-wise? I wanted to know about this HFCL also.
How long have you been holding this?
Yeah, I've been holding for 3 months only.
Okay. Let me go across to Rajesh then. Rajesh, your long-term view on the stock?
So we're not that kind of bullish on this stock. There have been news of some big corporate house that had a stake in that. Yesterday there were news of some mutual fund taking stake. But still, I think at these levels, these valuations, all the positives have been discounted. It's been prudent to book around 80, 82 odd rupees and reconsider when it falls. Otherwise, at 80, 82 odd rupees, I would say book profit.
All right, so that's the view on HFCL. You know what? You have the equity markets that have just nudged a little bit higher, and you have the Sensex that's trading with gains of about 0.5% or so. The Nifty 50 up about, actually no, 0.7% right now, keeping pace with the benchmark Nifty 50. You know what? Let's take a deeper dive into what the derivatives picture is telling you. Let's bring in Sharad to tell you whether the gains that you've seen in the very recent past are durable and whether they can be built on. Sharad, what are the signs pointing to?
Alex, the last three closing sessions were on the higher lows, and interestingly the 20-day EMA and DMA numbers which are there, that's actually going above. This is for Sensex as well as BankX, so this is a very important level. So overall the F&O markets, they are giving a bullish sentiment, and look at the Sensex heat map. Largely you see most of the stocks are in the green, especially aided by IT. Not so much reactions coming, but yes, some auto stocks are in pressure, but nevertheless majority of the BSE auto index is still in the green. Let's look at overall how the contracts have actually panned out. The open interest levels remain healthy, the markets, but overall a strong up move coming in. So the Sensex is at its day's high. Also a lot of action happening in the call segment also. If you look at these important numbers, let's move on to the BankX segment. Over here also we are seeing a significant up move coming in, a contribution being held by SBI, which is having a higher weightage in BankX. And if you look at the private banks also, we see HDFC Bank holding up. This is the second straight day we saw private banks holding up and strong longs developing, and IndusInd is also where important technical reversal is happening. Let's look at the contracts. Much more action coming in the call segment, and that is where we will be focusing at. But there are some stocks where our action is very high, especially with the long build-up happening. Adani Enterprises, of course, on the news flow of the rights issue. BSC, that's one of the top gainers in the F&O space. Short covering for Titagarh Rail and IndusInd Bank, which I had mentioned you earlier. Long unwinding, PI Industries, earnings impact being their reversals, and Hudco also in focus. Lastly, the short build-up stocks, very less, but nevertheless, Fortis Healthcare and Torrent Power make it to the list. But overall, in the derivatives market, the bullish sentiment is there both for Sensex as well as BankX.
Absolutely. You know what? But if I look at the constituents of the Sensex, Sharad, the top three gainers are in the IT space: Tech Mahindra, TCS, Infi. And it's a strong week so far for IT as a whole. The fourth gainer on the Sensex is in fact Adani Enterprises, or it was Adani Enterprises, now Adani Ports. But Adani Enterprises also up and about. Actually, I might be mistaken. Adani Enterprise is part of the Nifty 50. But having said that, 5% higher at this point, and this is on account of the rights issue that the company is going to do, and we'll tell you about the significance of that. Of course, 25,000 crore rights issue announced by the company. A large part of that is going to be bought into by the promoter family, and so that is something that is bolstering sentiment at this point. But we were talking about the internals of the Sensex, and Reliance Industries, another stock that is up and about today, about 1.2% higher, lending quite a bit of support to the benchmarks, about 1.3% higher in fact. But let's talk about Adani Enterprises and what the implications are of that mega rights issue, close to 25,000 crore rupees. the eligible dates about what you should bear in mind if you're an investor and how you can trade your entitlements, if at all. Somit joining in with the key breakdown. Somit, a lot of interest and a lot of participation by the promoter family as well.
A big rights issue that Adani Enterprises has announced, 24,930 odd crore rupees, and the contour of this rights detail is quite positive for any retail investor at this moment. If you look at, they're looking to raise close to 24,930. The record date has been set for November 17th, that is Monday. So the last day to buy the shares of Adani Enterprises to be eligible to participate in this rights issue would be November 14th, that is this Friday. Now the ratio for which this rights issue, they will be getting is they will get 3 rights issue shares for every 25 shares that they are holding in the company. And the pricing of the rights issue is at a discount of more than 25% compared to the current market price. It's at close to 1800 rupees. Now this rights issue will open on November 25th and will remain open till December 10th, and the day when the rights entitlement will be credited to the shareholders account will be November 18th. Now the company is looking to raise these funds to strengthen their balance sheet and to fund their capital expenditure plans going forward. So it's quite positive that the company will be utilizing these funds for growth purposes going forward. Now if you look at the sequence of events, if one is eligible for the rights issue, then the rights entitlement will be credited on November 18th, and the last day for any shareholder to sell this rights entitlement in the market would be December 5th. Rights entitlement is a temporary credit of shares, and investors can either choose to keep the rights entitlement and subscribe to the rights issue, or they can go ahead and sell this rights entitlement in the market. Now the estimated rights entitlement prices are at around 700 rupees per share. So what can us investor do at this moment? They can buy shares of Adani Enterprises, and for every 25 shares they'll get 3 rights entitlement shares which will be valued at close to 2100 rupees. So if they go ahead and even sell this rights entitlement in the open market, given the fact that there is a lot of investor interest and promoter has also committed to participate and to fully subscribe to this rights entitlement, there will be buyers for this entitlement in the market. And if they go ahead and sell, then this by selling this rights entitlement, it will translate into a dividend per share of close to 84 rupees per share, which is a big amount for any retail shareholder, and that's the reason we are seeing this kind of an interest coming in from the retail shareholders for Adani Enterprises shares. And also for any retail shareholder who chooses to keep the rights entitlement and subscribe to the rights issue, do remember that you do not have to pay the entire amount at one go. It will be done in parts and payments, so that payment structure is also quite favorable for any retail shareholder who is participating in Adani Enterprises rights issue.
Absolutely, and very cumulative summation of everything you need to bear in mind for the rights issue. Those dates on your screen are significant. Make sure that you pay attention to that. November 14th and November 17th. A big day for Tata Motors investors. The commercial vehicle arm has gotten listed today with a premium of 30%. Let's go across to Puneet, who's speaking with the management.
The first question largely on picking up from Mr. what N. Chandra highlighted, that in the past it's always the cash flow of the CV business that was used for the passenger vehicle business among others, so it's always been profitable. Now that that's behind you, what does it actually mean for the company going forward?
Absolutely. I think before I get exactly to your question, let me give some historic context. As you rightly said, it is an iconic company. Got listed way back in 55, and those days it was Tata Engineering and Locomotive Company Limited, and have a very proud feeling that since then the commercial vehicle business of Tata Motors has contributed to the economic development of the country's progress, especially in road transportation and infrastructure building. So that certainly gives a lot of sense of pride, and I think we are committed to the vision of Atmanirbhar and Viksit Bharat, right? I think today marks a very, very historic milestone where we actually list as a separate company. And with it, I would say that it will bring a lot of sharper strategic focus on the commercial vehicle value chain, the logistics value chain, and opportunities within it. I would say it will also strengthen our governance, for which the Tata Group is known. And finally, I think it will also empower us to actually explore more opportunities within the larger value chain of commercial vehicles.
Well, the second question largely in terms of what should investors expect as well, right? Because it's always been that in terms of when there's an upswing in the passenger vehicle side, the shares do very well. The CV business doesn't get the credit that it should have in the last many years, essentially at this point of time. So in terms of investors and what they should expect, are there any surprises that you're going to have in terms of what we could expect as investors going forward?
See, I think this demerger and separate listing actually also helps the investors. So, specifically value investors who are looking at robust free cash flows and good return on capital employed, I think a pure play commercial vehicle company that Tata Motors is and leader in the country becomes a very good opportunity. But beyond that, what I would say is, in the last few years, we have done some strategic shifts in the company, which have led or yielded some good results. So you would have seen a strong margin growth, very robust free cash flows, and very high return on capital employed. So I think, therefore, it gives a very good franchise to look at for the investors. In addition to this, we have also pivoted very decisively towards digital and sustainability, which we believe is going to be extremely important as we go ahead. And we have been investing, therefore, in technology towards these future frontiers. In addition to this, I would say that I think we have been looking at growing our downstream businesses, because downstream businesses, we believe, are more consistent and recurring revenue streams. They depend not so much on the industry volume that year, but more so on the park volume. And that will therefore also give more stability to the business through the cycles, because the industry is a bit cyclical. So I think we have now all strategies in place. We will continue with relentless focus on execution, and that I'm sure should give a very good opportunity for the investors.
Is the Iveco acquisition for the commercial vehicle business is what JLR did for the passenger vehicle side? Because you get access to powertrains, and that's something that you have been doing a lot of, fine tuning in the sense, to say the least. But this is a big one, to say the least. Is that the moment?
See, as you know, the Iveco transaction is still awaiting all regulatory approval, so I will not say much. But I must say that it's not only about access to powertrains. It is access to talent, it is access to markets, it is access to channel, right? And obviously, yes, access to technology. So the Iveco acquisition post-regulatory approvals, when it happens, it will place us number 4 globally in more than 6-ton vehicle segment, which is how the commercial vehicle segment is seen globally. And therefore, I think we get into the top bracket, and it will therefore also give us scale, synergy, and freedom to invest in future technologies.
The one key aspect that you mentioned also was in terms of cyclicality of the CV industries is actually quite diminished, if I can use that term, because the LCV business has been growing for all industry players, the leading ones including yourself. So the cyclicality that you used to see in terms of what we saw in 2018, we haven't seen that yet. And when the upswing comes, and in terms of your investment in defense, your investments in digital has helped. So will there be something very, very different that we see in the next 5 years now that you are separately listed? Is the expectations a lot different from what we've seen in the past?
See, one good thing certainly is that since FY22, the industry has either grown or remained flat, which in my view is good. The domestic industry. So while this has happened, what we've also done is we have grown our focus on the downstream businesses, international business, and therefore increase the pie of these businesses, which are more cyclical or non-cyclical, which will certainly help us if at all there is a down cycle which is coming. But I must also say that I think the rate at which Indian economy is growing, I think the commercial vehicles will continue to be the backbone of the economy and will therefore step up along with the economy, and therefore I am optimistic about the future of even Indian commercial vehicle industry. We will continue with our strategic focus on reducing the impact of cyclicality on our cash flows.
Just one last question from my side, and there's so much to talk about in the CV side, but there's defense and there's the EV bus segment. That's the other key vertical that you've been investing heavily over the last few years. We also have a new CSL tender that could come in. Are you expanding your bus build capacity now going forward as well? And in terms of defense also, now that it's a separate entity in terms of a more granular focus, what could we expect?
So let me take these two businesses separately. First of all, in Smart City, as you know, we won the first CSL tender. And since then, I think we have now deployed and operating more than 3,800 buses. We have more than 40 crore kilometers backed under the belt, right? So we have built sufficient experience now on how to run this business of own, operate, maintain.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the
But
not really.
And of course your tech stack and you took advantage.
So what I want to tell there is that it is not just COVID or one event, because it changed the way people think, and it's not going. I mean, our strong belief is that that change of thought is not going. So from here on, we see that the penetration should go. Really, it should continue. We don't need to have another COVID, and I mean, obviously,
now
we don't need that.
Yeah, now the stickiness is there. It's a way of our life.
Absolutely.
Now, regulatory overhang is one of the biggest risk factors, and the second one is obviously the market momentum, for which I will come to you later.
Sure.
But first, the F&O trading, and that has had an impact on your broking business. A large part of the broking business revenues were coming in from F&O trading. How do you see the impact? And also, very recently, government has come out with very positive statements where finance minister also said that we don't want to ban this segment, and even SEBI chairperson has said that we don't want to take any major decisions because huge investments are involved. Does it give comfort, and what are you expecting from the regulator, and how will it impact your business?
So first of all, regulation is not a risk in our business or in general capital market in the country. See, the way we see is that if people in India have to have access to capital market through whichever products, it's a derivative products or it's an investing products, it's a passive products like an ETF, we are the platform which is giving them access to the capital market, and regulators also want to do the same thing. We are also doing the same thing. They want to expand the market, we want to expand the market. They want to make it safe for the individual, for the retail investors, and that's, they're our customers. We want to make it safe so that they retain with us, so it sticks with it.
That is part and parcel of the business, but how is it impacting your performance and therefore the shareholder return is what I wanted to understand.
No, absolutely. See, we are in multiple, we offer multiple products on our platform, and each product has its own business model, its own pricing, its own revenue, and there is a penetration that works on a platform. Like if 100 customer comes, how many of the customers are doing stocks, how many are doing trading, how many are doing ETFs or mutual funds or different products. And each penetration will definitely change over time with the market conditions. It will change over the customers' conditions also, because they start their journey with one of the products and then they evolve, they get into different products. And the behavior of this, that's what the platform gives an advantage, because you don't need to do an SIP every single day. You don't need to, do trading every time. You can do investments and then you can buy stocks for long. So that whole platform gives a comfort to the customers to stay for long time.
All right, but going forward, regulatory risk is a big one for your sector. And the second one is the overall momentum of the market. Now, since your inception of the company, 9.5 years, we have been in a fairly bull market. You haven't seen the Lehman crisis. Now the globe is also getting into uncertainty with tariff situation. We have seen some dampening of sentiment. So the dependency on these two factors, how at your end you are safeguarding the business for value creation of such a large number of shareholders for being able to tide over different situations like these?
So I have seen those crises as an investor. I started investing in 2003, 2004, and I've seen some of those crises as an investor. But yes, definitely, we have had good years in the past, and on a longer term, I think we'll have good years as a country is growing, scaling. There will be for some quarters and some months where the market will go up and down. But as a business, see, what makes us resilient is the power of offering multiple products to millions of customers. So if you see that the markets are not very bullish and they are going downwards or sideways, you will see less people want to come in space, and there will be lesser new acquisition. But then you will see a lot of people who are existing are increasing wealth creation in their life, right? They are having more savings, so they participate even more. So the penetration, from a business point of view, the penetration amongst the existing customers goes up. So it balances out over time. I'm not saying that every month, every day is going to be exactly same, because we are in a capital market. We have to live with the fact that there's going to be movement, and this is part of it.
But in terms of other verticals of growth which are not heavily dependent on market momentum, how are you growing that, and what is the future potential of growth for the investors?
Yeah, so there are a lot of businesses, new businesses that we are, I think we've already talked about it.
Yes.
See, when customers graduate from how they started their investing, now a lot of our customers are becoming affluent, and their need of the products and the services are also evolving. A lot of them want portfolio management services, they're looking for alternate investments, they're looking for advisory in some form and factor, and a lot of products which are, so far have been for HNIs.
Yes.
And we are building wealth. I think we already spoken about it. Wealth is one big offering that we will be.
So Fisdom was
required.
Yes,
correct.
So Harsh, now wealth is not a digital first business so far in our traditional market. How are you going to crack that space with only digital approach? Because we have many big players in the wealth management business who have a very close network and relationship with big clients. So the competition is very stiff.
So we look at things in a very different way. So we don't think it from the supply or the manufacturer or the financial point of view. We see from a customer's point of view. Are our customers digital? If they are digital, they want services to be digital. They want the experience to be digital. If it is not done, then we'll do it. But then the idea is that we should understand what customer needs and how their behaviors are changing, and we should build our services and our offering accordingly. And that's been the way Grow has been built.
Right, and when we talk about your acquisition cost because of digital play, that is on the lower side. You are doing cross-selling, and how I understand your business is also that you are using the technology to cross-sell the right products to the right people given their customer behavior. Now when we look at this particular aspect, the cohort has been the new age first timers in the market, the ones who invest a lesser ticket size also. How are you going to increase and upscale yourself because into a much higher margin play and a much larger play than more of a volume play as we are seeing with your pan-India presence?
See, we think a little differently. We don't think like cross-sell or upsell or anything. We just think that, we have to give it access to people. So, yes, of course, there are customers who are doing smaller amount of investments, but then there are customers who are doing large amount of investments.
Right.
There are some customers who are doing maybe 1,000, 5,000 rupees SIP, but you will also see people who are doing a 30,000, 50,000 or a lakh rupees SIP also. So once you are a platform and you build on a tech infrastructure, we as a company, we as a platform doesn't need to differentiate or between a low versus a high, because it doesn't cost us to serve all the same. So our focus has always been, can we add more products to our portfolio? Like we were talking about, right? Recently we were working on commodities. We did not have it on our platform, and a lot of our customers started asking, can they have commodities on Grow? And then we started building, and it takes time for us to build because we want to build the best experience. And once we have it, there will be few customers who will use it. Not everyone would.
So which of your verticals, and you're working on several of the verticals right now, you have MTF, you have NBFC play, you have wealth business, commodity trading, and of course the main broking business and mutual funds. What is going to give you growth in terms of performance going forward in the next couple of years?
See, so part of our core business is again giving access to capital market, and that is been going on. We'll keep on adding more customers to it. There's a lot more penetration, as we spoke about just now, is pending. So that growth is far more left as what we have achieved so far. In addition, there will be few products that we'll keep on launching. You already talked about, there's a commodity margin trading funding we launched recently, that is growing, scaling.
Yes.
So there'll be a lot of these, and wealth offering, as we spoke about, that will also continue being our focus.
Which will be the big.
Okay, Grow listed at a significant premium, currently 24% higher than the issue price. Let us know in the comment section or on WhatsApp whether you managed to get allocation and whether you're holding on or whether you're booking out some of those listing gains. Rajesh Agarwal as well as Vaishali Parekh still with us. Guys, thanks so much for your patience, and indeed to our viewers who've been waiting by to get their questions answered. Thank you for your patience. We'll jump straight back into it. TTK Prestige is the name of the counter we're talking about, and Sunny is asking this question, writing in from Karnataka. Bought at levels of 683. Short to medium term outlook is being sought. Very close to the current market price, 664, but it's trading below the buy price. Vaishali, what's the view on the charts?
Well, so long-term consolidation in the stock. Keep a stop loss of 630, and once you see the stock moving above 700, you can expect a target of 750 to 800. So short-term view would be that.
Okay, so the next query is from Satish, who's writing to us from Bangalore. He has about 300 shares of Reliance Industries at price of 1,150. So flattish moves is what we are looking at, considering that. We just want to understand on the future growth prospects, whether he can continue to hold for a few years. Rajesh, your view?
It's a buy from our side if somebody is looking for a time horizon of few years. Short term, nobody can say because it's a high momentum stock in FNO and all those things. So there may be 10, 15 rupees up, 10, 15 rupees down. That's a different story. But all the divisions are doing well. OTC business has been doing well. The margins have been expanding. Lower crude price has been a very helpful thing. Retail, they have 19,000 plus odd stores. Jio, they are one of the major players in that. And the issue, as the management has said, that it would be there in the first half of 2026. Everything is positive, and these value unlocking would be a great value changer. I think it's a strong buy from our side. If not in a lump sum, one can go for SIP move.
Okay, SIP on RIL is being talked about. Of course, the stock is up about 18%. Quite a bit of those gains, in fact, over the last month and a half or so. Let's talk about Interglobe Aviation. And this is an interesting question coming in from Sagar. Rajesh, this is an interesting one because he's been holding from sub 1,000 levels. And so it's a 5-bagger, more than 5-bagger, close to 6-bagger for him. He's making gains of 2.8 crore. The question that he has is twofold. One, with the oversupply currently in the oil market globally and OPEC Plus adding to production, is it likely that crude oil prices will likely remain in that $60 to $65 per barrel mark, and because you have 40 to 50% of costs for an airline company in India coming from fuel, will that be a positive tailwind for the company? And two, what are the what implications of the long-haul flights to places like Europe or various other places where already there is stiff competition? Can Indigo benefit from that and add to its revenue and possibly its profit share as well?
See, taking one by one, I think crude price is going to languish in these range, unless of course some geopolitical tension, which are already there, flare-ups significantly. So I don't find any reason to believe that crude is going to move to 3 digits anytime soon. So unless that happens, I think the companies which are crude dependent are on a safe ground. As far as Interglobe is concerned, I think yes, they have a almost monopoly, I would say, if not monopoly, because they're the largest market share in the country and doing very well. And this crude price is going to help. Secondly, the kind of travel boom which we have been witnessing after COVID is helping the entire hospitality sector as a whole. And Interglobe being the largest player is doing well. Although the numbers have been subdued in this quarter, I think going forward the numbers will be good. The second part of the question was long-haul flights from for international stations. I think that is a tough one because there is a huge competition and the quality and other things of the international players are too good to match for Indigo at this point of time. So I think that would be a little negative on this in the short term, of course. But for a longer term horizon, that may turn out to be a positive. But at this point of time, I think one can continue to hold. If somebody wants to play on a safer side, like the gentleman is sitting on a huge profit, what he can do is sell a part of it so that his investments become zero and they can continue to hold.
Okay, so hold is what we'll continue to see for Interglobe Aviations. Once again, congratulations, Sagar, for that big profit that you're making. But the next caller that we have is Gautam, who's calling to us from Delhi. Hi, Gautam. How can we help you today?
Hi. Well, the question is regarding DAM Capital Advisors. Initially, I was allotted with an retail IPO lot in this. The price was around for 283, then the stock made it to a high of 450 or something, gave a stellar return. Then it started going down, and then I have raised a bit. Now my total count stands at 100 shares at the price of 280.
Right.
Now this quarter result was excellent at all metrics, but still the stock keeps going down. Now I'd like to know the long-term view on this.
Okay, let me go across to Rajesh on that note. Rajesh, it's just a 1 year period that we've seen since the stock has been listed. Since then, it's not done particularly well in terms of how the stock performance is concerned. But overall, if we look at the numbers that have been on the healthier side, what is your view regarding this?
Yeah, as far as the company is concerned, I think it's going to do well because the kind of flood of IPO, I would say, we are witnessing in our country is tremendous. Even in this week, there were 7 new IPOs. Every week, there are 7, 8, 10 IPOs. That's going to help companies like DAM Capital. So at least for the next 6 months or 2-3 quarters, I think the numbers are going to be good on the back of these. Otherwise, also the company is doing well. On the market cap front, it has not done anything in the recent past because of the high listing which it did when it got listed, and now it's consolidating at these pace. But for a long-term horizon, I think 280 would be a decent target to hold for the next 1 year.
Okay. All right. We've got our last call of the day. Kiran is calling us from Hyderabad. Kiran, thanks so much for calling. How can we help you today?
Good morning, sir.
Good morning.
So my query is regarding PG Electroplast. Sir.
Okay.
Sir, I have purchased 305 shares at 529 rupees.
Okay.
I would like to hold it for the short term, sir. So what sort of targets could I expect? Is it a good entry point or should I shift to some other stock with my query, sir?
3 months or 6 months or 9 months or 1 month?
3 months, sir.
3 months. Okay. Vaishali, on the charts then, 3 month view, 532 is the current market price, very close to the buy price. What would you do?
No, I would say the stock shows signs of recovery. So I would say keep a stop loss of 500 and let the stock move above 580 levels. That could give you a target of 650 to 700. So for now, it's a hold with a stop loss of 500.
Okay, all right, it is time now for the rapid fire round. This is where we try and fit as many questions as possible over the course of 2 minutes. The first one, 3 minutes. So we're taking 3-minute rapid fire. All right, let's do BHEL. Varalakshmi is asking about this. Bottom levels of 241. Short-term view is being sought. So Vaishali, on the charts, 286 is the current market price. Would you hold or sell?
Book profit at 292. That is the near-term Shaw's resistance.
Okay, next question is from Santosh. He's asking about Transrail Lighting, whether he should continue to hold for a long term. Rajesh, your view?
It's an ad from our side at this point of time.
Okay, Just Dial, bottom levels of 860 rupees. Would you hold on to this or would you sell? What's the views, Rajesh?
Book profit.
Okay, Pratap is asking regarding Baroque Engineering. He has about 165 shares at the levels of 638. Wants to understand whether he should continue to hold. Vaishali, your view?
So I would say hold for higher targets.
Okay, Finolex Industries posted numbers not too long back. Ashok Pai wants to know whether to buy for a period of 1 year. It is a bit of a turnaround. Finolex Industries. Rajesh, what's the view?
Buy.
Okay, Krishna Kumar has about 400 shares of Oswal Pumps at the price of 771. And if you let's just take the current price in picture, it's seen a bit of a dip is what we are looking at. Vaishali wants to understand your view of whether to hold or sell this one.
Sell.
Okay, Satvik Energy, bottom levels of 467. Do you have enough data for a short-term view, Vaishali? Naresh wants to know whether to hold or exit.
Sorry, I don't have this.
Oh, Rajesh, what's the view on Satvik Energy? Would you hold?
Exit.
Exit.
Okay, Vinod has 200 shares of Ease My Trip. The price is continually falling for this particular counter. Wants to understand whether he should sell this one. Rajesh, your view?
Exit.
Okay, Grow. If you've got an allotment in the IPO, Rajesh, would you book at 22-23% upside?
So I will book around 140.
Okay.
Okay, the next question is from Prakash. He has a query regarding Karnataka Bank. He's bought about 40 shares at the price of 179. Wants to understand whether he should add more or continue to hold for a long term. Rajesh, your view?
Add.
Natco Pharma at the current market price, if you hold for 6 months, does it make sense to buy? Vaishali on the charts, 809.
809, yes, I think continue holding.
Okay, Pradeep has 500 shares of Parag Milk Foods at the price of 220. Wants to understand whether he should book profit or continue to hold for a long term on this one. Rajesh, your view?
Book profit.
Hind Copper gained considerably yesterday but losing a little bit of ground today. Jaya wants to know if you bought at levels of 250 rupees, would you book profits right now? Vaishali, what's the view?
Hold for higher targets.
Okay, Krishna is holding shares of Acme Solar, which is down about 9%. Wants to understand the short-term outlook on this. Vaishali, your view?
Sorry, which stock? Acme.
Yeah.
Okay, Fortis Health, bought at levels of... Sorry. Okay, what is the view?
Acme Solar, I think hold with a stop loss of 245.
Okay, unfortunately, we don't have time for more questions, but we've tried to take as many as possible. Rajesh, Vaishali, thanks so much for taking the time. Always a pleasure speaking with you. And viewers, we had a lot of breaking news over the course of the last 1 hour, and so we couldn't fit as many questions that we would have liked to. But hopefully what we've discussed on the show has benefited you in any case. From Anushi and myself and the team that put the show together, thank you so much for watching. This is NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Hello and welcome to KYC. I am Sharad Dubey and with me is Varsha Chandani, and today this company which will be in focus in our special show KYC
is PTC India. This is actually a less tracked stock also amongst the analysts, but we at NDTV Profit will be tracking the stock. And of course the KYC, we get this company in, there are certain questions we need to ask, and of course the most important question is this: why are we getting this company? First of all, the reasons. Let's just see what we actually want to know, whether we had a discussions. So what will be the transition for the renewable energy space? That is something which we'll be looking out for. And of course the company itself deals in power trading. Varsha will be getting us more details, but let's move on to other reasons also why PTC India is in focus. Will the market coupling be beneficial? That's a very important trigger point because it is holding stake in exchanges as well. Now, will the power trading market deepen? That is something which is very important as an industry, as more and more power requirement is coming in. So power trading is something which we'll be looking out. From the last one is, what will be the synergies for the cross-border trade? Roughly it's around 17-18% of revenues right now, but will that go up? Our neighboring nations, they will be in focus. But Barsha, quite a technical company, and of course we scratched our brains on the company and the entire KYC show. But just give us to our viewers, what are the views about the company, what it actually does in market coupling? It's a very technical thing. So if you could just break it down for our viewers.
Sure. So let me start about what does this company do. So they are into power trading business basically, and they undertake long-term trading and short-term trading of power. They have achieved trading volumes of 82.75 billion units in FY25. And they also do cross-border trade with Nepal, Bhutan and Bangladesh. So I would say they're just a broker when it comes to power trading, and they also deal in long-term and short-term trading. Short-term trading normally, when there is surge in demand or when there is, short in supply, so they come up and do that short-term trading power. Now, talking about the revenue split, the solution for generator and utilities contribute almost 82% to the overall business. Cross-border trade have almost 18% contribution to the overall business, and rest is from consultancy and advisory services. Now, a lot has been in market about market coupling. Now, what does market coupling mean and how this is beneficial to companies like PTC India and negative for IEX, I would say. So what is market coupling first of all? So basically, what happens is market coupling fundamentally changes how electricity prices are determined on exchanges, on power exchanges. For example, each power exchanges act as an independent entity for price discovery in segments like day ahead market. Exchanges like IEX, HPX and PXIL run their own auction process. So they collect all buy and sell bids on their platform and use an internal algorithm to find a single price that clears the maximum volume of power. Now, because IEX historically, or rather IEX has a huge market share when it comes to over 90% in spot market, it offers highest liquidity. So price discovery is very easy when it comes to IEX because there are a lot of buyers and lot of sellers. So there's lot of liquidity, lot of volume, and price discovery is easier when it comes to IEX. And IEX because of that price discovery and lot of buyers and lot of sellers, there's a network effect, and IEX offers a very cheap price, I would say. So this liquidity acts as a magnet and ensuring the price discovery is often most referred and trusted. Now, because of market coupling, what will happen? A centralized market coupler like Grid Controller of India will run a common algorithm on the combined order book to determine one single price. So the price discovery which used to happen on IEX will no longer happen, and there will be a uniform single price discovery which will be determined by centralized market coupler. Now, why this is negative for IEX? Because this reduces IEX pricing power. That IEX was basically known for a price discovery mechanism. Now that no longer being there, this will impact IEX market share. Now, why this is positive for other exchanges? Because now the moat for IEX will no longer remain, and the volumes will shift to other exchanges like HPX, which is owned by PTC India also. So basically, in short, market coupling is beneficial when it comes to companies like PTC India, because they have a 22% stake in HPX, which is in power exchange. So overall, this is what PTC India does. So PTC India is nothing but a broker when it comes to power trading, long-term power and short-term power. The next growth driver for this, if market coupling happens, it's if market coupling happens, yes, company will be benefited. We need to just analyze how much market share will this company gain overall.
Well, that's a very pretty interesting take on that, Varsha. But coming back to our show, the format, there are 8 parameters where we'll be judging the entire company. Let me take you through all the parameters one by one. Income statement, balance sheet, cash flow, return ratios. We'll be judging them on the numbers. Also shareholding numbers, street cred, which is nothing but your stock tracker across various time periods. We'll take that into consideration, and of course the valuations and what the company's outlook is. Based on that, we will be giving our overall analysis. To start with, income statement is something which we'll be watching out for, and Varsha, the Q2 numbers are also out, right?
Yeah, exactly. So overall, if you see, the Q2 numbers are good. Talking about the first, let's see how the trend has been. So overall, if you see, the 3-year CAGR has been in -1%, but look at the net profit. Net profit has been the 3-year CAGR growth has been 21%. Now there are major 2 reasons for this. One is lower interest cost, and the other is lower tax have aided profits, and that's the reason you're seeing almost double-digit 21% CAGR growth in the last 3 years. Overall, if you see, the margins have been on the decreasing trend. So just on the margins, if I were to talk about in FY22, rather from 2020, if you see in 2020 the margins were 10%. Fast forward to 2022, came back to 9%, and now it is 7%. So we need to ask the management whether they'll come back to their 9 to 10% of margins, or 6 to 7% is a new normal when it comes to PTC India. And one of the reasons why you're seeing that negative EBITDA growth also. But overall, onto the Q2 numbers, overall a good set of numbers. The revenue growth was almost 12% year on year, EBITDA growth was 19%, and net profit growth was -5%. But overall, we would give a neutral rating to the company, considering the 3-year CAGR trend for the company.
Well, that's pretty interesting on that. Balance sheet, it's a very simple analysis. You see the cash bank balances, that's on the higher side, 3,274 odd crore rupees, and the borrowings number, look at that, significant reduction coming in when you see these 2 data points. So from my side, it will be a thumbs up for this rating.
Yeah, talking about cash flow, so overall a thumbs up when it comes to cash flow, because cash flow from operations, is pretty much at 2,132 crore, which is not that bad. From in FY24, it was almost 2,451 crore. So overall, CFO to PAT also, it's like 218%, and net cash flow stand at around 835 crore when it comes to FY25. So not an bad numbers per se. So that's the reason we have given a thumbs up when it comes to cash flow.
Well, that's pretty interesting on that front. Return ratios, there are some trends emerging. It's on the higher side, but the way the growth has happened, that is something which you'll be looking out for. The capital base increase is also there earlier, so there are some adjustments as well. Because of that, I have given a neutral rating for the ROCE numbers.
Talking about shareholding pattern, let's see what's happened there. So promoters share has been at 16%, which have not changed since March 24. FII's though is 29%, though there was a dip in March, 25 to 26%, but that has resumed back to 29%. So nothing negative there. Even DII stake has been at 7%. So that's the reason we have given a thumbs up. Nothing negative as of when it comes to shareholding pattern.
That's pretty interesting on that. Moving on to our second last rating parameter for KYC, the street cred. Not much returns coming for the shareholders in the short term. 1 month and 6 months, you just have a look. It's in single digit, be it positive or negative. For year-to-date basis, it has given 16% return to the shareholders. 1 year basis, the stock is flat. But on a long-term basis, it has been a multi-bagger, 226% returns coming in. So for the shareholders on the long-term basis, it is a good sign. But overall, last 1 year or so, the stock hasn't moved up much. And of course, that major overhang is something Varsha had mentioned, market coupling. This news flow is out already. It's almost 6 months, you could say. And that is why that overhang itself is also there for the stock for not going up. So it's a neutral rating coming from my side.
Talking about valuation, let's see the trailing PE for this company is at 6.5 times, and we have seen a lot of correction, corrects 50% from high, but still there are some uncertainties when it comes to market coupling and all those things, but overall nothing expensive when it comes from valuation. So that's the reason we have given a neutral rating considering 6.5x trailing PE.
That's pretty interesting on that. But our last but not the least, our rating is on the outlook front, PTC India. Of course, the first important thing is the market coupling news flow, which we have been stating all around our show. But the deeper development in the power trading, that is also something which I had spoken about. As in, when we see these markets deepen, more new products come, and more new products come, the ancillaries, they start benefiting. That is why you need to understand the main commentary of the company, and we'll be getting the guest shortly as well. Long-term PPS to renewable sector. That is something how the company is going for transitions, where will be the push coming in, and of course we know the government is pushing towards renewable sector as well. So these benefits would definitely kick in. Cross-border trade with Nepal, Bhutan and Bangladesh, we had discussed earlier, that's coming between 15 to 20% revenue contribution also, and that's pretty much important as well. And short-term market, introduction of this short-term market, basically this is power trading but on a smaller options contracts coming in. So that is something which you'll be watching out for. And lastly, of course, the green energy transition. So most of these factors are positive, but they are very far-fetched. Because of that, I have given just a neutral rating on that. But Varsha, let's revise the ratings once over for our audience, what actually this company has done and what we have given. Income statement, largely neutral, decent set. Balance sheet, we saw the borrowings, the cash, these are the two important factors. Cash flows has been good, as you had pointed out. Return ratios, not much, we have kept it neutral. And moving on, we see the shareholding pattern, the institutional participation coming in, a good thumbs up. Street cred, for long-term investors, yes, but short-term investors, no. Valuations, okay, correction is there of 50% from its highs, but there is an overhang in the stock, and that's the overhang in the outlook which we have mentioned. But overall, 5.5 out of 8 in the KYC ratings we have given, and it's largely on the higher end of the averages generally when we give to the KYC companies. Also, now let's decode this entire earnings, all the business outlook, and joining us is Manoj Kumar Jhawar. He's the CMD at PTC India. A very good afternoon to you, sir. And sir, first of all, the question remains is the entire market is asking is about market coupling. Your investments are there, and there might be a re-rating for the stock if this market coupling announcement comes in. First of all, if just to simplify it for our viewers, how will you be the beneficiary of this, and going ahead, any kind of numbers if you can give, any incremental if this happens in terms of market share?
There are two things. Number one, the market coupling is likely to benefit the other two exchanges beyond this traditional dominant stock exchange, power exchange, which is IEX. So the beneficiaries of the coupling are likely to become the HPX and the PXIL. Since we own almost 22% equity in the HPX, we will be an indirect beneficiary of this whatever benefit accrues to the HPX. That is one thing. Second thing, currently, since we are promoter of the HPX, we are not doing any trading on the HPX, but we are in discussions with the authorities. We have filed petitions before the concerned authorities to allow us trading on the HPX also. So should that happen, I think that will be, beneficial for the PTC itself. So these are the two things which I see happening. Now, market coupling has to be become a practice from January. So we are hoping and expecting that it will expand the trading markets and better volumes, as well as more share of the HPX is likely to benefit the PTC stock.
Understood. Hi, Mr. Jawar. This is Varsha this side. A pleasure to have you at NDTV Profit. I understand, sir, that monopoly is actually not good for the market. But considering the dominance presence of IEX, do you think the competition still has that technology advantage that you could actually have those technology capacities and technology advantage to go for trading when it comes to
100%,
HPX?
100%. There is absolutely no doubt about that. Number one, our technology partner is Bombay Stock Exchange, which is a proven stock exchange. And the technology front, all our clients, whosoever are trading with us, have got absolutely no problem whatsoever. Only thing is because of this networking effect in the DEM segment and in the RTM segment, all volumes traditionally go to the leading exchanges, and that is the situation all over the world, that where the buyers are, sellers would go, and where sellers are, buyers would go. So it is, a self-fulfilling cycle. Now, if there is a coupling, then the buy and sell side of the contract, anyone can place bid on any exchange, and the price will be discovered at a third neutral platform. So I see absolutely no reason that why this HPX technology would fail anyone. It is a good technology. It is a proven technology. I see no challenge on that front whatsoever.
Now, that's a pretty interesting take on HPX. That means you are ready to challenge the larger players also when it comes to the technology front. That's a very important.
Absolutely. There is absolutely no doubt about that.
That's a very important statement coming in from the management. But margins front, let's get back onto the numbers. And the street really wants to know, there has been a pressure in the margins coming in. Will this margin outlook, kind of bottom out going ahead, say in the next 8 to 12 odd months? And if yes, what would be the trigger, or what would be the key factors for this? Or will we see the margin pressure still sustaining until and unless this overhang of market coupling doesn't go away?
No, actually, this margin is not really dependent only upon the market coupling, which is a side development. Margins in the trading business, power trading business, are determined by many factors. One is the seasonal availability, demand, and supply dynamics. So you see, during the rainy season, there is a lot of hydropower available in the market for trading, and since those contracts are typically long-term contracts, so margins are usually very good in the long-term contracts, and if the volume coupled with the per unit margin gives a good return during the rainy season. But then this is a seasonality. So what I see is that margins shall remain stable, but volumes are likely to grow. Why I say that? Because overall, if you look at the power scenario of the country, the demand growth in the overall energy demand has not been that much, and that means there is an easier availability of power, and the rates of the power being traded are consistently a little bit lower than what they were 1 year earlier. For us, the absolute rate of the power does not matter. For us, the trading margin on that traded power matters. So for us, it has been a stable situation, and if the rates of the power are low, then we see that the volumes really go up. So for us, that is a good development, and that is why I see that in terms of per unit margin, it is likely to remain stable. And in terms of volumes growth, we see a good growth coming in, and we are likely to maintain that momentum.
Sir, actually what Sharad meant was, there was a time when you used to enjoy 9 to 10% of EBITDA margins, if I'm not wrong, back in 2021, 2022. So are you saying that this 7% is the new normal EBITDA margin that you're going to see for next, at least for medium term?
That was an aberration of the COVID period. If you understand, at that point of time, all the physical activity in the power trade markets was at an ebb, and we were largely a very big beneficiary of entire digitization of the power markets. But that was an aberration. If you see, then our growth is in the range of 7 to 9%, and I see that being maintained. That much I can say.
Understood. So 7 to 9% is the margin trajectory that you're seeing. Also, sir, if you could guide us when it comes to trading volumes, because I heard you saying that you're expecting a good spike in volume. So what is the trading volume growth expected for the rest of FY26 and FY27?
You see, the overall power demand in the country is likely to grow by 5 to 6% per annum. That is what I expect. And the short-term trading or overall trading market is likely to go a couple of points more than that. So that is what I would see. And since we are a dominant player in the trading space, a lot of that is likely to come to us. So I would say that anything more than 7%, 8%, I would be happy.
Well, that's a pretty interesting take on that front. But speaking of the cross-border electricity business, that is, we are having our neighboring nations, and almost 15 to 20% of revenue also comes from this segment. Give me in details, what's the growth outlook looking like for this? We have heard a lot of, energy agreements being announced as well in hydroelectric segment, and even some in thermal also when it comes to agreements. But what is your view and the growth outlook for this segment of your business?
There are three things, and basically there are three countries with whom we are having a power trading relationship: Nepal, Bhutan, and Bangladesh. If we take one, each one separately, so in the Bangladesh, we are currently utilizing our transmission corridor to the full. So there is, no potential of further growth of that market with the Bangladesh. We are currently supplying around 200 megawatts of the RTC power to the Bangladesh, and I do not see that going up. Beside other things, there is transmission congestion also. With Nepal and Bhutan, there is a tremendous potential to grow the trade, overall power trade. PTC would be a part of that journey also. Up till now, we have been largely importing the power from Bhutan and Nepal also. But now, during the winter season, when there is no hydro generation, we are into the business of supplying them power also. And I see that trend growing because there is a seasonality and there is a complementarity. So whenever opportunity arises, we sell them power. Whenever opportunity arises, we also import the power, and we are a dominant player in that market. So with Nepal and Bhutan, I see growth happening. Both the countries have got very big and ambitious plans about further development of their hydropower potential. So, but these projects do take a lot of time in commissioning. So I would not say that immediately you can see anything, but gradually the trajectory is very clear that these two countries are likely to grow their hydropower potential, and that means a lot of trade would increase with these two countries.
The renewables, sir, considering renewables forming a rising share when it comes to India's generation mix, are you exploring green certificates or carbon trading linked services to enhance the margins and your current contribution from renewables?
You see, renewables, whenever any energy is being sold, so there are two markets. One is the GDEM market and another is the DEM market. And whatever energy, we are trading a lot of that is green energy also. So that is one thing. Regarding this RE certificate, we are already deep into that market. We do provide these trading services to our clients, and right now I am not having the number, but that is a decent number that we already provide the RE trading, RE certificate trading services to our clients.
Pretty interesting take on that RE front, and your important views coming in, especially for the technological readiness which you have stated in our show against the largest player. Thank you very much, Mr. Manoj, for taking out your time and giving the views for PTC India and the growth outlook going ahead. But let's revise the entire show. What are the three important takeaways coming in? And Varsha, very big statement coming in KYC. Market coupling, HPX market share is expected to increase from 1st January. But another statement is very important, is that the company is technologically very strong for market coupling. And interestingly, BSC is the technology partner for the company as well. And overall, the volumes are likely to grow, but nothing much on margins. Margins are likely to be stable. That means from the historical numbers, it will be on the lower side. So this is very important statement coming for the company, and HPX, as we know, they are holding 22% stake in the company, and that is where most of our conversation was there in KYC. But we have got the gist of the entire conversation at KYC. That's all, folks. Thanks for tuning in to KYC only on NDTV Profit.
the NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank
I
you.
think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice.
9 exit polls predict a big win for NDA in the Bihar Assembly elections. NDTV's poll of polls expects the National Democratic Alliance to bag 147 out of 243 seats in the State Assembly and 90 seats for the Tejasvi Yadav-led Mahagathbandhan. And as polls suggest NDA majority in Bihar elections, market confidence turns positive. US-India trade deal closure nearing also aids the sentiment. Nifty charges towards 25,900 while Sensex jumps almost 700 points. IT pack continues to see strength for fourth straight day and banks also contribute to the gains. Adani stocks roar higher as Adani Enterprises announces nearly 25,000 crore rupees rights issue, offering 3 new shares for every 25 held, aiming to strengthen its balance sheet and fund capex. Major boost coming in for Indian hospital space as Commerce Minister Piyush Goyal says that government can consider visa on arrival for medical treatment. Fortis Max Health to benefit. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar and straight to the markets. Well, Nifty 50 has just about pierced that 25,900 level. First time in November. So it's showing good momentum and there are various factors really giving confidence back to the markets. Also contributing to this is Adani Enterprises with its rights issue. Reliance Industries, the big boy, is the top contributor. Apart from that, Bharti Airtel as well as M&M, TCS are the other big gainers. But if you really look at the sectoral performance, well, IT as well as auto, these two are the sectors and the pockets which have done considerably well. Let's talk about also some of the new listings, and Grow had a stellar listing on the bourses today and 22% higher from the issue price at the current moment. So that is really continuing with the gain that it got as the listing. But also a focus on Lenskart, just 2 days of its listing, finding it difficult to be in the green tick for today and down 1%, 411 odd bucks. So 402 was the issue price, so still above the issue price. All right, let's take it straight across to Max Financial Services, which posted a strong second quarter results driven by higher profitability and also product mix improvement. To discuss further on the numbers and the company's performance, Amrit Singh, who's the Director and Chief Financial Officer at Axis Max Life Insurance, joins us now. All right, let's take it straight. Amrit, a good set of numbers, strong performance, but to one strategic partnership that you announced just yesterday with IFC, worth about 285 crore rupees. Very quickly, if you can give us what it means for the company and how is it going to benefit?
Hi, good afternoon. I think you're referring to the debt raise that we did last quarter. We raised around 800 crores to support the solvency requirement of the company. And we were grateful to see IFC as a key anchor investor as part of that raise round. I think a cooperation with IFC beyond just the financial support on elements around holistically developing the business on the dimensions of ESG will come very helpful to us. And with this capital raise of 800 crores that we did, our solvency position at the end of the September month stands at 208%. So strong solvency position to support the future growth requirements of the company.
All right. So in H1 FY26, your ULIP share has come down to 34% from 42%. And the non-par went up to 26% from 24%. Where do you see the share of ULIP as well as this non-par, non-PAD by end of FY26?
So your observation is right. I think it was, first and foremost, we run a very balanced product mix. We have an ability to sell through all designs that are available in the insurance space, whether it is unit-linked designs, non-participating designs, participating designs, protection, annuity. Some bit of market-led, that the demand for ULIPs was a bit slower, and some bit of also intentional navigation for ensuring that the profitability of the company improves. These decisions were made. As we look forward, generally the second half has higher proportion of ULIPs as momentums build up. And also non-participating improvement that you saw was on the back of a successful launch of a product that we did in the first quarter, which has kind of that momentum has gone through. We do have some interesting products coming on the participating chassis as well, which will shift a little bit of mix towards those products. But broadly, we will remain range bound. At the margin, some improvements in mix will keep happening up, plus and minus.
All right, so that was about the product mix. The VNB margin improved to 25.5%. Is this sustainable for the present quarter and beyond?
We've been guiding at the start of the year itself that we had ended the last year at 24% margin, and we had guided that we will improve the margin profile of the company and inch towards more towards 25%. I think we're holding on to that guidance. In our heads internally, we think 25% is a good sustainable margin outcomes. Anything more, if we experience, we will be very keen to plow that back into the business to expand distribution so as to keep accelerating the growth trajectory that you're seeing. You must have seen that on the individual adjusted, which is a market league figure, we have grown 18%, much faster than the private market growth of 8%.
Right. And about the embedded value, that is up 15%, Amrit, YOY in the first half of this financial year. Now, what is the growth expectation for the second half of this fiscal?
So operating ROEV, which is a growth in operating embedded value, we do target an 18% kind of a growth range. So we do expect that operating ROEV should remain in that range of 18%.
Right. And let's talk about some of the other deliverables. What are the key highlights when we want to account and guide for this particular quarter's performance for your company?
I think I will reiterate that we are working towards ensuring that our sales growth remains faster than the market growth. Internally, we try to target 300 to 500 basis point faster growth than the market. But so far, we are actually more than double that growth momentum. We are expecting that on an AP basis, our growth should remain 16-17% levels. And on VNB, we are expecting to grow that more like 18 to 20% on the back of expanding VNB business for the full year.
Right. So now to the big merger and the various, changes that the company has gone through, Amrit, a few details on that. So you have expressed the intention of reverse merger of Max Financial with Max Life after Axis Bank completes its full acquisition. Now, as per the IRDAI regulations, there are restrictions. What is it that you're looking at? Is there a dispensation or is there a plan B? Give us a sense on that.
There is the regulatory and Department of Financial Services, Ministry of Finance actually has proposed certain amendments to Insurance Act, which actually paves path for such a collapse. So we are keenly watching for those insurance amendments to kind of go through in the upcoming winter session. We are hopeful once those are cleared, I think it will just set the path for collapse between both the companies.
Right. And also talking about the Axis Bank's, intention also to increase its stake in Max Life by another 10%. Now, any conversations on that? Any headway in that?
So, Axis Bank is currently holds around 19.02%, and has a right to add additional 0.98%. So up to 20% is what their intent is. Anything beyond this is a bit of market speculation and rumors, which we will not comment upon.
All right. And also, Amrit, how much is Axis Bank really contributing to your APE in the first half of this financial year? And do you also expect this share to be sustainable or come down or increase? What is the guidance on that?
Axis Bank is a very important distribution relationship for us and has been a relationship over 15 years with us. They contribute around 42% of the AP for the first half. Generally, in the second half, the momentum builds up at the bank. And we do expect that this 42% possibly will improve by a couple of basis points. And that's the expectation for the second half.
All right, Amrit, many takeaways coming in from this chat on the company's performance, as well as also how the merger process, as well as stake, and also the entire deal with Axis is going forward. Thank you so much, and congratulations on a good set of numbers.
Thank you.
Thank you.
Thank you for having me. Bye.
Thank you. All right, let's move on then to an important corporate development. It's a big development coming in the Tata Trust, the philanthropic arm that holds the majority of Tata Sons shares. Now, we know from the announcement coming in from Tata Trust in the board meet on November 11th, both Nivel Tata as well as Bhaskar Bhatt are the new members of Tata Trust. They have been inducted by a voting and unanimous process on Tata Trust. Now remember that Nivel Tata is the son of Noel Tata. Noel Tata chairs Tata Trusts, and Bhaskar Bhatt is an old Tata timer with Titan, is something that he built and was at the helm of for several years. All right, and Venu Srinivasan, let's look at that also. Because of the regulatory aspect and the ordinance coming in from the Maharashtra government on the public trusts, where the amendment suggested only 1/4 of the total trust composition can be life trustee. So Venu Srinivasan's life trusteeship has been now rectified into a 3-year term and has been reappointed in the board meeting yesterday. So it's a new wave and a new trust being built under Noel Tata's leadership at Tata Trusts. Moving on then, IndiGrid is in focus after the Q2 numbers, with revenue driven by the 2 project acquisitions last quarter. Harsh Shah, who's the managing director of IndiGrid, joins us to talk more about the numbers. Harsh, always a pleasure to welcome you on NDTV Profit. Now,
Same here.
Thank you. And how do you see the retail APE growing in the second half, given the GST revision that we have seen, Harsh?
So I think retail participation in terms of the investment has gone substantially up. Today we have sizable amount of increase in participation of retail shareholders in the books. I think if I look at since listing and now, there's at least 20-fold increase. And we are seeing at least over 50,000 unit holders today that is invested in IndiGrid. And across InvITs and REITs, if I count, it will cross 2 lakh investors. So that's a sizable amount of increase that we've seen in retail participation.
Also, Harsh, the solar collections have dropped to 89% versus the earlier 117% YOY. Is this a one-off, or do you expect this to be normalized going forward?
So it is very normalized right now. You can't have more than 100% collection, right? So last quarter was where people have paid excess, so this quarter is less. So you need the right number to look at. It's DSO, days sales outstanding, and that's in the range of 50 days, which is phenomenal for this sector. And over the last decade, this is the best time that we have seen where receivable cycles are very short and very predictable.
Right. And what about the 187 million rupees to reserves this quarter that have been added? What is the strategy behind maintaining this NDCF reserve?
So our goal is to ensure that unit holders get predictable DPU and growth. There are always quarter-on-quarter movement with respect to generation, with respect to collection, variety of things take place. So in some quarters we collect cash, in some quarter we have to use it. But investors receive a predictable, stable distribution yield is a focus. As we speak today, we are carrying about a quarter or 2 of extra distribution reserve with us, which will be around 6 rupees equivalent, around 500 to 600 crores, which is nothing but, I would say, cushion for us for any volatility comes in the market or collections or business. Unit holders will not have to worry about it because they'll continue to, they have this buffer available with them for any time receiving the distribution. We can also reinvest that in new projects and grow, that we're already doing it. So it allows us to balance the business and grow.
Right. And also, Harsh, now the Q2 revenue has grown just 2.6% when we compare it to the same period last year, while EBITDA dipped 1.1%. How do you see the growth picking up in H2? Also, the investors would like to know the path ahead.
Yeah. So we are not in a business where we go quarter on quarter. We grow when we acquire assets as well as we finish our development assets. So I think the revenue growth that you've seen is down on account of two reasons. One, we acquired few assets last year, but we'll see their full impact in this financial year. Second, we had a accident, or rather I would say a breakdown in one of the turbines in solar thermal project, and that's where we had a little bit of loss of revenue, which is covered by insurance, but that's something which reduced revenue and also had impact on EBITDA. And the third is we had a regulated tariff mechanism project where we had a true up of tariff that took place, which was factored in the budget and acquisition value. But that's a 1 quarter impact that we see. So to me, it's a transient impact that will go away. Going forward, we are executing almost 6,000 crores of projects in the pipeline. So over the next 2 years, as those projects come into line, we'll see predictable growth in revenue, EBITDA, as well as NDCF.
Also, your DPU, Harsh, has risen by about 6.7% to 4 rupees. What is now the guidance for the second half? Is this sustainable? What are we expecting for FY27 also?
Sure. So our strategy has been to increase DPU year on year. And as we acquire projects and grow, we increase DPU. We have done that over the last 10 years successfully, and we plan to do it longer period. The 4 rupees when we increased earlier this year as a run rate for FY26 is well on track. So we will hopefully finish the year with the same 16 rupees annual that we have guided the unit holders for. The growth for next year depends on how we acquire assets or how many projects we win. That's something which we have done a ritual of every year. We come and decide of the assets we acquired, how much extra NDCF we have created, and then we guide for the next year. But 4 rupees when we went to a 4 rupees a quarter or 16 rupees a year, it is for foreseeable future will continue. So the decision in FY27 is going to be whether we are going to increase 4 rupees to a next number or not whether 4 rupees will be there or not. So 4 rupees will continue to happen in FY27 as well.
Right, so 4 rupees will continue in FY27 as well. Harsh, always a pleasure speaking to you. Thanks so much for joining us on NDTV Profit.
Thank you.
All right, let's take it ahead and focus on Bikaji is in focus because the company has announced its Q2 numbers with a category performance which is mixed. We are now joined by Manoj Verma, who's the CEO, and Rishabh Jain, CFO at Bikaji Foods International. Thank you so much, gentlemen, for joining us right here on NDTV Profit. Now, starting with Rishabh. Rishabh, the EBITDA margins expanded to 13.7%. How sustainable are these margins?
EBITDA profile in last 5 quarters this is the highest ever in second quarter of this year, and our gross margin is at 35%, and our EBITDA is close to 15.4% with PLI of course. But yeah, overall from both lens we have done multiple things like investing in people, investing in right set of process, be it long-term purchase, hedging off few products, which has given good result this year. So overall what we see that this gross margin EBITDA profile is important for us overall, and next 2 quarters also we see the same momentum coming in and gross margin level. And this quarter, in second quarter, sweets offtake has been very good, and sweets is good on EBITDA and margin profile, and this helped us in maintaining good margin.
Right. When we look at the volume growth, that is hit a 4-quarter high at 10.8% as well. Now, how sustainable is this momentum, especially given the post the GST related destocking impact for the company?
So, post GST impact, so what happened is this adversely impacted quarter 3 because there was resistance from the trade in terms of buying, because it was written on the wall that the prices are going to come down. So be it a small retailer or a large retailer, distributor or a super distributor. So that's where was the hit now, which should positively impact quarter 3 and going forward on the back of consumption, so which is a relief in the price to the consumer. So that's how we look at it. The volume growth that we look at, yes, we are pretty confident that we should be on a double-digit volume growth going forward.
Right, but Manoj, post the GST rate cut, what has been the consumer response been like, and has it had its impact on the consumer demand? Has it picked up?
So too early to comment, because in Q2, if you talk about the impact was hardly, because the new pricing only started coming in 24th onwards, so just a week in the quarter. But yes, 1.5 months for this quarter almost has passed by. We see quite a positive impact because modern trade is one of the outlets where the benefit reaches to the consumer the faster. So all these price reductions, irrespective of the old MRP stocks, was also there in the stores. I mean, they downstocked it, and there is a better offtake which has been witnessed in the trade now. So should give a positive impact.
All right, should have a positive impact, yet to see the entire picture. But packaged sweets have emerged as a strong growth driver and an important category for you. How do you really plan to scale this particular category without compromising on your margins?
So this category has a huge seasonality play. So if you look at it, say, for these 3-4 months, wherein from Rakhi to Diwali, we do about 80% of our business on sweets, right? So you cannot make it about this, cannot be an ongoing stuff. Howsoever, if we compare year-on-year kind of stuff, we would want to now build on this category because this category has huge opportunity, a huge unorganized play, and also good on our EBITDA margin. So that's what would be a consistent endeavor to build this category on. This quarter, we reported much better number is also outcome of that last year. It was a little delayed Diwali, so that numbers came into Q3, which got shifted, got preponed to Q2. So that also is a reflection in these numbers.
That's right, Manoj. Of course, the Diwali and festivities had a huge role to play in that category. But the Western snacks, that saw a decline of 5%. Is this category also seeing a slowdown because of intense competition? Are you feeling that pressure? Rishabh?
So in Western snacks, largely we have seen that this also in 2 halves. So July, August, we are doing fairly well. But in September, due to GST change, we're seeing destocking of Western snack category. And also we're seeing that this category has not grown this year overall, as an overall level also, versus ethnic snacks category has grown this year.
Right. So, Rishabh, what is the current utilization level that you have across the key manufacturing plants? And where do you see that headroom for growth that you have for the growth momentum to pick?
So we completed our capex cycle in FY24, and in last 1 year, we started using capacity what we built across all part of India. For this, we also got benefited from Government of India with PLI incentive scheme where government has granted 261 crore rupees of PLI. That's coming in a boost of accounts. Overall, currently we are in Q2, we are close to 52% utilization. We started at 41-42% in last 2-3 years, and we are 51-52%. And what we see that in next 2-3 years, company doesn't require any major capex. This capex will suffice all the growth. What we'll do in next 2-3 years. Of course, there'll be regular capex we will do for this NPD and maintenance capex.
Right. So, Rishabh, my final question, looking at the run rate for the performance for this particular financial year, you ended FY25 with top line of 2,600 crores. Now you've done 1,264 crores in the first half of FY26. What's the target for FY26 end now?
So this year we gave guidance, and for us also that our company we should grow at around 15% year on year. That's what we are taking on. And in first half we are seeing we are growing 15%, and we are on track to achieve the same.
All right, Rishabh and Manoj, thanks so much for joining us right here with all the details on your performance and the future outlook. Thank you so much. All right, let's focus on the new debutant on the bourses today. We are talking about Grow's stellar listing today. And the co-founder and COO of Grow, Harsh Jain, says that the company's focus remains on expanding its product suite while also ensuring a seamless customer experience. Listen in.
We think a little differently. We don't think like cross-sell or upsell or anything. We just think that we have to give it access to people. So yes, of course there are customers who are doing smaller amount of investments, but then there are customers who are doing large amount of investments. There are some customers who are doing maybe 1,000, 5,000 rupees SIP, but you will also see people who are doing a 30,000, 50,000 or lakh rupees SIP also. So once you are a platform and you build on a tech infrastructure, we as a company, we as a platform doesn't need to differentiate or between a low versus a high, because it doesn't cost us to serve all the same. So our focus has always been, can we add more products to our portfolio? like we were talking about, right? Recently, we were working on commodities. We did not have it on our platform, and a lot of our customers started asking, can they have commodities on Grow? And then we started building, and it takes time for us to build because we want to build the best experience.
All right, so that's Grow, the new listing today, and holding on to the gains of 22%. This is the first day pop in the new IPO, which has become a rare occasion. So this one is holding, but Nifty 50 is finding some resistance at 25,900 levels. Out of time on markets at 12, but do keep it with NDTV Profit. Thank you so much.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Hello and welcome. You're watching Profit Buzzers right here on NDTV Profit. My name is Puneet Zaveri. With me is Sharad, and over the next hour or so, we'll get you some key stories, key stocks, as well as some key management conversations that you need to have your spotlight on. Before we move on to all of those and a lot more, let's look at how the markets are doing first, because it's been a very interesting day of session for the Nifty 50. Started off with an up move of almost 150 points in terms of an implied open, saw some selling. But since then, there's been consistent buying on the Nifty 50, now above the 25,900 level. We were speaking about 25,800 being as a key level for the markets today, but we have another one to talk about now as well. When you look at the heat map very quickly on the Nifty 50, some key names as well which are buzzing in stock today. Adani Enterprises, definitely one of them. And apart from that, Adani Ports also comfortably contributing to the gains in the top file, by IT as a sector is continuing its momentum that started on Friday. Actually, it started on Monday this time. Last week was overall a whitewash week for the IT sector, but really strong positive moves there as well. On the lower side, we are seeing some impact on something like a JSW Steel, BEL amongst others, but largely a positive day for the Nifty 50. When you look at the advanced decline ratio, it gives us a perspective of the broader markets as well. Here, advances comfortably over 1675 to almost 736. Decline has been consistent, and that's key important as well. Mid cap and small cap very quickly as well. We have seen that the mid cap index started to give into some pressure over Monday and Tuesday, but today with the benchmark indices actually doing very well, we've seen the broader markets also participate, and in the BSE 500 you will see some very interesting names to say the least, because you're seeing something like a Tejas Networks up almost 7% in trade. It's been a stock that's been beaten down, hammered quite a bit, but in the up move today, something like an Awfis Financier, GE Shipping is also doing very well in trade today, while Thermax post quarterly earnings, something like a Hindustan Copper, and we'll put that in focus as well, is down currently almost 4.5% as well. But let's quickly put up something like a Cosmo first as well. That's the first management on the show today. It's on focus on the back of the, of course, quarterly earnings. The stock not reacting too much, but it was a steady quarter with both revenue as well as EBITDA growing in early double digits, and it's led by a 25% increase in sales volume as well. We're now being joined by Pankaj Podar. He's the Group CEO of Cosmo First. Mr. Podar, very good afternoon to you, sir, and thanks so much for joining in. My first question, largely on the capacity increase that we've seen in this particular quarter. What does it mean for the company? Is it largely in your existing products, or you're also adding specialty films within this capacity? Give us a lowdown.
Yeah, hi. So we have grown close to 40% in capacity. Obviously, this is just happened recently, and some of it already has been utilized. And given that we are ramping up the capacity over the next few months, this is going to help us both on the specialty and the other BOPP films. Last year, we had installed CPP line as well, and that is again something that we continue to scale up. So we expect that the BOPP line should be fully scaled up by Q4, and that will help both growing specialty films across different verticals as well as the simple BOPP films. Yeah.
Pretty interesting. Sharad here. Mr. Podar, we spoke about the overall growth expansion plans for BOPET plants. But the margins front, there are some questions over here. The numbers were largely strong, double digit. If you look at the revenue and EBITDA growth, both going up between 19 and 21 odd %, but the margins has been flat. And will this margin pressure actually kind of continue going ahead? Because I presume your raw material costs do have some kind of, crude derivative angle to it, and that is on the lower side. Does this come with a lag? And will we get a margin benefit out of it when we track this sector?
Yes, you see, historically, the raw material cost has impacted the working capital more than anything else. So given that, the raw material is at almost 15 years low levels, it is certainly helping us in bringing down the working capital and keeping that under control. As far as the margins are concerned, it is largely to do with the demand-supply situation. Actually, post unfortunate fire in one of the competitors, the margins did go up. Unfortunately, there were some imports in anticipation by some of the players, and that led to some softening of the margins. The margins are picking up again and should ideally stay stronger in the quarters to come.
Mr. Poddar, in terms of capacity and just a follow-up, because you mentioned that it's almost a 40% increase to your own capacity. How much is that for the organized market for India specifically in terms of addition of total capacity once all of that comes on stream? How much would that be for the whole market in India, and comparing that with yourself as well?
So see, historically, we have always maintained a 50-50 mix, and this is again, we want to continue doing it. In fact, last few quarters, we have increased our exports, in anticipation of this new capacity. So right now, we are actually hovering at close to 60% exports. But as we scale up this new line, we expect to maintain a fair mix of 50-50. And exports is largely a specialty drive for us. So we'll continue on that path to ensure that exports is largely a specialty market for us, while domestic will be a mix of specialty and plain vanilla BOPP films.
Interestingly, Mr. Poddar, any kind of capex amount for these expansions which have been there, have this been announced for the next 1 to 2 odd years? And if yes, how will the funding be?
So see, right now we are in a phase of consolidation and, taking leverage from all the investments we have done in the last 3-4 years. If you really see, we have invested, post-COVID, we have invested close to 1,600 crores. And now we want to take a bit of pause, consolidate here. We've added newer businesses, we've added capacities in film business. So next 1.5 years, we would not be investing as much capex. Obviously, this year, there is a pre-committed capex of close to 250 crores. But for the next year, we may not be doing much of capex. We would like to just consolidate and make sure that we take full leverage and benefits of all the investments we have done.
Mr. Poddar, with the added capacity, you mentioned that a lot of the exports is largely of the specialty films. What should be the sustainable margin range that we should look at for? Because over the last 2 to 3 years, margins have been volatile either on the upside or the downside. So should a sustainable range be 12 to 15% maybe in the next 2 to 3 years?
Yeah, I would say that, if you see Cosmo history, irrespective of the markets, we've always stayed in the double digits. Our 5 to 7 year average should easily be anywhere between 12 to 15%. And, we would obviously love to take it beyond this. But a realistic number, I would say, is a 12 to 15 number, which is what we have been doing for last few years. Obviously, the new businesses has a potential to do much more, but they will need its own time, because 2 businesses we did start, say, in 21-22. And the 2 other businesses we started in the last 1.5 years. And they're all scaling up nicely, and they will continue. And these are, again, very high specialty or technological businesses, and they will, or either consumer businesses. So they will all add up to the profitability as the time
That's the management. Speaking about the growth plans coming in for Cosmoverse, thank you very much, Mr. Poddar, for taking out the time at NDTV Profit. Now, moving on from one management to another management, another counter in focus today is Biocon. Its Q2 revenue and EBITDA were broadly in line, but profit came in below estimates. NDTV Profit's managing editor Tamanna Inamdar spoke to Siddharth Mittal on the outlook going forward.
Just a word on the overall numbers. The consolidated numbers look fine on the face of it, But if I move away Biocon Biologics and look at Syngene, etc., I think expectations were penciled in at higher from the street.
Well, I think we have delivered in line with the expectations, at least that we had set. I really can't comment on what the street was expecting. I think both our businesses, generics and biosimilars, delivered a very, very strong 24-25% growth, and or the CRDMO business delivered 2% growth over last year, which was in line with the plan and in line with the expectations that we had set. So on a consolidated basis, a very solid 20% growth, and a sequential basis, again, a very solid 9% growth. And I think, this growth, of course, there have been many drivers which contributed to that this growth, and we expect this growth momentum to continue in the second half. So I think we are, at the board level, the management level, quite happy with the set of numbers that we have delivered.
Let me focus a bit on biosimilars and, of course, Biocon Biologics as part of it. 60% plus of the revenue contribution coming in from there, your largest growing, or I think fastest growing space as well. Do you expect the revenue contribution to grow going forward?
I think overall, as a percentage, we have seen, as you mentioned, 60% revenues come in from biosimilars, and I think the overall revenue growth of 25%. We expect the growth momentum to continue in the second half and the coming years, and there have been many, many new launches. We have had 4 new launches in the US itself this year. We have several new launches coming up in various markets, including Europe and rest of the world. And I think also our base portfolio, or the base products which were launched earlier, also continue to see more demand, including insulin. I think insulin, there is a huge tailwind as we see more and more innovators focus on GLPs, and that opens up for us to play in that space. And I think in the coming quarters and years, we are very well placed to benefit from this opportunity in the biosimilar space.
Can you give us details of the 4 biosimilars that have been launched?
So we had biosimilar bevacizumab in our oncology portfolio launched in the US. We also launched biosimilar Aspart as an interchangeable insulin in the US. We launched biosimilar ustekinumab, and we had biosimilar aflibercept launched in Canada. I think these 4 products did contribute to the growth we have seen in our North America region.
You also launched denosumab, I hope I'm saying it correctly, which treats osteoporosis and cancer-related ailments as well. What is the kind of scope that you see from this particular launch and the revenue contribution?
See, it's very early days to comment. We do have a settlement with the innovator which will allow us to bring this drug to the US next year. So I think, of course, we have launched in other markets. So for me to give a guidance at this stage will be a little difficult, as the market will ramp up over a period of time. As we know, biosimilars, unlike generics, does take some time to ramp up. Of course, it depends on also number of other biosimilar players when we launch the product. But we are quite confident, as we've seen, again, a very strong oncology and a very strong diabetes through insulin franchise in the US, that we will leverage that benefit, or the whole infrastructure that we have set up to benefit from the future launches.
Okay. The settlement with the innovator, you see it coming in time for the launch that you're planning next year, or do you have some timeline in mind for it?
I think the terms are confidential, but yes, we do have a timeline, and we will be there in the market, at that time.
Okay. Just let me talk a bit about the biologics part of the business. What are the margins for this portion of the business that we've seen, and the growth there for the quarter year on year?
See, our core margins, which is excluding R&D, was at 32%, and the EBITDA margin was a very solid 25%. And there was a peak of 4% compared to last year in the EBITDA margin. I think, of course, the revenue growth and all the focus that we have had in optimizing our operating costs, because a lot of the costs are fixed costs and they've already been invested. So as we see more and more revenue growth, gross margin growth, that will contribute to increase in the margin percentage. And that's why we've, compared to last year, we have seen 400 basis point increase in EBITDA.
And do you see that as sustainable or growing? Are you seeing 25% as the sort of margin for this part of the business, which is a bulk of the overall?
No, I think logically, again, that as the revenues continue to grow in the coming years and the fixed cost does not change significantly, we will continue to see expansion in the EBITDA margin. But of course, the existing business also has price erosion which continues, so there will be a net impact on the margins, but it will be in the positive direction.
That was exactly my question. As you know, have this pricing pressure, especially in the US. How are you defending those margins?
I think in biosimilars, the business tends to be more sticky compared to generics. I think in generics, the price war or the competition is more intense, unlike biosimilars. So the patients and the payers and the PBMs of course, look at continuity of supply, reliability of supply, unlike just generics, where price plays a much more dominant role. And I think that's the reason when you look at products such as biosimilar trastuzumab or biosimilar pegfilgrastim, despite 5-6 players for these products, we continue to hold over 25% market share very steadily. And same is the case in Europe. I mean, if for the products that have been launched over the years, we have seen a very steady market share despite new players coming in for the same products.
What is the US contribution right now to the biosimilars business, the US exposure?
It's roughly 40% plus.
Okay. So recently there is a fast tracking for biosimilars that the US FDA has announced. How is that going to help you? What is going to be the impact for you?
See, what this it's not really fast tracking. It allows companies who have a very robust preclinical data and phase 1 data and who can submit a very robust scientific file to get a waiver on a phase 3 trial. Now that would help companies to reduce the cost of development, because significant cost goes in phase 3 trials, and also it will shave off a couple of years to conduct those trials. And I think we are very well placed. We have a portfolio of 9 to 10 products that we've been able to bring to this market, and we do understand what the regulators are looking at. Our scientific capabilities that we built over the last couple of decades definitely places us very well to benefit from reduced costs and reduced timelines.
That's interesting. That's the management of Biocon, and stock itself is doing well in trade. The stock is up 2%. Earnings are also on the stronger basis, and brokerage is also giving a thumbs up. But joining us now is Avinash Gorashkar. A very good afternoon to you, Avinash. Markets have been doing really wonderfully well, and you see the small caps have joined the party after the 3-hour trading sessions. How is the overall strategy looking like? Where's the risk-reward ratio actually good now?
No, I think, Sharad, the markets are positive because I think two things. One is markets are expecting that the US trade deal could happen very soon. And I think Donald Trump has already tweeted saying that a resolution is going to be very clearly, going to happen in the very short to medium term. And secondly, the markets are also looking at the Bihar State Assembly polls. I think, probably by Friday, you will get a sense as to what is the final result. But, hopefully, if the ruling government gets a majority here, then I think that is also going to be another sentimental booster. And most importantly, I think markets have now started looking at the Q3 numbers more closely. I think Q2 has been more decent than what everybody's expectations were, especially if you look at sectors like automobiles, auto components, capital goods, cement, in fact, the hotel and hospitality companies. So I think within the mid caps and the small caps, a lot of value buying has started emerging. And I think you could see this continuing for a long time. I think today's rally has been very solid across the board. And I think that is definitely a good sign. Hopefully, I think we should, also see good FII numbers. I think that is one element which is not yet present in the market. But net, I think investors are taking a stock specific call. And that's why you're seeing select mid caps and small cap companies moving up pretty sharply today. which is actually boosted by a lot of value buying. So I think, we are structurally positive on the market, but in case the market, corrects also a little, I think investors should not worry, because I think the trend line, clearly depicts that earnings growth is now going to take off in the second half of FY26.
Avinash, very quickly on something like a Biocon, do you have a quick view? Is it one of the preferred picks in that space?
No, I think I was hearing to the commentary, Puneet, what Biocon management said. I think, the numbers are pretty decent. The markets have always been greedy and expect something more from the management. I think one more quarter of strong performance and from the biosimilar, opportunity, which I think the markets are clearly waiting for a long time. I would say that at these levels, maybe the risk reward is evenly priced. I think the stock has moved up. I would say that, the investors who are holding on to the stock should hold on. Any meaningful correction, at least 10-12% if it corrects, then I think it could be a good opportunity to accumulate. But we are structurally positive on Biocon. We expect that FY26 second half and FY27 should be significantly better compared to FY25.
That's pretty interesting on that front. Puneet, BSC has done really well after the earnings. Let's just show the chart for BSC. See, that's holding up 6% in gains. Q2 numbers were on a very strong side coming in. And this was expected that this would be a inline or a weak quarter for BSC. But look at the market share gain, especially in the index option segment. That is something I'd like to point out, a very strong up move coming in. And the transaction charges, that has gone up almost 57% on a year-on-year basis, and sequentially also an 8% tick coming in. Interestingly, the expense controls have remain under check, and that's why the margins you are seeing are flattish. But lastly, the index option market, 1 year ago, it was, you could say, in the teens, and now it is touching the 30% mark. So, of course, the entire capital market themes, the BSC, that has done really well, and Grow. The listing was also very strong. If you can just show the chart of Grow also, that had a 12 to 14% kind of premium listing coming in, and that's holding up. It's up more than 20% in the day's trade. Avinash, capital market theme stocks, which we had picked up earlier in the day itself, this theme. BSC is there, Grow is there. Where do you think there is much more value to be unlocked? Of course, both of them cannot be compared, but these two stocks have been buzzing the most in this sector.
No, I think, Sharad, the BSC, if you see the numbers, have been much better than what the street expected. And I think that has been one of the major, reasons the stock has gone up. And I think typically the second half is a period where, you see a better increase in the volumes. And I think since BSC is a platform business, again, just 2 stock exchanges in India. So I think clearly the markets are rewarding this company, because for a very long time, for the last 1 or 2 quarters, growth was slightly flattish. So that explains the increase in the BSE stock. As far as Grow is concerned, which got listed today, I think, the market has rewarded it with a 20-22% kind of premium. And I think, it deserves that, considering the fact that they've used technology as a key driver to improve their business. And I think going forward also, the Grow management has very clearly indicated that wealth management, other verticals within the financial services space is also something which they are looking very closely. So I think clearly, if one were to look at this company for the next, say, a couple of years, I think there's a lot of headroom and opportunity to grow. So I think, both these companies are definitely looking attractive from a longer term point of view. Grow definitely looks more attractive because, the IPO price was 100 and you're getting it around 122, which is not very expensive if you were to look at the kind of growth runway they have over the next, say, 12 to 18 months. So Grow definitely one could look at accumulating from a longer term perspective, and BSC, I think one should hold on. There's no need to hurry, but any dip in the price could be used as an opportunity to accumulate.
Got the view, Avinash. But we have a couple of other counters, something like a Fortis Healthcare and Gujarat Fluoro in focus on the back of Q2 earnings. Fortis is down roughly 2.5%. Gujarat Fluoro, on the other hand, is up almost 4.8%. Let's get in Jasmeet to get us perspective on both of these key results. Jasmeet, over to you.
Well, Ray, thank you for that. Starting off with the first one, that's Fortis Healthcare. While the revenue growth in this particular quarter was led by the increased occupancy in the beds. Well, if you look at the key specialties like oncology and renal sciences, they both saw an uptake by 29% and 22% in this particular quarter. If you look at the average revenue occupied by per bed, even that is an uptake. But in regards to the occupancy rate, we see a slight pressure coming at 71% versus 72% in the previous year of the same quarter. If you look at the overall international patient revenue, that grew 26%, adding roughly 8 8.1% of the top line for this particular quarter. In terms of the other businesses, they're like diagnostic business, which grew at 7.4% in this particular quarter. If we look at the key numbers, revenue sees an uptake while EBITDA also grows by 27 odd percentage. In terms of margin, we see expansion coming in. It's at 23.9 versus 21% in the previous quarter. While your net profits are roughly up by 82% in this particular quarter, we see a good set of numbers coming in for the company, but stock under pressure. While if you look at the second one in my list is Gujarat Fluorochemical. While for this company, we see a strong borderline expansion as well as the PAT has grown. While in regards to the sales are coming mainly from the growth of fluoropolymer, but the fluorochemical is something that's facing the beating given the on the back of seasonality, the tariff as well as the quota reduction. If you look at the margins, they have expanded on the back of increase in the PAT, and have also led to increase in the PAT. When you look at the overall battery business of the management, the new business of the management, that continues to make EBITDA losses even in this particular quarter. With regards to the lithium hexa, the sales have sales to come in soon going forward. If you look at the key business line by revenue wise, the fluoropolymer is up 8%, while we see a downtick of 15% of fluorochemicals. In terms of bulk chemicals, even that's flattish, up 3 odd percentage. If you look at the key numbers for the company, revenue remains almost flattish, nearly up 1.9%, while the margins have expanded to 30.1% compared to 24 in the previous quarter. In regards to net profit, they're roughly up 47% in this particular quarter. All in all, a good set of numbers for the company.
Well, thanks so much for that, Jasmeet. But Avinash, let me actually pose the question on in the hospital space, because something like Krishna Institute of Medical Science also saw an hammering post its results. Fortis also is seeing that impact. Anything that you particularly like in this space, because it's not cheap in terms of valuations, but the growth outlook in terms of bed addition is quite strong across players. Your view?
No, I think valuations have been expensive, Puneet, and I think that's the reason, it's like sell on news is the kind of strategy. Numbers have been pretty impressive for Fortis, as Jasmeet said. Clearly, the profitability has jumped significantly by almost 82% to 322 crores. I think this is a normal profit booking kind of sell-off. It's not anything to do with the fundamentals story, because, the growth potential for the hospital business in India continues to be very strong. We are positive on other hospital companies like Apollo, Yatharth Hospitals, which operates in Noida, North India. And I think, these companies, these hospitals have also added significant amount of bed capacity. So I think all said and done, investors who already have these stocks can hold on, but fresh buying at these levels is not advisable, because as you rightly mentioned, and also we agree that, the valuations are fair to expensive. And I think at these valuations, you probably cannot make an alpha, kind of return here. So you'll have to wait for the market to, give it the right valuation. Maybe some profit booking could get them down to reasonable levels. Maybe at that point, they could be good, stocks to accumulate. But as of now, I think it's a hold. No fresh buying suggested.
Got the view, Avinash, but we'll take a very, very short break. A lot more action on the other side. Stay tuned for more profit buzzers. We'll discuss a lot more on the other side. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Miraj, Tamanna and the entire Profit team is also working super hard on building a...
Welcome back to Profit Buzzers right here on NDTV Profit. The Nifty IT, one of the top sectoral gainers for the day. It's been a very, very strong week actually for the Nifty IT. The last 2 to 3 days after the horrific week last week, it's quite a decent performance by that index. Something like a TCS is back about 3100. But why is the sector actually running ahead? My colleague Jasmeet is now joining in to give us his perspective on the same. Jasmeet, over to you.
Well, thank you for that. IT has been in buzz in last 3 days. If you look at the performance of IT, it's nearly up 4%. While the reason are on various fronts. Starting off with the first one, we see a software Trump stance when it comes to H1B visa, which is pushing the IT to go forward given that there's lesser risk. On the other hand, all the IT firms have come forward and also mentioned that their impact from H1B visa is negligible and lesser compared to as they have been reducing the impact of the H1B visa, which makes it a whole lot of positive. When we look at the other aspect, the long positions continue indicating a strong technical recovery momentum given they are undervalued at this point of time. In terms of the reduced chances of US government shutdown is something that's creating a positive sentiment as well. If you look at the other aspects, the valuation remain attractive given it's at 5-year low, and some stocks are also at 10-year low of their current PE at this point. While the QT, if you look at the Q2 results, they're broadly in line with the estimates, and also somehow they beat the estimates, given that showing overall a positive stance for the IT at this point of time. While in terms of the rupee weakness also is something that's pushing the IT pack, given most of the revenue comes from the US, and weakness of rupee would push them to get more, to give them a tailwind going forward. If you look at the other aspects, the firms have retreated the limited dependency on H1B visa, which you already mentioned. Apart from that, the Infosys had come up with a recent buyback, creating a positive sentiment to the overall IT pack, and given the promoters did not take part in the buyback is also something that makes the entire momentum of the Indian IT a positive stance. While lastly, if you look at the overall sector performance, it's nearly down 70% since Y20 basis, showing an uptick of return potential going forward from here on.
Well, thanks so much for that, Jasmeet. And those are some of the key possible aspects that's working in favor of the sector. But we still have Avinash with us. Gaurav Sharma, Associate VP and Head of Research at Globe Capital, is also joining in. Gaurav, let me actually come to you first before I go across to Avinash. On the charts, does it suggest that there will be some more up move on the Nifty IT, and if any, particular stock picks that you need to watch out for in the near term with a bullish momentum on the charts?
Yeah, hi, good afternoon. Good afternoon to Avinash and to the viewers. So, IT indeed is looking quite attractive at the moment. And, I think no more it is a contra bet. It is more of a value bet now. Some of the IT names like TCS are available at very attractive level from the large cap space. HCL Tech among the large cap space has already starting buzzing up and is looking pretty attractive. These are the two stocks that are among the hot favorites as far as medium to long term positions are concerned. As far as short term trading is concerned, we will bet heavily on mid cap names like Coforge, Emphasis and Persistent. Persistent has already started its up move. The remaining two will follow suit.
Okay, so that's the overall take that we have for the IT sector as of now. But let's shift focus to PI Industries. Now, what's happening here is, if you just look at the numbers, we did see a sharp downtick over there. But revenue and profit were majorly in line. It was EBITDA where there was a beat that we'd seen. But now, after the con call, we've seen a sharp reaction in terms of where the stock price is concerned. And this is on the back of the margin guidance revision that we are looking at. Parsha joins us with more details on what's happening with this particular counter.
Well, yes, thank you so much for that. Yes, as you rightly said, it's the con call commentary that has led to, the pressure in the stock price. Let me start with what they've said in con call. One is the global agrochemical weakness persists, and the recovery is expected from H2 FY26 onwards. And the important point over here is, if you see, they've maintained their EBITDA margin guidance at 26 to 27%, what they have earlier guided. But if you see, the current EBITDA margin in Q2 was around 29%, and if they are maintaining 26 to 27% of margin, that means we may see pressure in margin going forward. So that's a negative thing, and because of this, analysts are expecting almost 8 to 10% of earnings cut due to the near-term headwinds that the company has been talking about. They've launched new products in the past, which grew 38% year-on-year in H1, and the domestic and export recovery is expected from Q4 onwards. So we may see some pressure in financial numbers in Q3 also. Again, the negative outlook. Long-term outlook for the company remains intact, but short-term pressure remains due to the macroeconomic and geopolitical challenges that the company has seen. So overall, because of a kind of negative con call, we have seen this pressure in the margin. Talking about the numbers though, the numbers were pretty good, was ahead of the expectations. If you see, revenue and net profit was in line. EBITDA was a beat because of the change in the product mix that the company has seen, and revenue impact that you're seeing is led by decline in agrochemical exports, and the domestic revenue declined by 13% year on year due to the rainfall which disrupted the overall demand. Pharma grew at a very high growth rate of 104% year on year, and they expect better H2, which will be driven by strong Rabi season according to management. But the negative con call is what making the stock go under pressure.
Well, thank you for that, Varsha. Avinash, let me come to you on this one. So, third quarter also, some of these headwinds which are there are expected to continue. Considering that, while the numbers do look on the weaker side, it's the management commentary mainly which has created caution in terms of whether performance is concerned for this particular stock. What is your outlook on PI Industries?
No, I think our sense is that it could be a market performer, Anushi, because clearly, valuations are fair to expensive. And I think typically for PI, agrochemicals and the contract manufacturing business, both the businesses, I think the pickup happens mostly in the second half. First half is good for agrochemical business. And I think if the management has given a slightly cautious stance on margins and growth, then I think the markets would obviously cautiously await as to what kind of numbers can come in the next 6 to 12 months. But I think typically, as of now, I don't think you could see further panic. I think today you could see a little bit of downside because of the management commentary. But I think this is a value stock. Has a very strong product kind of lineup, has a very good geographical reach. So I think clearly from a longer term perspective, things could get better once the new season starts and I think numbers start improving. But at least for the short term, the stock is not going to go anywhere. So it's a hold. At least at these levels, it's not a fresh buy.
Avinash, sorry, very quick view on IT as well. Are you preferring mid caps to large caps? Forgot to come to you on that one.
No, IT, I think we are positive on companies like HCL Tech, Persistent, Coforge, even KPIT. I think it has to be a mix of large cap and mid cap, Puneet. But I think one thing is very clear that as far as the business is concerned, the second quarter was pleasantly positive for companies like Coforge, HCL Tech. Numbers in this kind of quarter typically are not very robust, but I think the management commentary was also encouraging. So, and clearly the valuations are very reasonable. So I think, you got a little good amount of runway available here. Even at these levels, maybe, one could start, nibbling into these stocks. But I think probably once the US-India trade deal is over, we get a little bit of visibility on the new US kind of orders which are likely to come in. I think that would be a time. Maybe the March quarter would be important, but I think definitely this space is interesting. And I think for a patient investor, it's a good entry point.
Good entry point, but for a patient investor, that's the view coming in from Avinash on IT. But a major boost is actually coming in for the Indian hospital space. And as Commerce Minister, Piyush Goyal says that the government can consider visa on arrival for medical treatments. Fortis, Max Healthcare will be some of the key beneficiaries. But let's go across to Varsha very quickly for a quick view and analysis of this particular move. Varsha.
Well, actually, yes, the proposal was discussed in CII's annual health summit, wherein this facility will maybe extended to US and most European nations, and wherein India has a high trust and minimum security checks. The CII has been asked to work on the framework and the certification norms, if any. Now, talking about this, of course, the hospital companies are, surging today, but let's talk about how is their international exposure, how much international patients contribute to the overall revenue. So for Fortis Healthcare, if you see 8% of revenue comes from the international patients. For Max Healthcare, it is almost 10.25%. For Apollo Hospitals and Global Health that is Medanta, almost 6% of their revenue comes from the international patients. So overall, yes, a big positive coming in because of this policy, and you're seeing the stocks are surging as of today.
Here's Union Minister Piyush Goyal actually speaking about the 1 trillion potential opportunity in medical travel and tourism. Listen
In many countries, we allow visa on arrival, or we allow e-visas where you just apply online and within 24 or 48 hours you get your visa. Both these can be considered, let's say, for the United States, for most of the European countries, not all, by the way. For most of the countries where we have a fair amount of comfort, where detailed investigations or inquiries are not required. So let us prepare collectively. And these are the areas where maximum, or at least let's say reasonably value-based tourism can come in, or medical tourism can come in. So let's work together. CII could put a team together and study the market. You said it's $100 billion market. My figures suggest that it could be over $800 billion market, and expected to become $1 trillion market, including wellness. medical wellness or health fitness or health precautionary preventive care.
Okay, so couple of stocks that are on radar on the back of this is Fortis, Max Health, Apollo Hospitals and Global Health, as Varsha covered about them. But even hospitality is one sector where there could be focus on the same, considering a boost in terms of where medical tourism is concerned. Let me go across to Gaurav for his top picks in this sector.
Yeah, hi Anushri. So, as far as the hotel stock are concerned, we generally limit our analysis or purview to the three ones, that is Indian hotels being our prime favorite, followed by Lemon Tree in the mid-cap smaller segment, and East India Hotels, EI Hotels.
But about the hospital stocks also, the healthcare ones?
SKL ones, we are bullish on Fortis and Apollo both. Any decline from here on, which we are currently seeing, should be utilized to take a fresh entry if someone has missed earlier. I don't see a meaningful slide coming in anytime soon. Therefore, this is a good opportunity. One can start accumulating and adding to their portfolios.
Well, that's Gaurav's view on hospitality as well as, some of the hospital stocks as well. But Tata Motors commercial vehicle arm has made its debut on the exchanges today, and the stock's almost up 24%, and that's largely because of the discovery price that had happened pre-demerger. So 660 was the pre-demerger price, 400 is what the PV business listed at, and hence 260 would have been the discovered price for commercial vehicle, and hence you're seeing a 24% uptick. But most brokerages are actually penciled in over a value of between 330 to 360 rupees for the CV business, and you're seeing it at a very similar price right now. But I had a chance to have a conversation with Girish Wagh. He's the MD and CEO of Tata Motors Limited, which will be the commercial vehicle arm, on the Iveco acquisition, amongst other key conversations. Listen into what he had to say.
The Iveco transaction is still awaiting all regulatory approval, so I will not say much, but I must say that it's not only about access to powertrains. It is access to talent, it is access to markets, it is access to channel, right? And obviously, yes, access to technology. So the Iveco acquisition post regulatory approvals, when it happens, it will place us number 4 globally in more than 6-ton vehicle segment, which is how the commercial vehicle segment is seen globally. And therefore, I think we get into the top bracket, and it will therefore also give us scale, synergy and freedom to invest in future technologies.
You can of course catch the whole conversation on YouTube as well, but Avinash, let me come to you very quickly on this one. I'm actually confused if I should ask you a view on Tata Motors, or if you have any preference between the commercial vehicle and the passenger vehicle arm, given the superior financial metrics of the CV business. So any view, I'll let you take the pick on this one.
No, I think clearly, I think Tata Motors commercial vehicle stock has opened positively because, obviously the JLR business has a little bit of problems because of the viral attack and all that. But I think if you look at the longer term kind of opportunity, I think, shareholders are going to benefit via both these companies, because once the JLR business starts moving up quite well, I think you're going to see a good amount of scalability happening there. And the commercial vehicle business, I think, hopefully, if the GDP growth rates average around 6 to 6.5%, that means commercial vehicle businesses are going to do pretty well. And I think the Iveco acquisition will give a lot of muscle power to Tata Motors in the medium to long term. So I think, investors need to take a slightly longer term call. I think we are quite positive on both the companies, but if you were to tell me which is the one which could do better in the medium term, it would be commercial vehicles, because typically the second half is supposed to be a much stronger period, Puneet, for commercial vehicles, and we are expecting a good traction in the volume growth for Tata Motors commercial business. So that definitely means that at least in the next 6 to 12 months, further outperformance can be expected here. As far as the JLR business is concerned, the passenger car company, I would say that you'll probably have to wait for a couple of quarters before we see growth coming back again. But definitely longer term, both companies should do well.
Okay, coming to the secondary markets, a strong IPO that we saw, a strong dividend that we saw today is Growth. That's Billion Brains Carriage that we are looking at. A 22% is kind of an uptick that we are currently seeing. In fact, earlier, Growth's co-founder and CEO Harshen says that the company's focus remains on expanding its product suite along with ensuring a seamless customer experience. Let's listen into what they had to say.
We think a little differently. We don't think like cross-sell or upsell or anything. We just think that, we have to give it access to people. So, yes, of course, there are customers who are doing smaller amount of investments, but then there are customers who are doing large amount of investments. There are some customers who are doing maybe 1,000, 5,000 rupees SIP, but you will also see people who are doing a 30,000, 50,000 or lakh rupees SIP also. So once you are a platform and you build on a tech infrastructure, we as a company, we as a platform doesn't need to differentiate or between a low versus a high, because it doesn't cost us to serve all the same. So our focus has always been, can we add more products to our portfolio? Like we were talking about, right? Recently we were working on commodities. We did not have it on our platform, and a lot of our customers started asking, can they have commodities on Grow? And then we started building, and it takes time for us to build because we want to build the best experience.
Avinash, just want to understand, have you tracked this particular IPO? What is your understanding on this stock?
No, I think from a longer term perspective, Grow definitely looks promising. I think looking at the kind of use of technology which they have used, they've ramped up the business pretty well. Their profitability trajectory has also been very encouraging. And I think, the most important part is that they've clearly mentioned that they now want to move into the wealth management, and several new products are expected to be launched. So I think within the capital market, ancillary stocks, this would be an interesting bet if one looks at the next, say, couple of years, because the runway for growth is pretty solid. And I think, the kind of opportunity and the kind of use of technology the promoters have done, that clearly indicates that, this is a very aggressive promoter team. And I think the markets have rewarded it today with a decent premium on listing. So net, I think longer term prospects definitely appear to be good.
Well, Avinash as well as Gaurav, we'll let you go on that note. Thanks so much for joining in, giving us perspective across a whole bunch of stocks and sectors. But viewers, as we wrap this edition of Profit Buzzers, we leave you with this very special conversation with the management of Bosch on their Q2 revenues as well as profits has expanded in this quarter. And of course, the new two-wheeler business had really strong growth as well. But my colleague Alex actually caught up with Guru Prasad Mudlapur. He's the president of the company. Listen in to what he had to say, and thanks so much for watching.
A lot of OEMs have reported that there was a little bit of a disruption in the transition to GST 2.0, deferred purchases, etc. Did that have a bearing on the numbers in the second quarter?
I would say we've had a very good second quarter. We closed with 4,795 crores in Q2, which is a 9.1% growth over the same quarter of last year. We did well on profits as well. The GST has been overall positive for the industry, very well received. We also saw that the festive period lifted the spirits quite a bit. So generally, GST period has been pretty optimistic.
So, therefore, there was no impact on account of deferred purchases, etc. And I know that Navratri, etc. was great, but I'm saying during the second quarter?
I would say there was a little bit of a slowdown in anticipation of what's coming up in GST. But I would, if we overall average it out, I think very little impact. Our mobility aftermarket division had a little bit of a slowdown on account of deferred purchases on GST, but rest of the businesses didn't see much impact.
Okay. Specifically on, and I look at the sub-segments of the business and I divide that into power solutions, mobility, aftermarket and two-wheeler. Specifically, two-wheeler has seen substantial growth. What are the factors that you would like to highlight in each of these divisions?
Okay, so power solutions, we had 9.5% growth. I would say all segments within all vehicle categories had very good growth overall, and we've benefited from that, including all the type mix effects, which are positive for us. On the two-wheeler, there was a very significant growth, 81%, as you said. This was largely on account of higher introduction of the exhaust gas sensors that got implemented thanks to the OBD2 norms, which came into effect 1st of April. So based on that, we got significant benefits, and the market grew substantially for us. Aftermarket division as well, which was slightly affected with anticipated wait for the GST reforms to kick in. We had some slowdown. But still we had 3.7% growth. All our segments also grew, especially the diesel segment grew quite well in the mobility aftermarket as well.
And finally on two-wheelers?
Two-wheelers, as I said, 81% growth. So overall, very good.
Okay. I do want to ask you about aftermarket specifically, and going forward, do you anticipate that there's going to be a bump that you see in the replacement market?
Not necessarily. We see a steady growth in the aftermarket as well, and we do not see any bump right now.
Okay. You mentioned in the previous quarter, sir, that the EV business is something that you're in conversation with a lot of OEMs on. Any updates that you have there? What is the outlook going forward?
I would like to say that we've had good success talking to the OEMs. We are making a lot of progress on our complete portfolio. We are in final stages with several OEMs, and hope to give some very positive news in the coming months.
Okay.
So we should have very good news coming forward.
Okay, so would you say that significant order wins are on the cards?
Yes.
Okay.
That's right.
Okay. Now, this Nexperia issue is something that has been highlighted by my research team. It says that there could potentially be a disruption on account of Nexperia, and this is one of your suppliers, of course, of electronic components. Will that lead to an issue for you in supply chain management?
It has already been an issue for us as the auto industry, specifically worldwide, and it will have some effect on us in India as well. Right now, we are doing everything to manage it. We have so far contained it very well, and the situation seems to start to improve now, and we hope this will get better in the coming weeks ahead. So, but at this point of time, we would remain quite cautious about the whole issue.
Okay, so just so that my viewers understand exactly what is going on and what you're doing to mitigate the implications of this, would you say that the timelines in terms of your production have increased, and what kind of impact, if at all, is that having on financials?
I would, as of now, I think till end of November, we are very well covered with our inventories. So we go quite strongly on our production. If we have to make some changes, I think it's going to be in starting December. In case we run into shortages on supplies, it's probably going to be in first week of December onwards. But we are monitoring this very carefully. We are trying to get supplies from different sources and overall balancing it on a global basis. So we should be well covered moving forward.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
we unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान सोनू निगम के लिए जोरदार तालियां.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, if you look at the market, strong cues coming in from the Bihar exit poll. Markets are up 200 points, firmly above the 25,900 level, and this is largely led by the IT and the banking names.
Yeah, absolutely. We are looking at strong reactions in the IT sector. If you see more than a 2% of an uptick is currently what we are seeing for the IT index. Just if you pull up the IT index itself, we'll see all the constituents in green, in fact. So, strong up move in this particular sector. In fact, if you take the last 2-3 sessions and consider, it's more than a 4% of an uptick that we are seeing. Currently, Tech Mahindra, Emphasis, TCS, all seeing gains of over 2% in trade today. But even in terms of what's happening with the benchmark indices, as Somit pointed out, it's a 0.9% of an uptick that we are seeing, with Nifty Bank also seeing about a 0.45% of an upticks as well. Coming to the broader markets also, there's momentum there as well. Nifty mid-cap 150 on a strong footing, 0.9% is the kind of up move that we are seeing there as well. And small cap 250, about 0.7% of upside is what we are seeing in trade currently. But let's also talk about some stock-specific action. BSE 500, if you point that out, a lot of these counters are buzzing, of course, on the back of the results as we speak. Tejas Networks, 7% is kind of gains that we are seeing. Even V-Mart, Z Enterprises are up over 4% in trade today. But what's not doing so well is Thermax. 5% is the kind of a downtick that we are looking at. And this is after the management also pointed out, there's some bit of softness in terms of where the industrial infra and the product segment is concerned. While they have a stronger outlook for FY27 going forward, but Thermax under pressure on back of weak results. Hind Copper also seeing about a 5% of a downtick, and PI Industries post the con call commentary in terms of where the margin guidance is concerned. It's also seen about a 4% of a cut there. But let's talk about the management in focus. Orient Tech is a company that talking about post its second quarter numbers, the company reported a 22% of a revenue growth. Along with that, even margins that were in the range of 6%. But before we go to the management, Jasmeet joins us with more details and a better perspective on what's happening with this counter.
Well, thank you for that. If you look at the overall stock's financial performance, it's a strong set of numbers coming in. Now, in terms of the operational efficiency, it has come on the back of better cost management. And also the IT infra solution segment of the company is nearly up over 50% in this particular quarter. If you look at the other aspects, a large global pharmaceutical company has also signed up with the company for their infra solution deal. Let's quickly understand the key financials. We see revenue seeing an uptick of 28%, while the EBIT is up 41% in this particular quarter. We see margins have also expanded by 61 basis point, and the net profit is up 41% in this particular quarter. If you look at the other aspects and the division of the company's major chunk of revenue comes from the mid-market and other segment, but in case of segment specific, the BFSI segment is something which is leading. So all in all, we see a good set of numbers for the company coming in, but we also see the stock is under red given our post the results.
Okay, on that note, let me get in the management of the company. Ajay Sawant, Chairman and MD of Orient Technologies, now joining us. Mr. Sawant, hi, welcome to the show, and thank you so much for once again taking out the time to speak to NDTV Profit. Let's start off by your assessment of the second quarter results. Now, revenue, if we see, it's on a stronger footing that we are looking at, but margins is something that, where there's still some bit of that watch out for in terms of when the improvement will start. Just want to get your sense on numbers.
First of all, thank you for having me on the show. Yes, definitely the margins has been growing quarter on quarter, half yearly. Even if you compare, we have been really doing good. Major problem was coming back to on the EBITDA front. People used to question us on the EBITDA front, but if you would have seen, the EBITDA front is also moving up, and I feel from Q3 onwards, we will try and catch up our old numbers which were there. Primarily, this pressure was only from the skills that we were actually getting onto the board. Okay, we are analyzing it, the new skills, we are onboarding it, and that is where expenses are slightly grown up, and that's where the EBITDA is slightly down. But quarter on quarter, EBITDA has improved. We have on the right track.
So, Sawant, let me just reiterate the kind of margins that you had before in maybe, let's say, FY22 to 25 that were in the range of 8 to 9%. After that, you started investing in, higher employee expenses, which resulted in this margin compression that we are looking at. But from third quarter, you see a recovery building in. So just want to understand from which quarter in particular do you expect to go back to these particular 8 to 9% of margins, and would there be further improvement from those levels as well?
Yes, so what we are trying to do is that first we need to catch up our old numbers. So between Q4 and the next year of Q1, we will be catching up our first previous numbers. And after that, we'll be having a growth plan ready with us.
Right, so I get that you'll look to catch up with the old numbers first. But could you give us some guidance, say for FY27 or for FY28? Where is the company internally targeting their EBIT margins or EBITDA margins to be? What is the kind of revenue growth that you're expecting?
So revenue growth, we are planning to have between 20 to 25% quarter on quarter. That's for sure. But from an EBITDA perspective, FY27-28, though we do not declare the futuristic number, okay, but we'll be definitely in a double-digit percentage margin.
And which are the key segments that will aid this kind of growth for Orient Tech?
Number one is definitely government and public sector unit that we want to grow substantially. Second is the mid-market, and third is BFSI.
Okay, so if I'm currently looking at the mix, you said that you want to increase focus in terms of where the government mix is concerned. So 20% or so from there, mid-market about 47%. How will the contribution shape in the next 1 to 2 years?
So what is happening is telecom is under tremendous pressure. So probably we'll reduce some percentage from a telecom this thing, and which will get into the mid market and government and PSU.
Okay, got it. Also want to understand, where does the current order book stand at right now?
So we are currently at 400 plus crore orders, which can be billable before March 26.
Okay.
Right. You were mentioning that the telecom order book is under pressure. Any working capital issues that you're facing? Any large receivables that are still pending?
No, it's not from that angle, but the margin pressure is tremendous in telecom sector because they themselves are in rate. So probably we'll like to withdraw some of the bids from there, and we'll try to move it in another sector.
Okay, got that. So, given that the contribution will change going forward, just want to understand on this order book that you currently have, what would be the order book by the end of this year? Any particular large order wins that you're anticipating for the next half or so, and how will execution also play out?
So next 4.5 months are very critical, and those are the bumper quarters that we always say that Q4 is our bumper quarter. And that's what we are all geared up for, because I see a fantastic funnel lying up with most of these customers from government, PSU, mid-market and BFSI. These are our three big bets which we want to take it. Definitely there, along with funnel, the margin criteria is also put forward. And that's where I feel that we should be able to doing good in next 1.5 month of this quarter and the next entire quarter.
Can you give us a quantum in terms of what's the order inflow size that we should look at, and what would be the order book by the end of this financial year?
By end of this year, our ARR revenue will grow more than 200 crore plus. Okay, so annual recurring revenue will definitely go more than 200 crore plus. Overall numbers, as I said, we generally do not disclose it.
Okay, got that. Just also want to understand on the security operations centers. Now, this have a higher margin profile as well. So, given that you first want to clock in about 6% margins, get back to the recovery that we are seeing, to the 8 to 9% of margin mark that we are looking at. When will this particular segment start incrementally adding up to the revenue and even the margins that we are looking at?
So next couple of weeks, we should be starting our SOC, which is at Turbe. And after that, the recovery will start faster. So SOC will definitely add the margins perspective, though it will not give a much levy in terms of revenue, because we'll be topping up the margins for this SOC center.
Right. Thank you, sir. Thank you for joining us and giving us the way forward for Orient Tech. Well, that was the management. Let's welcome our fundamental guest for the show today, G. Chokhalingam, founder and MD of Economics Research. Sir, you heard the management. Have you tracked this count to Orient Tech? They're targeting 20-25% revenue growth with higher margins going forward.
Yeah, I just studied it while the conversation was going on. I listened as well as I studied. So, of course, my research is based on only secondary, so it is subject to certain limitation. My only concern is that the margin is very poor. Supposed to be a technology company, but margin is in poor single digit. Generally, well-established technology companies are having a margin in double digit. On an average minimum, 12 to 15, whereas this is 8%. And second, the employee cost is only 5% of the total revenue. This also I am not able to understand for a technology company such a low employee cost, because in the past, whenever the employee cost was too low and expenses more of a purchase of services, I always had a lot of discomfort. So, and thirdly, valuation also quite stretched. It's around 33 PE. So therefore, I would not rush to buy the stock at current prices.
Okay, so that's the view on Orient Tech that we have for you currently. But before we talk about more small cap stocks in focus, let's take a deep dive into the derivatives markets. In fact, let's bring in Sharath to talk about what's happening with the markets currently.
Well, you see the F&O markets is trending towards the bullish side. Yesterday we saw a recovery in the markets, and today they are holding up the day's high levels as well. Let's pull up Sensex, how it has been working, and of course key moving averages, the short-term ones, they have been doing well, but the tech names, they have done well, and Adani group of stocks are also doing well in the trade. But Tata Group stocks in the negative, Tata Motors CV and Tata Steel as well. let's point out the contracts where the action is there. Of course, on the call side, more actions are developing over here. Open interest has slightly fallen down, but overall, you see Sensex is still above the 84,600 mark. Let's putting in the contracts. You can see the action much more on the call side. While looking at the BankX, good numbers coming in from there as well. Contribution coming from the heavyweights such as HDFC Bank as well. Let's pull up the BankX chart to figure this out. You see all in the green. And interestingly, HDFC Bank, there is a slight downtick coming in, but still holding the gains. So that is very important when it looks like for the BankX top trades. And also SBI has pulled up, and that is why the contribution has gone up. Let's find the contracts, especially the action coming in the call segment for the BankX as well, where the contracts are being set on the higher levels of roughly, you could say, around 65,700 to 65,500, where the congestion is there. But now let's look at the stocks which would be in focus. And the first of all, we'll see the BSE FNOs, BSE as well as Max Financial. This is where the longs are being developed. Of course, BSE on the stock on top of strong earnings as well and index share gains. Let's pull out the other chart as well, where short covering is being seen, and these include IndusInd Bank, significant up move coming in since the last time we did a BSE FNO snapshot at 10:45. Adani Enterprise also making it to the list. Let's see the long unwinding stocks, and over here Bharat Forge and HFCL make it to the list. And at last, the overall new short build up, and that is where we see Torrent Power and PI Industry. The stock is down 5% odd. And over here, the stock itself, we will be coming with a stock of the day as well. So these are the important FNO developments which we are seeing in the BSE space.
Thank you, Sharad, for that snapshot when it comes to the FNO market from BSE. Moving on, Rushil Decor is in focus after the second quarter numbers. Let's get in Rushil Thakkar, the Managing Director at Rushil Decor. So if you look at the second quarter, it was quite muted. Even margins have contracted on a YOY basis. Not that kind of a growth, I believe, that you had internally penciled in. What were the factors that led to this muted growth in the second quarter, and how is the second half of this financial looking like?
So thank you for the opportunity. First of all, the quarter two has been quite difficult for us because of the raw material pricings getting up, typically in the chemical side. So that was the one reason because of which the plant also was shut down for 7 to 8 days, which played a major key role over there. And talking about the quarter three and quarter four, yes, we see the demand rising again, and the normalization of the quarter three and quarter four is expected.
The increase in raw material cost, will that play out in the second half as well? And are you taking price hikes to mitigate the same?
So the price the price increase what happened in quarter two is now being stabilized, and we see raw material pricing getting stable now. Talking about the price hike, yes, we talked about it in that Q1 results that we may take a price hike of 5% at that point of time, but unfortunately it was not happened in Q2. But we are still not expecting any kind of a price hike in the MDF segment as of now.
So just want to get a margin picture on the same. Hi, this is Anushi joining in as well. We saw sharp contraction in terms of where the margins are concerned. Volume trends for both the segments as MDF and laminates have been on the muted side, but with realizations also being under pressure, how would margin shape up? If you can give us a trajectory in terms of FY26, what would be the guidance be for margins as well as top line growth as well?
So talking about the margins of half year, yes, for quarter two, we had a nice value addition product mix on the sales point of side. So we just did a kind of a 45% of value addition in MDF business, which contributed in revenue as 55%. In laminate business, jumbo laminate just started at the end of September. So the certifications, whatever were required, were on our hand by September mid, so 15th of September. So now in quarter three and quarter four, we see a good laminate business coming from the jumbo and the phase 2 expansion. So phase 2 expansion, we have already taken the plant into the trial production, and sooner we will be taking it into the commercial production as well. So that will be affecting our top line, and that will be giving us a boost for the top line. Talking about the financial year next 27. So we are seeing a sharp growth in the laminate industry, and in laminate segment we will be doing additional somewhere around 120 to 150 crores of exports from the jumbo phase 1 and phase 2 both including.
So just a quick clarification, jumbo laminates as you're speaking about, once with the ramp up in terms of this new capacities that you're talking about, it has a higher margin profile of 14 to 16%. Currently in the second quarter, the margins stood at about 9%, while your initial guidance for FY26 is about 11 to 12%. Does that continue to stand? And where would with more of these additions, as you spoke about the 100 crore figure coming in picture, what would FY27 be like for the margins as well as the revenue growth?
Yeah, so what I told was about the laminate growth for financial year 27. For this year, half year, we are expecting that we'll be getting an additional sales of 25 crores from the jumbo laminate and expansion we are doing currently. That was the key takeaway for the laminates. And talking about the margins, yes, the margins are better now, and we for quarter 3 and quarter 4 you will be seeing the blended margins of somewhere around 12% to 14% in laminate business. And talking about the overall margins, yes, the trajectory what we have shown is 11%, and we'll be maintaining it by the year end.
Right, sir. And one question on the balance sheet side, you have been continuously reducing your debt. In FY23, this number I believe was more than 400 crore, which has now come down to close to 270 odd crore rupees. What is your target here? By FY27, by FY28, do you plan to become debt free?
So currently, whatever debt we have taken in the long-term side, so we are trying to clear it out. Every year, we are roughly repaying about 50 to 55 crores on the long-term debt side, and that way we are assuming that we will be a debt-free company by the mid 28 financial year.
Well, thank you so much, Mr. Thakkar, for joining and sharing that outlook on Rushil Decor. Mr. Chokalingam, coming to you, overall, if we see the first half, across the industry, we've seen softness in terms of where the macro trends are concerned. Even here, the management did say that the third quarter trends do look on the healthier side, and FY27 is something where they'll anticipate better growth going forward. What is your overall take on this particular counter?
Certainly, as you discussed with the management, one has to give credit for substantially reducing the debt. The only area of concern for me is that since the December 2022 quarter till the last quarter, the operating profit always oscillated between 27 to 29 crore or 23 to 29 crore. There's no consistency in growth for such a long period. Even if you take an annualized basis from FY23 till FY24, if you see that period, the operating profit is consistently going down from 149 crore to 120 and then to 105 crore in FY25. So this is a cause of some worry for me. In this background, the stock trading at 48 PE, I am not able to, get convinced. So I would not, give a buy recommendation on this stock at this price.
Okay, so that's the view for Rushil Decor. Thank you, Mr. Chokalingam, for joining and sharing the perspective on all of the stocks that we've discussed on the show. But viewers, that's all the time that we had on this edition of Small Cap Buzzers. Keep watching NDTV Profit, India Market Close, coming up next.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI.
market close here at NDTV Profit. I am Mahima Vajrajani and with me is Sharad Dubey, and I can see Sharad smiling because after a very long time, we've seen markets in a very good shape. Sharad was just mentioning that 26,277 is the life high that we've seen on the Nifty, and we are roughly 300 odd points away from that life high. Yeah, of course, Delhi abhi dur hai, but overall, if you take a look at what's happened today, the Nifty has crossed that 25,900 levels, up 220 points. It's so good to see that overall up 0.9% for the Nifty 50. The Bank Nifty also up 0.5%. Let's try to pull up the Nifty 50 heat map and see as to what are the counters that are pulling that Nifty up. You have Adani Enterprises leading that chart, up almost 5%, followed by Tech Mahindra, TCS, some IT names doing fairly well. You have Adani Ports also doing very well in trade today, up 2.7%. HDFC Life, Reliance, so heavyweights doing their job in pulling the Nifty up. You have Dr. Reddy's, ONGC, Jio Finance, as well as Bharti Airtel, Wipro, HCL Tech. A lot of counters seeing gains of over 1%. Now you have counters like Tata Steel, Tata Motors, but Tata Motors of course on the back of the adjustment also. You have Bajaj Auto, Shriram Finance, BEL. Some counters in the red, but there is more green on that entire heat map than red, and that's good to see for sure. Let's try to pull up the sectoral heat map and see as to how sectors are doing in trade right now. Nifty IT still leading that pack, up 2%, followed by something like a Nifty Auto, which is up 1.3% as well. Nifty Oil and Gas up 1.2% as well. You have your Nifty Infra, Nifty Pharma, as well as you have Nifty Energy, which are up by about 0.9 to 0.7 odd %. But something that's facing a tad bit of pressure, you have your Nifty Realty, which is down by about 0.14%, and Nifty Metal almost flat as we speak. Let's try to pull up the advanced decline ratio and see as to how that chart is looking right now. It's maintained the kind of momentum throughout the day, right? The gap has neither narrowed nor widened. You have around 1,658 advances versus that of 745 decline. So almost 2:1 ratio is what we're seeing on the advanced decline ratio side. Let's try to pull up the mid cap 150 and the small cap 250 as well. The mid cap 150 up 0.8%. The small cap 250 also seeing gains for 0.8%. So almost in tandem with the benchmarks, both the mid cap and the small cap indices. Lastly, let's try to pull up the BSE 500 before I go on to Sharad for the market strategy. You have Tejas Networks topping that chart, Awfis Financials, Sonata Software, GSFC, VMart. All of these counters buzzing anywhere between 5 to 7 odd %. But on the flip side, you have counters like Hindustan Copper, PI Industries, Thermax, as well as Torrent Power and KPR Mills down by about 3 to 5% each. But Sharad, what is the market sentiment like right now?
Well, you really pointed out that there is a smile on my face, and this smile is for the mid cap and the small cap indices also. And Nifty mid cap has actually reached its Delhi as well. It has hit its lifetime high levels. Nifty level support is very important, 25,850. Not much to look at the resistance. If it closes above the 25,900 mark, then we can see another round of up move coming in. Second resistance level 25,975. Nifty Bank also, you can get the levels on the screen. Overall positions are still positive, but any dip now would be certainly a buying opportunity for both Nifty and Nifty Bank. Fourth straight day we are expecting of a higher closing for Nifty, and Nifty Mid Cap 100 index has hit its lifetime high levels. Now interestingly, a data has come is that value emerging is coming in the small cap space, this buying segment. See, the last 3 days there was a big divergence. Let's show the chart, the Nifty Mid Cap 150, and we compare that with the Nifty Small Cap 100 index, and people are asking small cap kyun nahi chal raha hai? And now we are seeing that the small cap has also gathered pace and is going together with the mid cap space. November 7, November 10, November 11, that is where the divergence was happening over the last 3 trading sessions. Interestingly, the FI heavy counters, they are also doing well. When I speak about that, that's private banking and IT, Bihar election results, and the US government shutdown closure. So these two are major triggers for the market, and Tamanna will be getting us important updates also from the poll. And the European markets also surprisingly have opened in the green. So 3-4 days of sustained growth coming in, both domestic boost, global boost coming in the markets. And also to boost our show with his technical knowledge, Kush Bora joins us. A very good afternoon to you, Kush. I'm smiling, the mid caps is smiling, small caps is smiling, Nifty Bank position is looking good. What is there for us now?
Yeah, and add to that, I'm practically almost always smiling. So yes, I think it's a good day for all of us, right? No, but I think you and Mahima started the show on a very positive big bang note. I think let me just keep that energy up. We did speak of a caution on the Nifty for the last couple of days and how closing above the 20-day moving average will boost the Nifty and push it higher. Yesterday's close was just a whisker above the 20-day moving average. Of course, even we weren't anticipating such a big move on day one after that after the closing above the 20-day moving average. Right now, the momentum is strong. The news flow is strong. There is a possibility that Nifty could head towards 26,000 and higher as well. However, there is one small glitch, which is the PCR at 1.35, which is deep into overheated territories. So I agree with what you said in your opening comment, which is any pullback on the Nifty should be taken as a buying opportunity. So maybe another 100 points of dip or so, the risk reward ratio will be extremely favorable for targets of 26,000 and 26,200. Bank Nifty, on the other hand, we've been constantly bullish on, and I've maintained that this is the index that you should go long on, especially if you compare to the Nifty. Within striking distance of all-time highs, won't be surprised that if it takes it out in the coming days and heads towards 58,800 and 59,500 as well. So good moves on this. There was a mild profit booking due because of the overheated nature that came about, and the Bank Nifty started to move up again. So I remain more constructive on the Bank Nifty even at current levels, and Nifty on declines certainly makes a good buy from here on.
Okay, Kush, I'm so glad that you said it's time to, book some profits. I'm so glad you did not say that. But there's Ashok Leyland numbers also flashing on your screen there, slightly, not slightly. In fact, it's almost in line with what the street was expecting it to be. The stock also not doing much, down by about 0.3%. And we have Puneet joining us to give a perspective as to how the numbers have panned out. Puneet?
Well, the revenue is definitely something that's come in line with the estimates, slightly higher by about 20 odd crores to 9,588 crores. Because of that, the margins have actually come in ahead of the estimates that we were working with of roughly about 12.1%. So on both these metrics as well as on profits, it's a beat on all three fronts. It's met revenue estimates, but beaten on the EBITDA margin as well as on profitability. What's also interesting is in terms of profits, we were expecting a number of roughly about 723 crores. The net profits actually come in at 771 crores. This does indicate that while there has been commodity cost pressure in this particular quarter, the company has been able to largely get over on the other side with flying colors, to say the least. In this quarter, we also had the GST impact, where there was deferment of purchases for passenger cars and two-wheelers in particular, but we saw some impact on trucks business as well, but that has come roaring back in the month of October. So while the results on all four numbers, revenue, EBITDA margins, as well as on profits, has come in ahead of the estimates that we were working with, it is the commentary that will be very important, because if the momentum in the MHCV truck business will sustain probably over the next couple of months as well as it has in October, there will be a much more follow-on buying that we can see in terms of Ashok Leyland. But definitely in terms of Q2 numbers, revenue has met estimates, while EBITDA margins and profits have actually beaten estimates for Q2 for Ashok Leyland.
Beaten estimates is what the analysis is suggesting, but the stock not doing much, tanking slightly, now down by about almost 1%. Kush, any view there on the charts for Ashok Leyland?
Yeah, I mean, the stocks, the reason for tanking is, buy on rumor, sell on news. You see the last, 22 odd sessions of movement on Ashok Leyland, and the stocks gained quite smartly from those 130 odd levels. And today it hit that high of 147 odd, right? So some profit booking was par for the course anyway. Structurally, this is starting to turn a corner around, and that's a healthy sign. So I would actually take this tip, even if it slips a little below today's low of 142, closer to that 140 mark, I would take that dip as an opportunity to go long from here on, because as I said, medium term, Ashok Leyland seems to have turned a corner, could rebound from 110 odd levels. And I think, in the couple of quarters to come, this stock could head towards 160 and higher levels.
Well, that's pretty interesting on Ashok Leyland. But Kush, for the last 4 to 5 trading session, you have always given us a buy call and a long call. Today, will you change your opinion today, or will we have 2 buy calls today?
Indeed, and I can tell you I have not shared those calls with you, so that's a very good guess. and just a quick word on something that Mahima mentioned, about profit booking. The last time I mentioned book profits on Nifty, it was at 26,610 sessions ago. So No, but I have two long calls today. One of them is on Alchem Labs, and the other one is on Aurobindo Pharma. Incidental that they're both, healthcare pharma related stocks. We've had a good move. Alchem Lab has always been, one of the stocks that continues to outperform. Even the recent sessions that you see, it's gone against the trend of the Nifty and moved higher. So relative strength is apparent. Volumes are fairly healthy for the last 4 sessions. So on the upside, 59.30 and 56.50. These are the targets and the stop loss that you can trade for. Aurobindo Pharma has now turned a corner, as in the sense that it was reeling under the pressure of the 200-day moving average for a very long time. It's finally broken above the 200-day moving average, and this is the third or the fourth session that it's sustained above that. Volumes also picking up higher. So from a risk-reward ratio perspective, this sets up beautifully for a positional trade. But from a near to a medium-term perspective, 1190, 1210 are your targets. 1150 is where you place that stop loss.
Okay. All right. Coach, the other counter, that's been in focus since yesterday, since the time it announced its earnings, is Yatra Online. I mean, look at the performance in the past 6 months. It's zoomed over 125%. Do you think there's more steam left there?
Yeah, so I think Mahima, it was yesterday while we were on the show that the results came out, and I remember having a discussion around it where I said that the momentum is strong. It's come out of a consolidation phase. You should book 50% and hold the rest 50% with a trailing stop loss at 165 or thereabouts. Today is the day where you book out the entire profit and wait for a further decline. So good moves on this one. Today, the volumes are better than yesterday as well, but it's now getting into those overheated territories. The stock has a tendency of giving you a big breakout and then consolidating for months, perhaps even a decline. And hence the suggestion to start accumulating the stock once it dips to those erstwhile resistance levels, which will now act as support of 170. So closer to those levels, you should start accumulating again. For now, if you have, you can book profits.
And Mahima, you had actually discussed about the change in the business model yesterday. You taught us that now it's moving on to corporate from the consumer. So how does that change?
So, they've done this transition in, different parts, because since past 5 quarters, they've been doing this. And now a lot of their business comes from the corporate side of business. So there, your overall volumes are better, your LTV is better, and your margins are also better. And that's one of the reasons as to why the margins have also grown by almost 300 basis points. In fact, we'll also bring you the conversation with management very soon in this closing show as well. But shifting focus to something like a PI Industries, let's try to pull that up, and it's remained under pressure throughout the day today. And this is despite the company reporting a strong set of Q2 numbers. Let's get in my colleague Varsha to tell us as to what's worrying the investors in this particular counter. Varsha, it's down 5%. What's worrying the investors?
Well, Mahima, it's all about the con call, which was today. So overall, if you see the numbers were ahead of expectations, but it's the con call commentary by management which has, led this the pressure in the stock. So what they're saying is that the global agrochemical weakness still persists, and the recovery is expected to is to be seen from H2 onwards. And the biggest worry point over here is margin. So EBITDA margin guidance they've given is 26 to 27%, which they've maintained. But if you see 29% of EBITDA margin what they've done in this quarter. So that means that going ahead in H2, you may see that margin pressure because of the 26 to 27% of overall margin. So that's the concerning point, and which has led to, pressure in the stock. Well, the current margin strength was driven by favorable product mix, that 29% of margin that they've seen. And what they're saying is that the new products launched in the past 3 years have grown 38% year on year, which is a positive point. But the domestic and export recovery is expected from Q4 onwards. So you may see some bit of pressure in financial numbers when it comes to Q3, because they're expecting that recovery from Q4 onwards. Then the long-term outlook remains intact, but short-term pressure remains, and that we may see in the Q3. And analysts are actually expecting 8 to 10% of earnings cut, which is expected due to near-term headwinds. So basically, the earnings outlook, the degrowth in earnings, and especially the margin guidance that the company has given is what concerning the investors, and that's the reason why the stock is down almost 5% in trade today, because Overall, the numbers, if I were to talk about, the numbers were weak, but it were ahead of the estimates. So, the revenue, net profit was in line, EBITDA was a beat. Now, the margin, the decline in agrochemical exports impacted revenue, but the margin, the good recovery in margin, I would say, and they've maintained that 29% of margin because of the change in the product mix that the company has seen. So this is the plus point, and that's one of the reason why we are seeing that EBITDA beat. While the domestic revenue though declined 13% year on year. Now this was because of the rainfall which has impacted demand overall. Well, the pharma grew. That's a very interesting point. Almost doubled. Pharma grew almost 104% year on year in terms of revenue, and they've maintained guidance for single-digit revenue growth when it comes to FY26, and they're expecting better H2. This will be led by strong Rabi season, but because of the overall commentary that management have given in con call with respect to margin is what is concerning investors, and that's the reason why we are seeing that sharp downtick in stock as of today.
That's pretty interesting, Varsha, but two school of thoughts coming in, but we could see a downtick coming in PI Industries. Kush, question on PI Industries, would this be a good buy on dip opportunity, seeing the numbers going ahead, or would you like to stay away from this agrochemical space overall?
Yeah, so overall, I would like to stay away from the space because, there has been promise but not delivered, and not just once, a few times now. I think a lot of investors and traders are patiently waiting for their costs to come about in a lot of these names. Even PI for that matter, if you see, it had started to pick up steam. It did manage to cross above the 200-day moving average a few sessions ago, but then it faced a rejection around the 3800 resistance mark. And today, on the back of good volumes, of course, because of the earnings announcement that's come out, I think there is a consolidation phase that could continue and a mild negative bias. 3,500 is the support zone on the downside. So maybe if someone is looking to accumulate around those levels, it might just make sense. But otherwise, I would suggest, because there are a lot of other trending stocks and sectors in the market, it's a good idea to stay away from names which haven't really performed in a market that has also picked up.
Interestingly, if you're staying away from agrochemicals, also try to stay away from digital gold. Now this is very interesting. Digital gold may look like a glittering investment, but SEBI has come out with its concerns. So what are the entire details about it? Just to simplify it, what's a digital gold ETF? What should happen?
Right, so Sharad, that's exactly going to be our next conversation, right? As you mentioned, digital gold may not look like it's glittering investment, but SEBI's latest warning suggests that it's not as shiny as it seems, right? The regulator has flagged serious concerns from lack of oversight to hidden risk for investors. Now, what are these concerns? Overall, to take a look at that, we're joined by Nilesh Shah, who will drive this conversation ahead, suggesting our viewers whether, with the kind of rally that we've seen in gold, silver, etc., what should be the right investment mode, whether it should be digital gold, whether it should be physical gold, or whether it should be mutual funds or ETF. Nilesh bhai, thank you so much for taking out the time and speaking with us at NDTV Profit. And my first question to you is the same, right? We've seen the rally already in these counters, and there are analysts that expect that this rally might continue. What would you recommend? The digital gold update that has come in, SEBI warning investors about it. How should one go about it while investing in gold as well as silver?
So one, when regulator says something, it makes sense to listen.
Absolutely.
They have much better view than what an individual or an institution can have. And I have always benefited listening to the regulator. Second, when you are investing in gold, please remember the main reason why gold prices are on up move. The eastern part of the world, like Russia, China, India, these are the central banks which have been buying gold. The western part of the world, like Switzerland, have sold gold. We believe this trend is likely to continue as US dollar weakens, as uncertainty around US policy increases, and most importantly, people have learned that your overseas securities can be frozen, whereas gold, which is lying with you, will remain with you. The bull run of gold is driven by central bank buying, and as long as they continue to buy, we believe gold prices will remain supportive. But please remember, gold does not have intrinsic value. There is no cash flow, there's no rights, there's no bonus, there's no dividend. This is perception of value. It has tasted generations, it has lasted generations, but it is still a perception of value. Our request to investor is to invest in gold, but with limited quantity, a small percentage of your portfolio because of this particular nature.
Good afternoon, Nilesh Bhai. Sharad here. Now, suppose if a newbie comes into the market and he has 100 rupees with him, what kind of gold allocation should he do now? Current situation, gold prices have gone up. And also, if you could just give us, the equity allocation, gold acquisition. If somebody has 100 rupees, how will you break that?
So, Sharad Bhai, obviously everything depends upon risk profile and investment objective. So, we are talking about an average guy who has longer term time horizon. In that kind of scenario, my recommendation will be maybe about 50-55% in equity, about 10% in precious metal like gold and silver, and balance amount in fixed income or REIT InvIT kind of instruments. The best way to figure out what a fund manager is having a view in terms of asset class is to look at asset allocation of their multi-asset allocation fund. Sharad Bhai, if you are rich, there are many private bankers, wealth managers happy to serve you. But we at Mutual Fund have created a product to provide similar service to an average investor for as little as 100 rupee. The professional fund manager decides how much to invest in debt, equity, and precious metal. And that allocation is a clear indication of our views on the market. What I have indicated to investors is exactly what Kotak Multi-Asset Allocation Fund allocation is between debt, equity, and gold, silver. A minor adjustment has been made for an average investor risk profile.
By considering, the kind of gold rally that we've seen in 2025, do you think and outperforming equities in a very large way, do you think this trend will continue in 2026 as well? Because a lot of analysts believe that even 2026, we might see markets consolidating only. Like, we cannot expect the kind of runway that we've seen in 2024. Do you also agree with that argument?
To answer that, I'll have to be friend to Chinese central bank governor. Whatever price he decides will be the price of gold. Please remember that this bull run of gold is driven by global central banks becoming like Indian housewife, buying gold and not selling it. The mining of gold is very, very small, and hence there is not enough supply to meet demand of Indian housewives as well as central bankers. Every investor in gold must be watching on a monthly basis what is central bank activity. If they are buying, most likely prices will go up. If they are selling, in all likelihood prices will fall. If they are not doing much, then prices will consolidate. This is a call on central bank behavior. Prices will move as per their purchases.
Pretty interesting. Nilesh Bhai, we'll speak on equities also. Ek sawal to banta hai equities mein bhi. The entire thing is markets are doing well now. They're factoring in some Bihar election results. Global cues are also improving. Ab aage jate hue kya hoga? What will be next forward leg for the markets now?
So there will be many short-term factors which could influence prices. For example, tariff deal. Whether tariff deal happens, there could be a relief rally. For example, geopolitical uncertainty. We did witness very unfortunate event in Delhi and there will be repercussions of the same. But over longer term, stocks are slave of earning power. Our market valuations are at premium to global emerging market peers. Hence, investors' return over longer period of time will be linked to earnings growth. We believe after 6 quarters of earnings growth remaining in single digit, there is a good chances that earnings growth for December quarter could move into double-digit trajectory. Of course, it will be low double-digit trajectory, and that should be an indicator of long-term return potential.
Fair enough, Nishbhai. Thank you so much for giving us those insights, and I'm sure our viewers will take away a lot of learnings from that conversation. Thank you so much for taking out the time and speaking with us at NDTV Profit. All right. The other newbie on the markets today is Grow. The expectations as per the GMP was that it will get listed at around 5% premium, but it's up 30% versus its issue price as we speak at that 130 levels. The upper price band, of course, was at 100. And, as we slip into a very quick break, we've been talking about Grow and, when we spoke to the Grow management, when it got listed on the exchanges today, the co-founder and the Chief Operating Officer Harsh Jain said that the company's focus remains on expanding its product suite while ensuring a seamless customer experience. Listen to what he had to say exactly.
We think a little differently. We don't think like cross-sell or upsell or anything. We just think that we have to give it access to people. So yes, of course, there are customers who are doing smaller amount of investments, but then there are customers who are doing large amount of investments. There are some customers who are doing maybe 1,000, 5,000 rupees SIP, but you will also see people who are doing a 30,000, 50,000 or lakh rupees SIP also. So once you are a platform and you build on a tech infrastructure, we as a company, we as a platform doesn't need to differentiate or between a low versus a high, because it doesn't cost us to serve all the same. So our focus has always been, can we add more products to our portfolio? Like we were talking about, right? Recently we were working on commodities. We did not have it on our platform, and a lot of our customers started asking, can they have commodities on Grow? And then we started building, and it takes time for us to build because we want to build the best experience.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
we unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something.
Good afternoon and welcome back. You're watching India Market Close. My name is Alex Matthew. With me is Sharad Dubey, Mahima Vachajani. Hi guys.
Hi. Good afternoon. I'm so used to saying morning to you, Alex, for the Awfis Profit show.
I kind of tricked you. I kind of duped you when I introduced you like that.
Yeah.
But anyway, let's look at the markets because it's looking like a happy Wednesday, happy midweek, because the benchmark Nifty 50 gaining about 0.8%, more or less at the high point of the day. Let's look at the broader markets as well. The mid-cap index and the small-cap index pulled us up on the screen, up about 0.7% for the mid-cap index, pull up the small-cap index. It has been lagging a tad bit over the last couple of sessions, but not so today. Up in the green and up quite considerably so, 0.8%. Pull up the advanced decline ratio as well, just to look at how many gainers there are on the screen. And it's a pretty wide gulf between the two. Really, there is earnings on the one hand, and the other hand, a lot of eyes are directed towards Bihar, where exit polls are suggesting that it's going to be a thumping victory for the NDA. Of course, one of the big talking points in the recent past was that voter turnout, and in the past it has suggested anti-incumbency. This time around, that may not be the case. In fact, to talk about what's at stake and why the market seems to be buzzing on the upside, let's bring in NDTV Profit's managing editor Tamanna Inamdar to tell you what you need to know ahead of the counting which kicks in towards the end of the week. Tamanna, Dalal Street is buzzing.
Yeah, you know, if you ask political analysts, they will of course say exit polls are not the full picture. There are a couple of important polls which will come out post 5 p.m. today. C Voter and My Access India have not released their polls yet. Having said that, the street always prices in what's going to happen in advance and is not quite waiting for the 14th clearly. So here's what's happening as far as battleground Bihar is concerned. This is a snapshot of the polls, and about 9 were released last evening after the second phase of polling ended in Bihar. All of them, without a fault, are showing the NDA coming back to power. 122 is the halfway mark. What they are showing is not just forming a government, but a sweeping mandate for the NDA. So Nitish Kumar's jalwa, so to speak, stays in place. The poll of polls, that is an average of all of these polls, also shows 147 seats possibly for the NDA, the Mahagathbandhan at 90, and Prashant Kishore's new venture, his party, seeming to fizzle out entirely. And that really is part of the takeaways if you take a look at it. This is despite and in spite of very high voter turnout. So if you look at some of the key takeaways and what you make of this, they are indicating an even bigger mandate for NDA. And props in that sense goes to Nitish Kumar, because he has been chief minister either with one alliance or the other for the better part of 2 decades, but enjoys the people's mandate even today. And this despite a lot of talk about his health, etc., not doing too well. Prashant Kishore's Jan Swaraj seems to have hurt one and was expected to hurt either the Mahagathbandhan or the NDA. In this case, it's the Mahagathbandhan which has been hurt if you go by what the exit polls are saying. We're still saying that that's not the final result, but it seems like there's a major setback for the Mahagathbandhan. Now the question of the record voter turnout, and we pull up that chart as well, which shows you the voter turnout, 67%. Usually seen as anti-incumbency. In this case, so that's the 2020 number, overall at 55.9%. Now, in 2025, phase 1 was 65%. The total voter turnout is even higher at 67%. Clearly, it's a pro-incumbency vote which seems to have come in. One of the reasons for the high voter turnout is also because the base has shrunk. The Election Commission has undertaken an exercise to weed out duplicate voter names and those who have deceased, etc., from the list. As a result, those who have shown up is now forming a higher percentage coming in. Having said that, phase 2 had almost as many seats as phase 1. The exit poll data that you're seeing, and I'm talking about, is still about 1 p.m. in the afternoon on the day of phase 2. Can things change dramatically is what the street may be watching. But as of now, there doesn't seem to be any discomfort. And maybe that's why you're seeing another reason for the Nifty to celebrate.
Absolutely. That seems to be the big story of the day. Tamanna, thanks so much for that. Guys, as we're speaking, of course, broadly, as we were talking about at the start of this hour, market's looking very good, but there's one stock where you've had the results come through.
Just now.
And normally on a fighter jet, you need to have a seat that has the eject button, and you need to have the seat belts because you're going at G-force. The point is...
That's what the investors are saying.
You're seeing that right now. You need your parachute.
It needs a parachute.
You need your parachute. So, do we have Anushi ready? Okay, let's go across to Anushi just to get a sense of why there's such a big disappointment and what the key numbers are that you should pay attention to. And then we'll go to Neerav Ashar, who's joined us as well. Anushi, take it away.
Right, Alex. So what we are seeing is that, mainly it's because of this EBITDA impact that we are looking at in this quarter. We are looking at the sharp correction in terms of where the stock price is concerned. I'll just walk through the numbers. If you look at the revenue and the PAT numbers, now they are majorly in line with what the expectations were. Now the company had given a guidance of around 8 to 10% for revenue growth for this year, while for PAT also about 10% of growth is doable. But, it's EBITDA wherein we've seen a dip. Even the margin have contracted on the back of this. Now, if you just look at the margins, they came at 24% versus 27%. The guidance, which was there last year about 31% or so, the company did state in the fourth quarter con call itself that that is not sustainable and the margins would be anywhere between 26 to 27% of range going forward. So how H2 would shape up, because there would be higher execution in the third and the fourth quarters for majority of these defense companies are concerned, it would be a key question going forward. But apart from that, a lot of clarification is needed in terms of what's happening now. Just recently, the company has signed up with General Electrical for supply of more engines. This relates to the 97 LCA Mark 1A project that we are looking at, which was roughly at the size of 64,000 crore that we've seen in the quarter. which obviously takes their order book from 1.84 lakh crore in FY25 to about 2.5 lakh crore as we speak. So how execution would pan out is something that we should be watching out for. Apart from that, update in terms of where the AMCA program is concerned is also something that we should be seeing in commentary going ahead for the company. So that is what is happening in terms of margin trajectory. Now increase in provisioning is something that has impacted the margins this time. So that's the overall picture that we are building on. So execution pace and the status of GE Engine's delivery for FY27, where there's more ramp up expected, is something that we should be watching out for. So that's the overall take in terms of where the HAL numbers are concerned so far. Main dip is what we are seeing in terms of where the EBITDA seems to be a miss for this quarter.
So EBITDA seems to be a miss, and that's what the stock is also factoring into, right? It's down by about 2.5%. We have Nirav Ashar of Latin Manhala Securities also joining us. Now, Nirav, as Anushi mentioned, last con call they did mention that the 31% guidance of margins is something that they're not looking at now. Around 26 to 27% is what they're looking at. But this time, the margins have come in at 23.5%. The second aspect that Anushi was talking about was the kind of execution timelines that need more disclosures, right? So what's the view like on HAL?
Good afternoon, and thank you for the invite. As far as HAL's performance is concerned, so there's always going to be that element of uncertainty which is relating to the execution part of the contracts. I think as far as the order book is concerned, there is no shortage of orders as such. I think 2.5 lakh crore order book at this point of time. But I think it's going to be the execution which is going to be a big monitorable, a key monitorable, which is going to be very, very important. And I think in this particular quarter, while the revenue growth is just around 10%, which is reported, I think even that falls short of expectations. And I think as far as the margins are concerned, anything above 30-31% EBITDA margins is considered to be something very, very superlative. And then you can expect better quality net profit margins as well. But I think this is clearly a miss as far as the margins are concerned.
Kush, what's the technical view like? Would you think this is buy on dips opportunity?
Yeah, so I'd wait up a little. In fact, even yesterday we spoke that the defense packs already had a bit of a run and, should perhaps be considered either in terms of profit booking or just holding on to your positions rather than adding a fresh. HAL, I would have said, is a buying opportunity right now because 4,700 is a good support zone. The 50-day moving average also lies there. But the stock is tanking on the back of good volumes and is at the low point of the day. So before you enter, you want the dust to settle, the stock to show a rebound, and then. So give it a day or two, see if 4,700 is held on to, and then perhaps you can consider. If not, then we'll perhaps discuss this somewhere close to the 4,550, 4,600 mark.
Let's pull up the year-to-date chart for HAL just to drive home a couple of points here. The high point is 5127. That was hit on the 16th of May, and you all know what the geopolitical situation was in May this year. Since that point, it has actually fallen to a bit of a trough and recovered from that point. It is down about 3% and pretty much at the low point of the day as we speak right now at 4,700. So it's given up a little bit of ground, but still at elevated levels, some might argue. Let's talk about a few other stocks that are reacting both positively and negatively to results. And there are some that came a little late to the party. Something like a Gujarat Fluorochemicals, which started off a little bit soft, but then it kicked off with gains later. Vanch and Jasmeet are standing by to get us some details of those stocks. Let's first head to Vanch for the positive results. Vanch, what's on your list?
Well, thank you for that, Alex. Firstly, I'll start off with Awfis Financiers. Now, a clearly strong set of numbers coming in from this company. If you look at the net profit, it has been aided by the net interest income, and the spreads have been also aided by the improving cost of funds for the company as well. Lastly, if you look at the credit cost, it has improved sharply for the company. If you look at the earnings, now NIMs have inched up sequentially at 8.04% versus 7.78%. Net profit is up by 11%. NI is also up by 19%. And also, if you look at the credit cost, it stands at 0.16% versus 0.24%. It has inched down sequentially as well. If we look at the brokerages now, Morgan Stanley has maintained an equal weight on the stock with a target price of 1865, and Jefferies has maintained a buy and they have cut the target price to 2130 from that 2175 rupees mark as well. Second on the list is Biocon, again a strong set of numbers. The revenue and EBITDA have been in line. Now the growth was largely led by the biosimilars, and there has been an improved momentum which has been seen in the generic segment for the company. If you look at the Biocon biologics, now it was up by 25% on a YY basis, and they have also launched 4 biosimilars as well. If you look at the numbers, what really stood out was the EBITDA that is up by 22% as well. The third on the list is Global Spirits. Now a very strong set of numbers coming in from the company. Now, if we look at some of the key takeaways from the earnings, we saw the change in the Delhi policy that has impacted the volumes for their prestige and above segment, that is their premium segment. And if you look at the regular and other segment, the margins have been healthy for this segment as well. And lastly, they believe that the Uttar Pradesh will be driving the next wave of growth for the regular segment as well. If you look at the earnings, the net profit stands at 22 crores versus 1.4 crores. So clearly a strong set of numbers is what we are looking at for a Global Spirits as well.
Let's round off the list and look at the bad performers also, relatively speaking, because there are a few stocks that have surprised on the downside. Just to round off the list, and I think we've got some interesting talking points to take to Nirav. What's on your list today?
Well, starting off with the automobile company, the Tata Motors, we look at the numbers, the profit and margins have contracted in this particular quarter. We see weaker operational performance by the company given that margins are under pressure. Now, in terms of operational costs and employee expense are inching up quarter on quarter. If we look at the overall segmental performance, 30% value of market share company acquires from PV and LCV exhaust systems. So they own a 30% market share in that particular segment. If we look at the key numbers, revenue is up 10%, but the EBITDA is down 4.2%. And margins are at 12.8% versus 14.8%. So we see a contraction of 200 basis points there. And even net profit is down to 5.1%. If you look at the other counter, I have Torrent Power. Well, the key takeaways are we see a strong set of numbers coming in here, but the stock is under pressure. While if you look at the overall picture, the increase in contribution from merchant power sales is something that's aiding the EBITDA. While in terms of depreciation, we see higher depreciation costs coming in due to the capex as well as the commissioning of the projects that is impacting on the EBITDA as well. Now, company has secured the order of 600 megawatts of thermal power project from Madhya Pradesh in this particular quarter. If you look at the key numbers, revenue is up 9.8% while the EBITDA is up 24%. The margins are also expanded to 19.1% versus 16.8% in the previous quarter, while net profit is up by 50%. While the next counter is EIH, the key takeaways from this particular results are the margins have contracted while the profits are down 12% and the stock is under pressure. If you look at the overall picture, the weak operational efficiency is something that's driving down the stock's profit and the margins, while the profit from the associates and JV is up 21% in this particular quarter. If you look at the key numbers, the revenue is up 1.5% while the EBITDA is down and the margins are at 25.7% versus 29% in the previous quarter. Even the net profit is down by 12.5%. So these are negative counters in trade today.
Smith and Vansh, thank you so much for bringing us those details. Kush, you heard those names. Any of these names, EIH, Global Spirits, Torrent Power, any of these looking attractive on the charts right now?
Awfis Financiers does. There has been a very long consolidation phase for nearly 3.5-4 months now. It's now starting to break out above that. Anyway, I'm a little constructive on the financial NBFC space in general. So I think Awfis Financiers has a good run. I think the next resistance level comes in at 1780. I think once that is taken out, 1850 also on the cards. So there's a good recovery underway. I heard Global Spirits as well. That's more of a hold. Alternatively, I would suggest a Radico Khaitan in this space. So not amongst the list that that was discussed, but Radico Khaitan does look to be on a very strong footing, and any kind of decline should be taken as a buying opportunity in this stock.
Intraday chart for Biocon as well, and it started off a little bit soft, if at all. There you go. It actually started off a little choppy and heading towards the yesterday's price. And it's actually built quite considerably over the course of the day. 6% up right now. Nirav, I'm pretty sure you saw the numbers. And it seems like the biosimilars are doing well for them. They've launched 4 in the quarter gone by. And generics have not done too badly either. Would you say that this is a turnaround quarter? Things are going to look better going forward for Biocon?
Yes, hopefully this could be the turn of events as far as the company is concerned. And it had a very shaky start in the morning. The stock was down in trade. But I think very strong pedigree of numbers as far as the biosimilars is concerned and the generic segment. I think both these segments have performed quite well. And the company has also managed to clean up its balance sheet by clearing of certain structured debt obligations also. So I think that's also a positive. Plus the focus and the thrust on biosimilars, I think augurs well for the prospects of the company. So I think definitely expect better days ahead as far as Biocon is concerned.
I want to understand your call. Is it a buy at these 400 levels or would you wait for a better price?
Yes, it's a buy at the current levels.
Okay. And potential upside, in your opinion?
I think easily 30-35% in the next 1 year.
Oh, over the next 1 year. Fantastic. All right. Does that also hold true on the technicals is what I want to know, Kush, very quickly. At 407, is the technical also a screaming buy? Because a 30% upside over a year is nothing short of a screaming buy on the fundamentals.
Yeah, even if that comes about, it'll be more of a catch-up rally because 400 is a level that the stock has not been able to convincingly surpass since 2021, mid of 2021. So I would consider this as a trade because it's a long-term resistance zone that is being tested. And if that is broken, then indeed, yes, there could be a catch-up rally and the stock could move higher to about 440, 475 odd levels as well. So about 10-15% move can't be ruled out. Stop loss comes in at 380.
Okay.
View coming on Biocon, but let's move on to Hindustan Copper. The stock has been buzzing in trade. We had seen metals is seeing a significant rally last week, but then profit booking started. The numbers also came in. Is this a technical pullback or profit booking is coming in this counter? I have taken some scenarios in the bull and bear case for Hindustan Copper. The bull case is the government initiatives are coming up for the push of the rare earth minerals, and this augurs well for the company as well. But the bear case is also there. The profit booking is significant in today's counter, and this is seen after the strong Q2 numbers. I saw the operational numbers, they were on the good side, beating a couple of analyst estimates, very less coverage stock, but still, nevertheless, we are seeing a good profit booking. Also, the rare earth driven needs may actually increase the copper prices going ahead. Already the copper prices are elevated. Currently, the global ones are in a cool off mode. But still, nevertheless, there is a high chances that the copper prices might increase. Bear case is that US has rejected India's 50% copper tariff claim, and they have stated earlier that this goes against the World Trade Organization's safeguard measures. Also, interestingly, the stock is up 52% in the last 6 months or so. So we can see profit booking in this counter. But if you are a shareholder for the last 15 years in this company, you made 0 rupees. That means 0 returns coming in. So this counter also checks your patience if you're a long-term investor. Bull case is for a higher volume growth expectations that is expected, the management stated in the press release, while the bear case is that there is a risk of a delay in the leasing of mines since a high gestation period business model is something which the company follows. So this is the bear and bull case for Hindustan Copper. The question is for Kush, Hindustan Copper and of course the metal space as well. There is a big dip coming in today's trade. Is this a good buying opportunity for a positional trade setup?
Yes, I would remain constructive on Hindustan Copper. Mind you that, the stocks had a very sharp run up early September onwards, where it went from 220 all the way up until 360 odd levels. So what you're seeing right now in the last 20 sessions or so is more of a consolidation. I think a pullback, slightly more pullback closer to the 335, 332 levels, and the stock will come close to those medium-term support zones and make a very good buy with a very good risk-reward ratio. So I remain constructive on Hindustan Copper. Positional stop on this one is at 320, and on the upside you could see the stock move towards 355, and then the recent swing high of 365 as well. So I remain constructive. Any pullback, the entry point would just be better. Even now, it's not a bad idea.
So that's with regards to where Hindustan Copper stands. In terms of the entire metal index, if we can try to pull up the 3 months chart if we can for the metal index. Nirav, I'll come to you, especially on some of these names that have been doing very well since the past 2 odd months. Anything in that space that you're liking and would be a buy for you despite of the kind of rally that we've seen?
We had recommended Hindustan Copper and Nalco in June 2025. And I think these stocks have generated around 38 to 40% returns since June 2025. But having said that, I think there needs to be a lot of focus on companies like Hindustan Copper, NALCO, MOIL, GMDC from government side, because they have been languishing from a long-term perspective. Now there is a good opportunity to take advantage of the commodity upcycle and strengthen their balance sheets, because we've seen NALCO, which has delivered a net profitability of around 2,500 crores in the first half of this year. So it's a good time to fortify the balance sheets and do the necessary expansion initiatives. At the same time, we have Hindustan Copper, which has a very nimble balance sheet. It's got a very small balance sheet and really needs to scale up from these levels. There is talk that Hindustan Copper is going to invest 2,000 crores over the next 4 to 5 years, but that is very, very small considering the demand requirements. We have MOIL and GMDC, which have a strong potential to scale up. So the government really needs to act very fast and proactive.
Okay, all right. So that's the view with regards to where the metal space is concerned. But it's that time of the show where we get in my colleague Somit Sarkar, who joins us with all the chatter from the dealing room and as to what he is exactly hearing from these dealing rooms. Somit, what is it that you're picking up today?
Well, multiple stocks that remain in focus given that it has been a great day for the markets, but we have seen some pullback from the 25,900 level, but still sustaining above the 25,800 was the most crucial thing that Nifty needs to do in trade today. Now, if you look at stock-specific action, HFCL is one counter where dealers are indicating that there are some large prominent HNIs that have been accumulating this counter at lower levels in trade today. Yesterday, in fact, we saw a big bulk deal happen where Kotak Mutual Fund also bought a significant stake in HFCL. Dealers are expecting or indicating that there could be a positive corporate development soon when it comes to HFCL. For ICICI Prudential Life, multiple dealing rooms have suggested buy calls to their clients based on technical charts. For 361, dealers are indicating that there are buy flows on institutional desks. Both foreign and domestic institutions have been buying this counter in trade today, and delivery volumes could well be on the higher side for 361. And lastly, when it comes to Hindalco, sell flows are seen on the FII desk at higher levels. Now, for Hindalco, if you look at, they are saying that the company could continue to face headwinds from tariffs and because of narrowing spreads of scrap material. So that could be a key negative for Hindalco going forward, and that's the reason there are some sell flows on the FII desk is what dealers have indicated.
Okay. So important stocks that Somit is highlighted to you. Remember, this is a segment that goes up at this time around 2:45 in the afternoon and also 8:45 in the morning. So you can catch that in the morning as well if you tend to miss it out around the close of the day. But I want to talk about a couple of stocks that are really buzzing in trade, and one of them is Kirloskar Oil. It is one of the biggest gainers in trade today. If we can pull that up, is reacting to the earnings which were pretty strong off the high point of the day, but still 12% higher. There's also IOL Chemicals, which is reacting to numbers. It is up on the back of an expansion in the margins, quite considerable expansion in the margins at that, 10%, 10.5% higher at this point. And there's also Gujarat Fluoro Chemicals, which had a bit of a wobbly start or a slow start to trade, but then it's picked up quite considerably, trading with gains of about 6% or so. Neither of any of these stand out to you, particularly the last one, Gujarat Fluoro. Anybody that looked at Navin Fluorine would have anticipated that, okay, you know, in a similar space, you could see an expansion in margins purely because of the similarity of the business. But there's also other factors that are at play. They've managed to have a resilient quarter on the bottom line front at a time when tariffs have disrupted their top line growth.
Well, I think that there has been a very strong demand as far as refrigerants are concerned. So I think refrigerant gases, etc., there's been a very strong domestic demand, and that has really aided the margins of all these companies. And they have made superior quality realizations with very, very benign raw material costs. So hence the positive impact on the margins, on the EBITDA margins. And most of these companies tend to have very clean balance sheets. So the entire operating leverage, it gets converted into the financial leverage, and you have superior quality PAT margins. So I think as far as all the stocks which you have mentioned, all of them have a certain common denominator, and that is specialty chemicals. And some of these specialty chemicals have done exceptionally well, and there has been a sharp improvement in realizations and demand, and hence the upside.
Indocount is the other one that's flying in trade. It's up 14% as we speak. Kush, anything on the charts that you're liking for Indocount?
As far as Indocount is concerned, I think there is a revival that is underway. Momentum is missing, but that seems to be building up. I think a day or so, if the stock moves higher, you would see a breakout not only on the price but also on the momentum indicators, and that would augur well. So for now, the stock does offer a good risk-reward ratio, having tested the support zone, say the 20-day moving average. So with a positional stop around the 285 mark, and for higher levels of about 340 and 365. I think there is some momentum that is building up. As I said, right now it's slow and sluggish, but could catch up. If a day or two of moves on the higher side does come about.
That's a pretty interesting take on Indocount. Thank you very much, Kush, for giving your views on both the indices as well as the stocks. Let's take a quick break. On the other side, we'll get you the top buy today, sell tomorrow ideas.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get
you're watching India Market Close here at NDTV Profit. The one stock that's been flying in trade since yesterday post its numbers, Q2 numbers, is Yatra Online, up 11% in trade today. To understand as to what's been working in the past few quarters for the company, we're joined by Dhruv Shringi, who's the whole-time director and Chief Operating Officer of Yatra Online, joining us now. Dhruv, always a pleasure speaking with you. We've seen that your stock has been flying in trade since yesterday. Wanted to understand, because this kind of momentum in the counter, of course, justifies the way you've performed in Q1 as well as Q2. What has led to this consistency, first thing, and do you think that this will continue in coming quarters as well?
So in terms of our overall business, given that the business has been moving consistently towards the enterprise side, the corporate part of the business, that has brought in a lot of predictability and stability to our overall business. We've seen that we are carrying a large order pipeline and customer wins which are in the process of being implemented. So as those businesses that we have won, new customers that we've won, are getting implemented, the incremental operating leverage is allowing us to continue to improve our profitability. So we see today, a situation where more than 2/3 of our gross bookings are coming from our B2B segment. And we would expect that this momentum would carry forward, and we don't really see any change in our trajectory. There will be some seasonality. So Q3 typically is a slower quarter for business travel, given the holidays around Diwali, Dussehra, and Christmas, New Year's. But subject to that, we would then expect a much stronger recovery happening in Q4.
Okay. Dhruv, Q1, you saw a top-line growth of around 108%. Q2, around 50-odd%. But your guided range of top-line growth is around 20%. Do you think it's time to revise that guidance?
So as a first step, we have revised our EBITDA guidance, right? We've taken that up from 30% to 35 to 40%. I would rather be in a situation where we are delivering stronger numbers and let the performance speak for itself than be chasing a higher number.
With regards to the total transaction number, the operational metrics that we generally track, that has done very well in Q1. But this quarter, it has been muted, just up about 1%. What has led to that muted growth there?
Sure. So there are two factors which have impacted this. One, on the international air travel side, we've seen a slowdown on the international air travel side on account of the geopolitical tension that's been there in the Middle East and, in central parts of the country, central parts of the world, on account of which we've seen travel to the US and Europe slow down a little bit on account of that geopolitical tension that's been there. So that's been the driver for international travel. Otherwise, what we've done on the overall business mix is try and focus more on higher value transactions where our earnings are justifying to a certain extent the cost of acquisition. So we've been willing to give up some certain low value transactions and focus on improving the quality of the business that we are doing. So we are not trying to chase a volume metric, so to speak of. We are trying to chase a better quality growth in our business.
All right, Dhruv, thank you so much for giving us those insights and all the best for the second half of FY26. But Asian Paints numbers flashing on your screen there, revenue at that 8,531, slightly better than what the street was expecting it to be. We're seeing the stock also slightly rising. You have your net profit also at 994 crores versus that of an estimate of around 894 crores, which is almost a more than 30% uptick in terms of where the net profit stands, and that's a very good news for sure when it comes to Asian Paints. So that suggests that the kind of top line growth that has come in, and with the net profit also growing, there has been some recovery in terms of where the value, the volume stands, because Q1, we saw volume recovery after 4 quarters taking place at that around 3% mark. Of course, this quarter was also hit by unseasonal rains as well as extended monsoons. But it seems like the overall numbers have come in positively. Even in terms of EBITDA, it came in at 1,503 versus an estimate of around 1,304. So 200 crores of beat there. Margins at 18% versus that of an expectation of 16.4%. So beat across metrics, that is your revenue, your margins, your EBITDA, as well as your net profit, and the stock's zooming in trade. Look at that chart. The sudden spike that we've seen in the counter, up 2.5%.
Mahima, what are the levers that Asian Paints could have used to bolster margins? In all probability, we'll see better than expected margins. Is it pricing or is it mix where you have, if I'm not mistaken, decorative paints being higher is beneficial for Asian Paints?
Yeah, but decorative paints has not been picking up for them. It hasn't. So we'll have to see as to whether it's picked up this quarter. And
so what could potentially be the lever?
Mahima, is that the raw material cost angle that crude derivative?
As compared to where Q2 FY25 was, raw material pricing, so crude pricing especially is a big factor where margins had taken a hit, and this is the normative range between that 17 to 18% where they were earlier, and it has come to that normative range.
You know, before we delve a little deeper into these numbers, and I would encourage you to look at the numbers as we speak, but before we do, Shivangi, on the charts, it's up about 2.6% right now, 2.7% rising. Would you suggest a buy at these levels?
Thank you for having me. So we've seen that, of course, there's a lot of frenzy right now, and we've seen Asian Paints, see a move because of the crude oil price movement as well. And from the last 4 trading sessions, we've seen excellent amount of long built up here. So open interest activity has also risen. The stock is at its 52-week high, and we've seen that, these levels were retested November last year, where it couldn't sustain above these zones, after which it tried to surpass the hurdle zones thrice, but it failed to do so. Of course, in the last 2 weeks, we've seen that IVs have also sort of cooled off, and the consolidation and the breakout, which has been seen in the last 2 weeks on the daily frame, is quite positive. So we're expecting this momentum to continue. Of course, we could look for minor dips to add in. But we're expecting 2850 as the next level for Asian Paints with a support of 2700 levels.
What we're seeing is a drop in the raw material cost. My calculation suggests 11%. Maybe I've gotten it wrong.
Yeah, so it's around that 8% mark, the cost of raw materials.
So it's a drop at a time when you've seen a pretty substantial, healthy revenue growth. Nirav, I'll come to you on the fundamentals then. If you've gotten a chance to just listen to the snapshot of Asian Paints, margins at 18% compared with consensus estimates that had pegged it at 16.4%. So considerably better than expected, 4.2% higher now in trade, now making a strong case for stock of the day. What's your initial take on the numbers?
Well, I think very strong set of numbers from Asian Paints, especially considering the fact that this is lean season. There's a seasonal softness in Q2, and the product mix tends to change with every quarter. And typically we have in Q2, there is more focus on products like construction chemicals. There is a focus on products like waterproofing segment, etc., where you don't need to spend too much on the marketing side also, because these are essential nature of products. So I think that could have also boosted the margins. And typically this is a quarter where the decorative paints or the interior exterior paints, generally the demand tends to be on the muted side. So I think the low value economy products where you don't have to incur a lot of expenditure on marketing could have also aided the margins.
Right. I think the reason as to why the stock is zooming in trade is because of the press release that has come out. They've said that decorative business, which has been a laggard for the past 4 quarters, has seen a volume growth of almost 11%. And that's something that the street was, expecting desperately, because home decor business is a large part of that top line growth coming in, and a volume growth of 11% is quite impressive there. Overall, there's improved consumer sentiment with support policy action aided by early festive season. They've said that they've registered broad-based growth across urban and rural areas. Last time, when I spoke to Mr. Amit Singhal, he had said that urban demand still continues to be under pressure, but this commentary suggests that this time both urban as well as rural growth has been at an equal pace. All product categories have contributed to the growth. There's steady double-digit growth in terms of where the industrial segment stands. So even this has continued its momentum. And overall, international business has seen a growth of around 10% on a constant currency basis. And overall, if you take a look at the numbers and the commentary that's coming in, it seems to be a very positive one. They've said that the growth was accelerated by enhanced performance in automotive and industrial protective coating as well, where overall value growth was at around 6.7%. So, you know, that's the overall takeaway with regards to where Asian Paints stands. The stock still zooming in trade as we speak, up 4.5%. But clearly, I think it's the quarter for Asian Paints after, you know, being muted for the past 6 to 7 odd quarters.
So I was asking about those levers. One of them clearly is the decorative paints. The other is the raw material cost. We've talked about it being 11.2% lower.
Yeah.
But more importantly, if you look at raw material cost as a percentage of sales, and I'm looking at primarily that first line item, which is 7,335 odd or 36 odd crore rupees, it stands at 41.75% compared with 49.76%.
That's a very significant amount.
It's a significant drop.
And one more thing is the competition part. Recently, Nomura had an upgrade also. The target price was set at 3,100 odd rupees.
Correct.
That means the larger competition, that's also getting discounted in the stock price. I think these three are the important factors where we are seeing a significant up move in Asian Paints now.
Would Nirav be buying at this level is a question that I'm asking. Nirav, of course, the earnings have been strong. Berger was a little weak, if I remember correctly. And you have an exit from the corner office in another new entrant. So somebody else's woes are possibly your gains. In this case, Asian Paints is building on those initial gains that we saw earlier in the month, if I'm not mistaken. Would you be a buyer at this level?
Well, definitely, yes. It warrants a buy, considering the fact that the performance has been quite superlative.
Commentary from the management today when the con call happens at 5:30 is going to be an interesting one. One with regards to where volume growth is concerned, as to how this has come in, right? What is it that they've done differently this quarter? Because this quarter ideally was supposed to be impacted by unseasonal and elongated monsoon season. And secondly, competition is something that at least I would want to hear from the management as to whether it's panned out the way the street was expecting it to be. So that's with regards to where Asian Paints stands. But Shivangi, what about the benchmarks? You know, with Asian Paints, of course, zooming, the benchmarks have also been doing very well in trade today. You know, at the start of the show, all three of us were smiling with the fact that, you know, it's been a good day of trade. What's the view like when Nifty 50 and the Bank Nifty is concerned?
Absolutely. What a recovery from the last three sessions. And even after the gap up today of more than 140 points, we've seen that Nifty index has held on to the higher zones. And for most part of the day, the propensity to buy was very strong by the bulls. And any minor dips were actually consumed. And we've seen consolidation towards the end. But then again, we are closing at a good note, and we're expecting this momentum to continue towards 26,000 and then 26,150 marks. Of course, support would be 25,700 to watch out for as the next level. And of course, Bank Nifty has been one of the next pillars that has been strong as well. But the star performers for me have been the smaller banking names which have contributed to the index. Although Bank Nifty has seen profit taking towards the second half of the session, but the overall broader market is still standing strong because of IT and pharma stocks which are holding in and showing outperformance today as compared to the other sectors.
Take coming in, and interestingly, small cap index is also participating after 3 days of having an absence when mid cap indices were actually going up. But moving on from the markets, let's go into the macro space as well. All eyes are there on the October inflation data. Economists are penciling in a sharp moderation led by easing food prices and a drop in core inflation. Vishy joins us with the details. Vishy, what are the important aspects to look at? Because now that will dictate the RBI's next move as well.
You know, Sharad, the expectation is a 0.4% on the headline inflation number for October, and that's a record low by all measures. That 0.4% is being supported largely by a deceleration in food prices, specifically on vegetables like your tomato, onion, and potato, while also on pulses and edible oil. These are primarily leading to that dip in the food prices. Apart from that, you're also going to see the benefits of the GST rate cut that happened back in September, end of September. That will play out in the October data as well. What you will also want to watch out for is the impact that gold prices have had on the overall inflation. Now, according to what economists are estimating, core inflation will come in about 4.1% compared to 4.6% in September. While if you remove the gold prices out of that equation, the core inflation ex gold is coming at about 2.6%. The expectation is, of course, also that this deceleration is likely to continue with a full year inflation coming in, FY26 inflation coming in at 2%, which is against the RBI's expectation of 2.6%. Similarly, for this quarter, the October-December quarter, it's expected about 0.7% compared to the 1.8% expectation that the RBI has. So this also means a lot for the growth. While there is an expectation that the RBI will cut interest rates further by 25 basis points in December, we are expecting to see slower GDP growth by the end of the financial year, at least on the nominal front, because, of course, your inflation numbers are coming in lower.
All right, so watch out for that. Lowest in history is the CPI number that is expected, and will that push the RBI to take account of that? Of course, it's expected to pick up in the start of the new calendar year CPI, and that will have a bearing on monetary policy as well. By the way, so let's revisit Asian Paints, because this is now by far and away the stock of the day, up 5.5% right now and building on those gains. Pull up the Nifty heat map, because I would hazard a guess to say that it has now eclipsed Adani Enterprises to become the top gainer on the Nifty 50. That is, in fact, the case. Adani Enterprises not too far behind, though, gaining about 5%. And you see a number of those tech players, the frontline tech players in that top line, where you have Tech Mahindra, which is about 3.4%. An interesting tie-up that they've done, a deal that they've done in the recent past that seems to be holding them in good stead. TCS is up about 2.6% as well. And you have a couple of others that are also doing well. In the second line, you have Wipro, you have HCL Tech, you have Infosys as well. Reliance Industries off the high point of the day, and maybe to a certain extent you can say that that is what has caused a bit of a drop from the top. Pull up the intraday chart for Reliance Industries. It has dropped from gains of about 2% to gains of about 1%. So that is what is causing a little bit of a wobble at the top for the Nifty 50. But really, Asian Paints is the story. I don't want to take Shivangi's view on Reliance Industries of it all, because in the recent weeks, you've seen an up move for this particular counter. It's probably played a little bit of catch up. What are the levels to watch out for on the upside? Would you suggest a fresh buy at these levels?
Yes, so Reliance has been, one of those counters of lately which has slow and steadily moved higher. It's been inching higher from the last, 4 odd weeks, and we've seen a gradual up move here with volumes, which indicate that, sustainable move could be expected. And of course, the reflection can be seen in the strength that is there in the broader market and the Nifty index as well, because of the the heavy weight. But we are expecting sort of a slow and steady move again. And, the immediate levels that we could look out for is 1550 levels. And the support would be at 1490 zones. So again, Reliance is a buy, but we are seeing that, even today, from its high, it has rub off a little bit because of the profit taking, but overall structure is quite positive for this one.
Reliance Industries. It is that time of the show where winding down, 9 minutes now to the close. Shivangi, any ideas that you might have, BTST or STBT?
So for BTST, I've chosen Bharti Airtel, which is holding quite strong, one of the most strongest counter in the entire sector. And we've seen that, the stock has bounced from its 50 daily exponential moving average. We've seen weekly basis as well. It has respected its upward sloping channel. So sound structure. And from the last 3 days, we've seen momentum adding up because of the open interest, adding here. So we're recommending a buy here with a target of 2150 levels. And you could see a support at 2050 levels.
Okay, all right. So Bharti Airtel is something to watch out for. You know, the worst performer currently on the benchmark Nifty 50 is Tata Steel. It is losing about 1.3% ahead of the presentation of its Q2 numbers. But why is the street a little bit concerned about that? Let's bring in Vansh to tell you about the key numbers to watch out for when it posts numbers after market hours. Vansh, what are the headline numbers and what are the key details that you will be looking forward to in the numbers?
Well, thank you for that, Alex. The numbers are due past post-market hours for Tata Steel. In fact, the Tata Steel India and Europe operations are expected to post better operating performance. And if you look at the Netherlands operations now, they are expected to be aided by the lower coking coal and the iron ore prices as well. If we look at the Indian operations, the higher volumes may be offset by the impact of softer realizations for the Indian operations as well. If you look at the provisional numbers that the company has given, that the crude steel production was up by 8% and the delivery volumes for the Indian operations were up by 20%. This were aided by the improved production and the stable demand coming in from the domestic market. Also, if you look at the steel price trends in the Q2, now the steel prices have been down about 4 to 5% on a sequential basis as well. If you look at the financial estimates, now the analysts are expecting the revenue to rise 5%, EBITDA may rise 10%, and the margins may rise 6 basis points. And lastly, if you look at the net profit, it is expected to rise by 36% as well. If you look at some of the key important factors to watch out for, it would be the steel realizations and the cost guidance by the company, the volume guidance, and lastly the updates on the expansion projects is what we are watching out for in the management commentary as well.
Okay, all right. So that's the view on Tata Steel. By the way, you have Asian Paints that is currently up 6.3%. And I was just looking at the numbers. At the start of November, this counter was at 2,510 or thereabouts. 2,510. It is now at 2,821. Just a few days, just a few sessions is what has led to this point. Let's bring you the details of why the street is so buoyant when it comes to Asian Paints. And Mahima standing by. We took you through the numbers in a hurry. She's had a chance to look at it in a little more detail and she's here to tell you about that. Mahima, what stands out?
Right, so 5 key takeaways, right? First one being beat across metrics is what we've seen. It's beaten the street estimates in a significant amount of fashion. The net profit number was expected to be at that around 694 crores, but there's a beat of around 300 crores. So beat across metrics despite of extended and unseasonal monsoon. Second, margins have improved sharply on account of the kind of easing of raw material pricing. Net profit has also seen a growth of 40% versus last quarter. What we saw was that the net profit had halved. With regards to the decorative business, which has been the laggard for the company for the past 5 to 6 odd quarters, this time has registered a volume growth of 11 odd percent. Now, whether this is overall improvement in terms of sentiment, in terms of demand, whether it is because of GST rate cut or festive season is something that will have more. We'll get more details as to when the con call comes out. The fourth key takeaway is that the raw material prices have been down 8% and that has largely led to the kind of margin uptick that we have seen, and it's come to the normative range of that 18% mark, and that is something that the street has most certainly liked. Lastly, there has been a broad-based growth both in terms of urban as well as rural centers is what the commentary is coming in from the management. Last few quarters we've seen that the rural demand was intact, but urban demand was something that was impacted in a large way. And hearing management say that broad-based growth is witnessed both in urban and rural centers has come in as a relief for Asian Paints, and that is why we've seen the counters zooming in trade. Now, I think, Alex, the next part, like I mentioned, that I'll be looking at will be the commentary coming in on competition, because last 4 quarters, management has alluded to the fact that competition has remained intense and has seen some slip in terms of where the market share also stands. But I think this quarter, they might have gained market share, and that is something that I would want to hear from the management.
Absolutely. This stock has tested patience of long-term investors, but it has redeemed itself somewhat since the start of October. Pull up the year-to-date chart 2025 for Asian Paints. Gains of about, 16 odd percent or thereabouts. But if you look at from the start of October, the gains are 20+%, which is quite incredible for this particular stock. So there you go. Okay, so this year is 24%, but look at that spike from the start of October. It's absolutely phenomenal if you manage to get in at that point. Nirav, you've already said that it warrants a buy, but I'm just wondering, based on the fundamentals and based on what you've seen, it's both a function of the raw materials and a function of the mix. The decorative paints picking up is indicative of an urban recovery. Would you suggest that there is considerable upside? How would you look at it at this point? How much upside is still in the tank?
Well, I think one can expect at least a 20% upside from the current levels, but I think we have to see the numbers in more detail. But I think it's been an all-round beat, and that is what is very, very heartening. We've seen an improvement in the volumes. We've seen, of course, the raw material costs have been quite benign. So that has also aided the company. And there are more triggers expected going forward because the company has invested heavily in certain raw materials, critical raw materials like VAM, VAE, where there's going to be backward integration, and this is going to aid margins in a very, very significant way. In addition to this, there have been certain investments in a key project in Dubai as well. So I think all these factors are going to contribute to margins in a more healthy way going forward.
All right. Thank you very much, Nirav and Shivangi, for joining in, giving your both technical and fundamental perspectives. But this has been a very strong day for the markets. Nifty actually holding up its gains also in day trade. Slight sell-off happening in the last 20 minutes. That's why you're seeing Nifty Bank. There kind of a slight dip coming in. But overall, you see Nifty has been holding that 25,850 levels. Now let's see overall how the heat map actually pans out. And we see the Asian Paints taking that gain. It's up almost 6.5% odd. Adani Enterprises close to it. IT counters doing really well for the third straight session. It has been a strong day for Nifty. If the selling is there in the Tata Group counters, Tata Motors CV and Tata Steel. Sectoral gains also. Let's see which are the important sectoral gainers and losers. In the chart, largely a sea of green coming in. IT Auto leading the pack. Slight profit booking increasing in the metal and the realty space. And interestingly, let's look at the advanced decline ratio, how it has actually panned out. And largely throughout the day, we have seen broader indices doing well and have maintained that. And you can see it's roughly 2:1 in favors of the bulls. Let's get in the Nifty Mid Cap Index and the Nifty Small Cap Index to see how the movement has happened. Largely, it's ending near the day's high levels. And the Nifty Small Cap, if you look at it, that has actually picked up after 4 days of divergence with the Nifty Mid Cap. That means value buying is coming in the small cap space. Also, now let's look at overall how things are panning out when it comes to the BSE contribution. The names include Asian Paints, Nifty Company, Gujarat Fluoro, strong numbers coming in. But in the fall, we are talking about Hindustan Copper, PI Industries making the list, and even Torrent Power and Thermax based on the earnings impact. But net, there's a lot of action there today. Also, we're looking at what to watch out for tomorrow and today's post-market earnings. There'll be the important numbers to look at. Inflation rate expected to come out at the lowest numbers. Fed speech in US, which will give you the view on what will be the Fed's rate cut. Markets are expecting rate cuts to happen, and API crude, stock exchange numbers will also be coming. So oil is also very important to look at. Interim dividend, these are the stocks which you should focus on. And earnings, that's very much important as well. We'll be focusing on that as well. Post-market hours as well as tomorrow. Prestige Estates, GIC and IRCT will be the stocks where our action would be there. And also Cochin Shipyard, Endurance Tech and IGL also make it to this list. Earnings apart from this, if you look at tomorrow, Eicher Motors is pretty much very important. Muthoot Finance, especially their commentary on the gold loans, and Samil also are the important stocks where we will see action happening. From the auto space, Hero MotoCorp will be very important. And as we come towards the end of the earnings season, largely it has been better than street estimates as well. So their commentary will be important. Primary market action continues. Fujiyama Power Systems, their IPO is set to open. And this entire week, we'll have one company every day coming with an IPO opening. Shares to exit the anchor, this includes Tibo Tech, which is roughly 20% of the total float. So this is the entire wrap at India Market Close. You are watching NDTV Profit, but do stay tuned because Himangshi is coming with the market buzzers.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show and let's see how the markets have fared today. So markets have ended the day on a higher note. Nifty ends above 25,800 levels. Sensex closes 520 points higher. RIL, Bharti Airtel and TCS add to the rally. 32 Nifty 50 stocks advance in trade. Let's also look at the sectors. So sectoral action largely mixed. Nifty IT continues its winning streak, followed by autos, pharma and media. Nifty Realty top sectoral loser. The IT sector, viewers, runs ahead with a strong momentum. So a softer stance on the H-1B visas lifts the sentiment, while easing the US shutdown fears boost the client's confidence. Now, long position signal recovery, valuations stay attractive and margins have stabilized. A weaker rupee supports revenues and also Infosys leads the rally with buyback news. Let's look at some key earnings now. BSE delivers a strong second quarter performance. Index option volume surge powering revenue growth, while transaction charges rise sharply. Expense controls keep the margin steady and market share in the index options climbs further. Overall profits improve and margins hold firm, underscoring disciplined cost management and a solid operational show. Next up, we have Fortis Healthcare, which has posted a healthy second quarter performance. Hospital business revenue has risen on stronger bed occupancy, while the oncology and renal sciences deliver robust growth. Average revenue per occupied bed improves and international patient inflows add the momentum. The diagnostic business also expands, underscoring broad-based strength across the portfolio. So overall, Fortis shows resilience with steady occupancy and also rising specialty revenues. Biocon delivers a steady second quarter performance. Revenue and EBITDA come in line with estimates, though profit falls short. So growth is led by biosimilars, with momentum also visible in generics. Biocon Biologics posts stronger double-digit growth and also launches 4 new biosimilars, strengthening its portfolio. So overall, margins hold steady and net profit returns to positive territory, marking a turnaround from last year's loss. Next up, we have Gujarat Fluorochemicals, which has posted a strong second quarter performance despite a tough operating environment. Now, tariffs weigh on sales growth in the fluoropolymers and fluorochemicals, with the quotas and seasonality adding pressure. Now, yet sharp margin expansion, is driving a 48% jump in the profit after tax. So battery materials business continues to report EBITDA losses, but overall, the bottom line growth underscores resilience in a challenging quarter. US Adani Enterprises has announced a massive rights issue worth nearly 25,000 crores. Shareholders are eligible as of November 17, can actually subscribe at a steep discount price of 1,800 rupees. So the offer runs from 25 November to 10th of December, with entitlements credited on 18th November. The issue ratio is 3 shares for every 25 held. The company says that the proceeds will strengthen its balance sheet and also fund the capital expenditure. Viewers, coming back to the earnings, so PI Industries has reported a softer second quarter, with revenue and profit dipping but still beating the subdued expectations. Margins eased to 29%. The guidance is maintained at 26 to 27%. Analysts flag an 8 to 10% earnings cut as global headwinds in the agrochemical space persist. Recovery is expected only in the second half of the calendar year 2026, keeping near-term sentiment cautious. Torrent Power has reported a strong second quarter performance. Revenue has risen nearly 10% year-on-year, while margins have improved to above 19%. Merchant power sales add to EBITDA strength and profit after tax surges more than 50%. So the results highlight robust operational momentum and disciplined execution in a challenging energy market. Thermax stays under the pressure in the second quarter. The company reports revenue degrowth for the second straight quarter, and this is led by the weakness in the industrial infrastructure segment. So margins have slipped to their lowest in 5 quarters, with profitability hit by cost overruns in the infra projects. Input costs show no significant impact, but overall the performance reflects challenges in the execution and also margin management. Belrise Industries has posted a strong second quarter show. Revenue rises nearly 14% year-on-year, with margins improving to above 12%. So profit after tax surges more than 80%. This is aided by lower interest costs following IPO proceeds. However, the operating cash flow declines sharply due to higher other assets. So overall, the quarter highlights solid profitability despite pressure on the cash generation. Now on to some corporate action. Panacea Biotech secures a significant order win. The company receives a contract worth 41 crore rupees for the supply of its EZ5 TT vaccine. Deliveries are scheduled between calendar years 2026 and 2027, strengthening visibility for future revenues. So the order underscores continued demand for Panacea's vaccine portfolio and also adds momentum to its growth pipeline. Paras Defence secures a major order from the Defence Ministry worth 35.7 crore rupees. So the company will supply portable counter-drone systems with execution slated by May 2026. In addition, its subsidiary bags a separate order of nearly 4 crore rupees for radio frequency jammers. So these wins highlight growing demand for the indigenous defence tech and also strengthen Paras Defence's order book. Next up, we have Bharat Forge. So its defense arm, Kalyani Strategic Systems, has secured a major order, worth 250 crore from the Defense Ministry. So the contract is to supply an underwater system, strengthening the company's presence in the advanced defense technology. So this order adds to its growing portfolio and also highlights the government's push for indigenous solutions in the critical defense equipment. Vari Energies has secured a major domestic order for the supply of 360 megawatts of solar modules. So the win underscores strong demand for renewable energy solutions and also highlights Vari's growing presence in India's solar sector. With this order, the company strengthens its pipeline and also reinforces its position as a leading player in the clean energy. Next up, we have JSW Cement, which strengthened its green energy push. So the company signed a power purchase pact with JSW Green Energy 15 to source solar power from a captive plant. And alongside, JSW Cement will acquire a 26% equity stake in JSW Green Energy for nearly 22 crore rupees. So the agreement is signed on November 11 after board approval, underscores the group's commitment to sustainable energy and also cost-efficient operations. Awfis Financiers has delivered a strong second quarter performance. Net profit has risen 11% year on year. This is aided by robust net interest income growth. So margins have improved quarter on quarter, while the credit cost, if we look at, have fallen sharply. So the company's assets under management expand 16%, and this is supported by lower borrowing cost. So overall, if we look at, the quarter reflects healthy spreads and disciplined execution. Let's look at Global Spirits, which has delivered a strong second quarter despite policy headwinds. So revenue has dipped slightly, but margins have expanded sharply. Now, this is driven by healthy performance in the regular and other segment. EBITDA nearly doubles and net profit surges to 22 crore rupees from just over 1 crore rupees last year. With the Uttar Pradesh also expected to drive the next wave of growth, the company remains on a firm trajectory. Viewers, visa on arrival for medical tourists spark fresh interest. Commerce Minister Piyush Goyal floats the idea at the CII Health Summit, suggesting easier entry for overseas patients. So the facility may extend to the US and most European nations, where the CII asked to frame certification norms. Hospital chains stand to benefit as international revenues already form a sizable share for Fortis, Max and Apollo and Global Health. US Finance Minister Nirmala Sitharaman has held a pre-budget consultation with MSME stakeholders in New Delhi. And the meeting focused on challenges faced by small businesses, including access to credit, taxation, and also ease of doing business. So senior officials joined the discussion and part of preparations for the Union Budget 2026-27. The MSME sector, which is a key driver of jobs and growth, places its demand on the table as the government shapes the fiscal priorities. On to some national news now. The stage is set in Bihar as exit polls point to the NDA holding its ground. So most surveys give the BJP-led alliance a clear edge, while the Mahagathbandhan looks short of the halfway mark. So voter turnout has been the highest ever, showing strong public engagement. The final word rests with the Election Commission, with results due on 14th of November. On to some global news now. Donald Trump appears to be softening his stance on H-1B visas. So in a recent remark, he admitted America does not have enough talented people and must rely on skilled professionals from abroad. So this marks a shift from his earlier tough position on the foreign workers. Indian tech talent, which forms the largest share of H-1B applicants, could benefit if rules are eased. So for now, it signals a possible change in the US approach to global talent. With that, viewers, wrapping up this edition of Market Express, but with an exclusive. Nisha Podar in conversation with Grow's CEO and co-founder Harsh Jain following the company's stellar 14% premium listing. Listen in.
We have with us Mr. Harsh Jain, who is the founder of Grow. Harsh, stellar listing by Grow. So what do you have to say about the many investors who have actually got confidence in Grow's growth for their own investments?
See, we build Grow for the customers, to solve their problem, how they can invest and they can build wealth over time. Now with this, I think we're in an opportunity where a lot of our customers are also able to become our shareholders. It's a very important moment for us.
So now is the critical time also, Harsh, to also explain to your new investors that it's not just Grow, but even their portfolio and their investments is going to grow. Now you also don't have the compliance of giving the future outlook. What lies ahead in terms of growth proposition? I know you're expanding and diversifying into several segments, but give us a sense on your main bread and butter business growth propensity from here on.
No, so see, we see, India is a huge market with the penetration today. What we see is barely 2-digit, right? If you look at every developed countries, there's so many people in the country who have an access to capital market through different vehicles. It is mutual funds or ETFs or direct equity, even bonds, different products. And in the last 5-10 years, what we saw was the level of awareness and the education went really, actually the content penetrated across.
So Harsh, we have had this conversation before that the confluence of COVID and after demon, the capital market, investments, these two factors together created the right place for you.
But not really.
And of course your tech stack and you took advantage.
So what I want to tell there is that it is not just COVID or one event, because it changed the way people think, and it's not going. I mean, our strong belief is that change of thought is not going. So from here on, we see that the penetration should go. Really, it should continue. We don't need to have another COVID, and I mean, obviously,
now that
we don't need
stickiness
that.
is there.
Yeah,
now the stickiness is there. It's a way of our life.
Absolutely.
Now, regulatory overhang is one of the biggest risk factors, and the second one is obviously the market momentum, for which I will come to you later.
Sure.
But first, the F&O trading, and that has had an impact on your broking business. A large part of the broking business revenues were coming in from F&O trading. How do you see the impact? And also, very recently, government has come out with very positive statements where finance minister also said that we don't want to ban this segment, and even SEBI chairperson has said that we don't want to take any major decisions because huge investments are involved. Does it give comfort, and what are you expecting from the regulator, and how will it impact your business?
So first of all, regulation is not a risk in our business or in general capital market in the country. See, the way we see is that if people in India have to have access to capital market through whichever products, it's a derivative products or investing products, it's a passive products like an ETF, we are the platform which is giving them access to the capital market, and regulators also want to do the same thing. We're also doing the same thing. They want to expand the market, we want to expand the market. They want to make it safe for the individual, for the retail investors, and that's, they're our customers. We want to make it safe so that they retain with us. Sticks with it.
That is part and parcel of the business, but how is it impacting your performance, and therefore the shareholder return is what I wanted to understand.
No, absolutely. See, we are in multiple, we offer multiple products on our platform, and each product has its own business model, its own pricing, its own revenue, and there is a penetration that works on a platform. Like if 100 customer comes, how many of the customers are doing stocks, how many doing trading, how many are doing ETFs or mutual funds or different products. And each penetration will definitely change over time with the market conditions. It will change over the customers' conditions also, because they start their journey with one of the products and then they evolve, they get into different products. And the behavior of this, that's what the platform gives an advantage, because you don't need to do an SIP every single day. You don't need to, do trading every time. You can do investments and then you can buy stocks for long. So that whole platform gives a comfort to the customers to stay for long time.
All right, but going forward, regulatory risk is a big one for your sector. And the second one is the overall momentum of the market. Now, since your inception of the company, 9.5 years, we have been in a fairly bull market. You haven't seen the Lehman crisis. Now the globe is also getting into uncertainty with tariff situation. We have seen some dampening of sentiment. So the dependency on these two factors, how at your end you are safeguarding the business for value creation of such a large number of shareholders for being able to tide over different situations like these?
So, I have seen those crises as an investor. I started investing in 2003, 2004, and I've seen some of those crises as an investor. But yes, definitely, we have had good years in the past, and on a longer term, I think we'll have good years as a country is growing, scaling. There will be for some quarters and some months where the market will go up and down. But as a business, see, what makes us resilient is the power of offering multiple products to millions of customers. So if you see that the markets are not very bullish and they are going downwards or sideways, you will see less people want to come in space, and there will be lesser new acquisition. But then you will see a lot of people who are existing are increasing wealth creation in their life, right? They are having more savings, so they participate even more. So the penetration, from a business point of view, the penetration amongst the existing customers goes up. So it balances out over time. I'm not saying that every month, every day is going to be exactly same, because we are in a capital market. We have to live with the fact that there's going to be movement, and this is part of it.
But in terms of other verticals of growth which are not heavily dependent on market momentum, how are you growing that, and what is the future potential of growth for the investors?
Yeah, so there are a lot of businesses, new businesses that we are, I think we've already talked about it.
Yes.
See, when customers graduate from how they started their investing, now a lot of our customers are becoming affluent, and their need of the products and the services are also evolving. A lot of them want portfolio management services, they're looking for alternate investments, they're looking for advisory in some form and factor, and a lot of products which are, so far have been for HNIs.
Yes.
And we are building wealth. I think we already spoken about it. Wealth is one big offering that we will be.
So Fisdom was
required.
Yes.
Correct.
So Harsh, now wealth is not a digital first business so far in our traditional market. How are you going to crack that space with only digital approach? Because we have many big players in the wealth management business who have a very close network and relationship with big clients. So the competition is very stiff.
So we look at things in a very different way. So we don't think it from the supply or the manufacturer or the financial point of view. We see from a customer's point of view. Are our customers digital? If they are digital, they want services to be digital. They want the experience to be digital. If it is not done, then we'll do it. But then the idea is that we should understand what customer needs and how their behaviors are changing, and we should build our services and our offering accordingly. And that's been the way Grow has been built.
Right, and when we talk about your acquisition cost because of digital play, that is on the lower side. You are doing cross-selling, and how I understand your business is also that you are using the technology to cross-sell the right products to the right people given their customer behavior. Now when we look at this particular aspect, the cohort has been the new age first timers in the market, the ones who invest a lesser ticket size also. How are you going to increase and upscale yourself because into a much higher margin play and a much larger play than more of a volume play as we are seeing with your pan-India presence?
See, we think a little differently. We don't think like cross-sell or upsell or anything. We just think that, we have to give it access to people. So, yes, of course, there are customers who are doing smaller amount of investments, but then there are customers who are doing large amount of investments.
Right.
There are some customers who are doing maybe 1,000, 5,000 rupees SIP, but you will also see people who are doing a 30,000, 50,000 or lakh rupees SIP also. So once you are a platform and you build on a tech infrastructure, we as a company, we as a platform doesn't need to differentiate or between a low versus a high, because it doesn't cost us to serve all the same. So our focus has always been, can we add more products to our portfolio? Like we were talking about, right? Recently we were working on commodities. We did not have it on our platform, and a lot of our customers started asking, can they have commodities on Grow? And then we started building, and it takes time for us to build because we want to build the best experience. And once we have it, there will be few customers who will use it. Not everyone would.
the NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
The Nifty and Sensex gained for the third consecutive day on optimism around India-US trade deal and upbeat earnings. Nifty hits 25,900 intraday with Nifty IT as a top sectoral gainer. Hindustan Aeronautics closes over 2% lower. Second quarter revenue and profit meet estimates while margins miss expectations. Revenue growth in line with FY26 guidance of 8 to 10%. Adani Enterprises gains over 5% after the company approved rights issue of 25,000 crore and set the record date on the 17th of November, sets a ratio of 3 right shares for every 25 shares held. Tata Motors Commercial Vehicles makes a strong debut, lists at 28% premium on its implied value. Listing follows the Tata Motors demerger that took effect from the 1st of October. Grow ends 31% higher after listing at 14% premium. Company co-founder Harsh Jain tells NDTV Profit that the company is focusing on giving multiple services to customers at one place. The police takes 9 more suspects into custody in connection to the Delhi blast. Prime Minister Modi meets the victims at LNJP hospital after returning from Bhutan. He will hold a key security meet soon. Trump defends H-1B visa plan after a fee hike, says US does not have enough talent and it has to bring it from around the world. Hello and welcome. Good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we catch you up to speed on the latest when it comes to markets, national as well as international stories. Let's begin with checking how the markets fared first. Benchmark indices rallied nearly 1%, with Sensex climbing over 700 points in trade today, and the Nifty reclaimed its 25,900 mark. At close, Sensex was up above 500 points at 84,460 odd levels, whereas the Nifty 50 basket ended about 0.7% above 25,875 levels. Sectorally speaking, except for metal and the realty sector, all other sectors closed in the green. My colleague Mahima now joins us with a detailed market roundup of the day.
So it's been a great day for markets for sure. We've ended up well above that 25,800 levels, and now we'll be watching out as to how the next two sessions of this week take place. But it's been a happy day of trade for sure. The Nifty 50 largely led by three counters. Asian Paints coming at the last hour, taking away a fair share of that credit, up 4%. For IndusInd also up 4%. And Adani Enterprises also up 4%. The broader markets also have been almost in tandem with where the benchmarks have performed. The mid cap 150 gains were led by Biocon and Gujarat Fluorochem. The small cap 250 gains were led by Kirloskar Oil as well as BLS International. All sectors have seen a good movement in trade today. End on a mixed note, of course. Overall, Nifty IT emerged as a top sectoral gainer, gains led by Tech Mahindra, LTI Mindtree, Nifty IT, Nifty Auto as well as Nifty Pharma, and Nifty Media gain over 1%. Nifty Oil and Gas gains for the fourth consecutive day. Nifty Realty falls for sixth consecutive session. Nifty Metal snaps, of course, its 3 days gaining streak, and Nifty IT gains for third consecutive day. Nifty FMCG has fallen for 8 out of 9 trading sessions now, and Nifty Media snaps its 5-day losing streak. So this is the overall view as to how markets have done today.
Thanks for wrapping that market action, Mahima. Kotak Mahindra AMC Managing Director Nilesh Shah said that short-term market movements will continue to be influenced by factors such as tariff deals, geopolitical uncertainties, which has already had an impact on market sentiment. He added that if a tariff deal materializes, it could lead to a relief rally. He also said that the December quarter could see a shift to a low double-digit growth trajectory, marking an important indicator of long-term return potential for Indian equities.
So there will be many short-term factors which could influence prices. For example, tariff deal. Whether tariff deal happens, there could be a relief rally. For example, geopolitical uncertainty. We did witness very unfortunate event in Delhi, and there will be repercussions of the same. But over longer term, stocks are slave of earning power. Our market valuations are at premium to global emerging market peers. Hence, investors' return over longer period of time will be linked to earnings growth. We believe after 6 quarters of earnings growth remaining in single digit, there is a good chances that earnings growth for December quarter could move into double-digit trajectory. Of course, it will be low double-digit trajectory, and that should be an indicator of long-term return potential.
And viewers, we have a breaking news update. The October CPI data has come in at 0.25%. Against what was estimated at 0.4%, and this is also as opposed to 1.44% recorded in the month of September. So therefore, this has come in at a record low. And my colleague Vishwanath Nair joins us to decode these numbers. Vishwanath, what are you picking up on this?
Right, so as you mentioned, about 0.25% on the inflation front, Malika. That's obviously something that is a shocking number, because 0.4% was what was widely expected by economists polled by Bloomberg. About 34 economists had estimated that. So this is coming in lower, largely coming in because of food inflation. That is coming in, specifically vegetables, down a double-digit 27.57% lower on the food inflation point. As well as if you were to look at where pulses are, negative 16%. So that's obviously the major contributors to the overall inflation number coming in for the month of October. And obviously all of this is coming into existence at a time when the expectation of inflation is still higher compared to where the actual numbers are coming in. And let me actually go across to our guests for the day, Gaurav Sengupta, who's joining us on the video. Gaurav, welcome to this conversation. Also, Garima Kapoor from Elara Capital, who's also joining us. Welcome, ladies. I wanted to start with you, Gaurav. Firstly, this food inflation number, negative 27%. I was just looking at the internals there. largely contributed by the negative 27% on the vegetable prices. So I'm trying to understand from you, they are highlighting, the government seems to be highlighting in its release that there is a GST benefit that is coming in October, so obviously that is helping. But clearly it's the vegetable prices that is pushing down the inflation number, right?
Definitely. So our estimate was around 0.2. So it's largely in line with expectations. So there are a couple of things which have helped. One is you've had a strong base effect, which has pushed it down. The other thing is definitely the food inflation. Food inflation is, I think, minus 3.7%, largely led by a sharp decline in vegetable prices. There's also the impact of GST. So if, let's say, GST transmission had not happened, then your CPI, the headline inflation would have been, let's say, around 0.5%. So instead of a 0.5%, it's a 0.25%. So that gap is actually thanks to the GST rate cuts. Our expectation is that the GST cuts, the transmission, will be spread over 2 months. So we've seen already a part of the transmission in October. The remaining will also get transmitted in November. And the low CPI food inflation reflects largely positive monsoon pickup in supplies. And it's not just isolated to vegetables. You're also seeing moderation in cereals and pulses. So I would say it's quite a broad-based disinflation that is happening within the food price basket.
Garima, I want to take this question next with you. When we're looking at the core portion of the inflation trend, that 4.4%, that's still higher than what was anticipated. Actually, the market was estimating close to 4.1% for core inflation in the October period. Do you think this is slightly higher, maybe coming as a bit of a negative surprise to you?
A large part of the core, frankly, is also being contributed by what's happening to your silver and gold prices. So while silver and gold really did not increase very sharply in October, in November, you're seeing a very sharp increase in the early days of November so far. But that apart, you should also remember that when GST rate cuts came in, a large part of the rate cuts were concentrated in the goods category. In services category, you saw some bit of rejig, where certain services actually saw an increase from the rate that they were to another higher rate point, and also differentiation in terms of, let's say, premium services for airlines versus economy services for airlines. So these all factors also mean that the services part of the inflation was expected to see much lower disinflation than that of goods part of the basket of CPI. Now, having said that, apart from that, you have certain aspects within the CPI services which are fairly sticky in nature and do not really get significantly impacted by very strong seasonal factors and aspects in food kit. And hence you've seen this divergence play out. Now, it's quite possible that going forward next month as well, because the increase in silver and gold prices has been much sharper so far in November, the CPI on core, in fact, in terms of index, would remain even stickier, somewhat higher.
Understood. Gaurav, I want to pick this question with you. Now, we are seeing this base effect. You've said that there's a favorable base effect that's, of course, helping the broader inflation number, the headline number as well. Coming to the sustainability of these figures, right? There is an expectation that the RBI has in its estimates that by Q4 you would see an uptick. Q3 is going to clearly come in lower than what the RBI had originally anticipated. How does that play out in terms of growth and future rate projections as far as you're concerned?
See, I would say from a sustainability perspective, look at core. So as Garima was saying, a large part of the increase in core inflation is actually gold and silver. So you look at core, which is you remove gold, you remove silver, you remove petrol, diesel. That is near historical lows, and it has stayed near historical lows, which is maybe around 3.2, 3.5% for more than 20 months now. Now, core is telling you, core inflation is basically demand driven inflation. So when you have sustained moderation in core near historical lows, it indicates that there is excess capacity or the economy is not growing at full potential. So that indicates sustainability. We don't have a problem of, let's say, a demand side push of inflation because we have excess spare capacity. On the other part is the supply side of inflation, which is obviously very difficult to estimate because food still remains a large share in our overall CPI basket, 40% share of overall CPI basket. It tends to be highly volatile. But what we have seen in a key change from last year is this time food inflation has been much, I would say, less volatile. And you're also seeing that it's a broad based, it's not just vegetable prices, which can, crash one month, the next month you can see a spike, but you're also seeing it in very sticky items such as cereals and pulses, which is a good sign. It shows that the impact of back to back good monsoon, the outlook for food inflation remains pretty positive. We thankfully have not seen any adverse impact of the unseasonal rainfall that we have seen in the month of September. Even the extension of the monsoon, high frequency food prices remain benign. And more importantly, Rabi sowing is off to a very strong start. I think area under sowing is tracking higher by 27%. Reservoir levels are higher than a historical average, more than adequate food grain stock. So from a food supply side, I would say very limited upside risk. It looks like FY26, at least our inflation is tracking around 2%, which is softer than even our estimate for 2.4 for the year. RBI is around 2.6. For next year, we are tracking around 3.9%. RBI is at a 4.5. So we do see from an inflation perspective, there is space to ease, but the need that will be driven by growth. So only when there are downside risks to growth, that's when when you can see RBI actually cutting rates. They will not cut rates just because inflation has dipped. Inflation just tells you that there is space to ease.
Understood. Garib, your point of view here, I just wanted to bring in, the view seems to be that there is space as far as inflation is concerned. But of course, growth concerns are the ones that will push any further rate cut from the Reserve Bank of India or the MPC. But to your mind, do these pricing concerns also point to that growth concern coming up?
There is a dichotomy, right? The headline Q1 number shocked almost everybody on the street at 7.8%, while most high-frequency indicators did not indicate that the economy was growing at that rate. Likewise, the Q2 number also will show a number close to 7% or even higher, partly also because the base effect is very favorable for Q2. Now, what's really happening is if you strip off particularly the policy-related aspects, that is the government spending, and look at the aspects that have been driven by government policy, let's say consumption, because of GST cuts or because of income tax rebate, you are not seeing a broad-based pickup in growth. Particularly, your manufacturing capacity utilization is nowhere to what it was, and there still aren't enough signs for a broad-based pickup in CapEx. Now, having said that, if the current governor of RBI has indicated in his previous policies, while he was cutting his rate earlier part of this year, is that India should aspire for a higher growth rate. Now, if that is the benchmark and inflation is giving you the much needed elbow room to do that, with this year's financial year, financial 26 CPI inflation, and I estimate will be below 2%. It's never happened in history of this country that we've seen a headline retail inflation as low. Next year, there'll be a base revision. There will also be a revision of basket for CPI. That will make the predominant impact of food much lower in terms of driving the spikes of inflation that we've seen in the earlier episodes of inflation increases. That means that you have a predictability of inflation in the range of 3.5 to probably 4.5 for at least next 12 to 18 months. That means if central bank are looking at this is the right time, there are global headwinds, the trade deal might go through, but you are seeing current manufacturing capacity not being utilized to its fullest, and there is an excess capacity of potential growth that is much more than what the current growth is, which your core numbers, as Gaurav pointed out, are indicating. So, in my view, that should give enough elbow room for RBI to assess that there could be a room for rate cuts. But remember, Fed has cut rate after the previous policy, although the chances of Fed rate cut again in December are still 50% because the incoming data from US is not as weak as what was earlier anticipated. I still think there is room for RBI to cut rates by 50 basis points more throughout next 6 months.
50 basis points over the next 6 months. Gaura, your viewpoint, any expectations on that front?
There is definitely space to ease. Agree with the assessment that there is space for around 50 basis point. The need that is going to be growth driven. For example, even in the October policy when RBI met, even back then, we knew that inflation is going to be well below estimate levels. And it's been, I think, a phenomena that has persisted for a while now. As I earlier mentioned, core inflation has been subdued for more than 20 months. So that clarity on inflation was always there, but still RBI chose to remain on pause. I think the trigger for them to cut rates will be growth, while inflation definitely tells us to ease rates. Right now, if you look at the high frequency, our estimate for growth for Q2 is tracking at 7.3%. So you'll have another good 7% plus inflation estimate. If we get the trade deal with the US before the RBI policy, then RBI will have to revise up their FY26 GDP forecast from a 6.8 to a 7% plus, which is their aspirational level. So while there is space, the need for now looks much lower if India gets a trade deal. If India does not get a trade deal, definitely RBI will have to cut rates. And in that situation, definitely you'll have 2 more rate cuts. But if India does get a trade deal with the US, I think the risk to growth becomes much lower, and then the need for a rate cut also becomes much lower. So in that case, it could be a pause for December.
All right, Gaurav, I've got one more question, and I want sort of a quick answer for both of these because we're seriously running out of time. But I just wanted to get a sense from you as far as nominal GDP is concerned, considering these ultra-low GDP inflation numbers that are coming in. What is your outlook for nominal GDP for this financial year? Has that changed from what it was? First, Garima, and then I'll go to Gaurav.
We will struggle given the not even the weak prints on CPI, but also the kind of prints that we see in our WPI, global commodity cycle, particularly that of crude oil. All are probably pointing out the fact that this year's nominal GDP growth will struggle to even cross 9%. That does have its implications across the board. But I think in terms of expectations, the deflator would actually be surprising you downside than what we started off early part of this year.
Right. Gaurav, your viewpoint?
So our nominal GDP for FY26 is tracking at around 7.7%, slightly softer than 8%. The union budget had budgeted a nominal growth of around 8%. So as Garima mentioned, mostly it is WPI. So GDP deflator is mostly WPI and then CPI. So yes, the nominal growth rate will show the subdued inflation. We're already seeing the impact on tax collections with both direct as well as indirect tax. It's showing you the impact of a slowing nominal growth rate. But that will remain, that'll get a positive boost with a slowdown in the deflator.
All right, Garima Sengupta and Garima Kapoor and Gaurav Sengupta, thank you so much, ladies, for joining us on this conversation. Pleasure talking to you as always.
Thank you.
All right, so that was our economist guests who were talking about the fact that nominal GDP will look a little weaker. Nominal is real GDP plus your inflation figure because the inflation numbers are lower. So nominal GDP will likely look weaker. That is a number that you look for when you're talking about the budget, right? However, real GDP is going to look much better, and that is likely going to be the scenario now. Malika, that's on the GDP. That's on the inflation and GDP front. Back to you for the rest of the story.
Thank you so much. And now we have another breaking news, viewers. As you can see on your screen, there is an update on the Vedanta demerger case. The NCLT Mumbai reserves order in the Vedanta demerger hearing. And this is the latest update that we are currently receiving on the demerger case related to Vedanta. So the update, as you can see on your screen, flashing in bold, is the fact that NCLT Mumbai has reserved its order in the Vedanta demerger hearing. Vishwanath, could you give us some context into this case, please?
Right. So as far as the demerger is concerned, the NCLT was hearing arguments from both sides of this entire thing, which was first was Vedanta, of course, and the other was SEBI, because SEBI had raised certain concerns about companies that were linked to Vedanta and were part of this entire demerger exercise. And that is why that was a relevant sort of an argument that was going on. As part of the arguments that have been made today, the ASGI has said that this merger would be resulting company one of the resulting companies would not have enough assets to cover government dues, and it is financially harmful to the government's interest. Remember that Vedanta is a very large entity, and of course, a lot of companies within that Vedanta umbrella also have dealings with the government. So these were concerns that were raised by the government as well as SEBI. We have seen that it did not Vedanta, according to the ASGI, Vedanta hid key details about its litigation liabilities, and that is why they were opposed to it. It had exposed shareholders to accounting and financial risks. Since then, of course, a lot has changed. As part of the hearing that was going around, Vedanta has opposed these allegations, and they are saying that there is no subsisting claim as of now, and that they do not recognize every counterclaim that has been made against their application. According to what we are learning from the hearing that was going on earlier today, all officials are supposed to file initial annual event-based and exit disclosure. Apologies for that. So they're supposed to, at this point in time, NCLT has reserved this judgment. They're going to read through what is happening in the case. They will consider all the arguments that have been made by members from SEBI, from the government, as well as from Vedanta, and on the basis of that, they'll come out with a judgment. So we'll have to still wait and watch what exactly the NCLT decides. Remember that this was a case where the NCLT had approved the demerger originally, then the NCLAT opposed it. They sent it back to the NCLT, and that repeat hearing is what's going on right now. So how the NCLT is going to look at these various facets and whether they will clear the demerger or not, that's something that's going to be the next big trigger as far as Vedanta is concerned.
Right, Vishwanath. So basically, as Vishwanath really gave us the context of the demerger, NCLT has reserved its hearing on Vedanta's demerger case. And as he said, the various facets influencing this particular demerger will be continuously tracked here on NDTV Profit. But for all the latest updates, viewers, you stay tuned to NDTV Profit. This is Malika Mishra signing off briefly. See you in a short while.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है। अरे और रहमान
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the
Hello and welcome to KYC. I am Sharad Dubey and with me is Varsha Chandani, and today this company which will be in focus in our special show KYC is PTC India. This is actually a less tracked stock also amongst the analysts, but we at NDTV Profit will be tracking the stock, and of course the KYC, we get this company in, there are certain questions we need to ask, and of course the most important question is this: why are we getting this company? First of all, the reasons. Let's just see what we actually want to know, whether we had a discussions. So what will be the transition for the renewable energy space? That is something which we'll be looking out for. And of course, the company itself deals in power trading. Varsha will be getting us more details. But let's move on to other reasons also why PTC India is in focus. Will the market coupling be beneficial? That's a very important trigger point because it is holding stake in exchanges as well. Now, will the power trading market deepen? That is something which is very important as an industry, as more and more power requirement is coming in. So power trading is something which we'll be looking out for. And the last one is, what will be the synergies for the cross-border trade? Roughly, it's around 17-18% of revenues right now, but will that go up? Our neighboring nations, they will be in focus. But Varsha, quite a technical company, and of course, we scratched our brains on the company and the entire KYC show. But just give us to our viewers, what are the views about the company, what it actually does in market coupling? It's a very technical thing. So if you could just break it down for our viewers.
Sure. So let me start about what does this company do. So they are into power trading business basically, and they undertake long-term trading and short-term trading of power. They have achieved trading volumes of 82.75 billion units in FY25. And they also do cross-border trade with Nepal, Bhutan and Bangladesh. So I would say they're just a broker when it comes to power trading, and they also deal in long-term and short-term trading. Short-term trading normally, when there is surge in demand or when there is, short in supply, so they come up and do that short-term trading power. Now, talking about the revenue split, the solution for generator and utilities contribute almost 82% to the overall business. Cross-border trade have almost 18% contribution to the overall business, and rest is from consultancy and advisory services. Now,
a lot has been in market about market coupling. Now, what does market coupling mean and how this is beneficial to companies like PTC India and negative for IEX, I would say. So what is market coupling first of all? So basically, what happens is market coupling fundamentally changes how electricity prices are determined on exchanges, on power exchanges. For example, each power exchanges act as an independent entity for price discovery in segments like day ahead market. Exchanges like IEX, HPX and PXIL run their own auction process. So they collect all buy and sell bids on their platform and use an internal algorithm to find a single price that clears the maximum volume of power. Now, because IEX historically, or rather IEX has a huge market share when it comes to over 90% in spot market, it offers highest liquidity. So price discovery is very easy when it comes to IEX because there are a lot of buyers and lot of sellers. So there's lot of liquidity, lot of volume, and price discovery is easier when it comes to IEX. And IEX because of that price discovery and lot of buyers and lot of sellers, there's a network effect, and IEX offers a very cheap price, I would say. So this liquidity acts as a magnet and ensuring the price discovery is often most referred and trusted. Now, because of market coupling, what will happen? A centralized market coupler like Grid Controller of India will run a common algorithm on the combined order book to determine one single price. So the price discovery which used to happen on IEX will no longer happen, and there will be a uniform single price discovery which will be determined by centralized market coupler. Now, why this is negative for IEX? Because this reduces IEX pricing power. That IEX was basically known for a price discovery mechanism. Now that no longer being there, this will impact IEX market share. Now, why this is positive for other exchanges? Because now the moat for IEX will no longer remain, and the volumes will shift to other exchanges like HPX, which is owned by PTC India also. So basically, in short, market coupling is beneficial when it comes to companies like PTC India because they have a 22% stake in HPX, which is in power exchange. So overall, this is what PTC India does. So PTC India is nothing but a broker when it comes to power trading, long-term power and short-term power. The next growth driver for this, if market coupling happens, it's if. If market coupling happens, yes, company will be benefited. We need to just analyze how much market share will this company gain overall.
And that's a very pretty interesting take on that, Varsha. But coming back to our show, the format, there are 8 parameters where we'll be judging the entire company. Let me take you through all the parameters one by one. Income statement, balance sheet, cash flow, return ratios, we'll be judging them on the numbers. Also shareholding numbers, street cred, which is nothing but your stock tracker across various time periods, we'll take that into consideration, and of course the valuations and what the company's outlook is. Based on that, we will be giving our overall analysis. To start with, income statement is something which we'll be watching out for, and Varsha, the Q2 numbers are also out, right?
Yeah. Exactly. So overall, if you see, the Q2 numbers are good. Talking about the first, let's see how the trend has been. So overall, if you see, the 3-year CAGR has been in -1%. But look at the net profit. Net profit has been the 3-year CAGR growth has been 21%. Now, there are major 2 reasons for this. One is lower interest cost, and the other is lower tax have aided profits, and that's the reason you're seeing almost double-digit 21% CAGR growth in the last 3 years. Overall, if you see, the margins have been on the decreasing trend. So, just on the margins, if I were to talk about in FY22, rather from 2020, if you see in 2020 the margins were 10%, fast forward to 2022 came back to 9%, and now it is 7%. So we need to ask the management whether they'll come back to their 9 to 10% of margins, or 6 to 7% is the new normal when it comes to PTC India. And one of the reasons why you're seeing that negative EBITDA growth also. But overall, onto the Q2 numbers, overall a good set of numbers. The revenue growth was almost 12% year on year, EBITDA growth was 19%, and net profit growth was negative 5%. But overall, we would give a neutral rating to the company considering the 3-year CAGR trend for the company.
Well, that's pretty interesting on that. Balance sheet, it's a very simple analysis. You see the cash bank balances, that's on the higher side, 3,274 odd crore rupees, and the borrowings number, look at that, significant reduction coming in when you see these two data points. So from my side, it will be a thumbs up for this rating.
Yeah, talking about cash flow, so overall a thumbs up when it comes to cash flow, because cash flow from operations, is pretty much at 2,132 crore, which is not that bad. From in FY24 it was almost 2,451 crore. So overall CFO to PAT also it's like 218%, and net cash flow stand at around 835 crore when it comes to FY25. So not an bad numbers per se. So that's the reason we have given a thumbs up when it comes to cash flow.
Well, that's pretty interesting on that front. Return ratios, there are some trends emerging. It's on the higher side, but the way the growth has happened, that is something which we'll be looking out for. The capital base increase is also there earlier, so there are some adjustments as well. Because of that, I have given a neutral rating for the ROCE numbers.
Talking about shareholding pattern, let's see what's happened there. So promoters share has been at 16%, which have not changed since March 24. FIIs though is 29%, though there was a dip in March, 25 to 26%, but that has resumed back to 29%. So nothing negative there. Even DII stake has been at 7%. So that's the reason we have given a thumbs up. Nothing negative as of when it comes to shareholding pattern.
That's pretty interesting on that. Moving on to our second last rating parameter for KYC, the street cred. Not much returns coming for the shareholders in the short term. 1 month and 6 months, you just have a look. It's in single digit, be it positive or negative. For year-to-date basis, it has given 16% return to the shareholders. 1 year basis, the stock is flat. But on a long-term basis, it has been a multi-bagger, 226% returns coming in. So for the shareholders on the long-term basis, it is a good sign. But overall, last 1 year or so, the stock hasn't moved up much. And of course, that major overhang is something Varsha had mentioned, market coupling. This news flow is out already. It's almost 6 months, you could say. And that is why that overhang itself is also there for the stock for not going up. So it's a neutral rating coming from my side.
Talking about valuation, let's see the trailing PE for this company is at 6.5 times, and we have seen a lot of correction, corrects 50% from high, but still there are some uncertainties when it comes to market coupling and all those things, but overall nothing expensive when it comes from valuation. So that's the reason we have given a neutral rating considering 6.5x trailing PE.
That's pretty interesting on that. But our last but not the least, our rating is on the outlook front, PTC India. Of course, the first important thing is the market coupling news flow, which we have been stating all around our show. But the deeper development in the power trading, that is also something which I had spoken about. As in when we see these markets deepen, more new products come, and more new products come, the ancillaries, they start benefiting. That is why you need to understand the main commentary of the company, and we'll be getting the guests shortly as well. Long-term PPS to renewable sector. That is something how the company is going for transitions, where will be the push coming in, and of course we know the government is pushing towards renewable sector as well. So these benefits would definitely kick in. Cross-border trade with Nepal, Bhutan and Bangladesh, we had discussed earlier, that's coming between 15 to 20% revenue contribution also, and that's pretty much important as well. And short-term market, introduction of this short-term market, basically this is power trading but on a smaller options contracts coming in. So that is something which we'll be watching out for. And lastly, of course, the green energy transition. So most of these factors are positive, but they are very far-fetched. Because of that, I have given just a neutral rating on that. But Varsha, let's revise the ratings once over for our audience, what actually this company has done and what we have given. Income statement, largely neutral, decent set. Balance sheet, we saw the borrowings, the cash, these were the two important factors. Cash flows has been good, as you had pointed out. Return ratios, not much. We have kept it neutral. And moving on, we see the shareholding pattern, the institutional participation coming in, a good thumbs up. Street cred for long-term investors, yes, but short-term investors, no. Valuations, okay, correction is there of 50% from its highs, but there is an overhang in the stock, and that's the overhang in the outlook which we have mentioned. But overall, 5.5 out of 8 in the KYC ratings we have given, and it's largely on the higher end of the averages generally when we give to the KYC companies. Also, now let's decode this entire earnings, all the business outlook, and joining us is Manoj Kumar Jhawar. He's the CMD at PTC India. A very good afternoon to you, sir. And sir, first of all, the question remains is the entire market is asking is about market coupling. Your investments are there, and there might be a re-rating for the stock if this market coupling announcement comes in. First of all, if just to simplify it for our viewers, how will you be the beneficiary of this? And going ahead, any kind of numbers if you can give, any incremental if this happens in terms of market share?
There are two things. Number one, the market coupling is likely to benefit the other two exchanges beyond this traditional dominant stock exchange, power exchange, which is IEX. So the beneficiaries of the coupling are likely to become the HPX and the PXIL. Since we own almost 22% equity in the HPX, we will be an indirect beneficiary of this whatever benefit accrues to the HPX. That is one thing. Second thing, currently, since we are promoter of the HPX, we are not doing any trading on the HPX, but we are in discussions with the authorities. We have filed petitions before the concerned authorities to allow us trading on the HPX also. So should that happen, I think that will be, beneficial for the PTC itself. So these are the two things which I see happening. Now, market coupling has to be become a practice from January. So we are hoping and expecting that it will expand the trading markets and better volumes as well as more share of the HPX is likely to benefit the PTC stock.
Understood. Hi, Mr. Jawar. This is Varsha this side. A pleasure to have you at NDTV Profit. I understand, sir, that monopoly is actually not good for the market. But considering the dominance presence of IEX, do you think the competition still has that technology advantage that you could actually have those technology capacities and technology advantage to go for trading when it comes to
100%,
HPX?
100%. There is absolutely no doubt about that. Number one, our technology partner is Bombay Stock Exchange, which is a proven stock exchange, and the technology front, all our clients whosoever are trading with us have got absolutely no problem whatsoever. Only thing is because of this networking effect in the DEM segment and in the RTM segment, all volumes traditionally go to the leading exchanges, and that is the situation all over the world, that where the buyers are, sellers would go, and where sellers are, buyers would go. So it is, a self-fulfilling cycle. Now, if there is a coupling, then the buy and sell side of the contract, anyone can place bid on any exchange, and the price will be discovered at a third neutral platform. So I see absolutely no reason that why this HPX technology would fail anyone. It is a good technology. It is a proven technology. I see no challenge on that front whatsoever.
That's a pretty interesting take on HPX. That means you are ready to challenge the larger players also when it comes to the technology front. That's a very important.
Absolutely. There is absolutely no doubt about that.
That's a very important statement coming in from the management. But margins front, let's get back onto the numbers. And the street really wants to know there has been a pressure in the margins coming in. Will this margin outlook, kind of bottom out going ahead, say in the next 8 to 12 odd months? And if yes, what would be the trigger or what would be the key factors for this? Or will we see the margin pressure still sustaining until and unless this overhang of market coupling doesn't go away?
No, actually, this margin is not really dependent only upon the market coupling, which is a side development. Margins in the trading business, power trading business, are determined by many factors. One is the seasonal availability, demand and supply dynamics. So you see, during the rainy season, there is a lot of hydropower available in the market for trading, and since those contracts are typically long-term contracts, the margins are usually very good in the long-term contracts, and if the volume coupled with the per unit margin gives a good return during the rainy season. But then this is a seasonality. So what I see is that margins shall remain stable, but volumes are likely to grow. Why I say that? Because I mean overall, if you look at the power scenario of the country, the demand growth in the overall energy demand has not been that much, and that means there is an easier availability of power, and the rates of the power being traded are consistently a little bit lower than what they were 1 year earlier. For us, the absolute rate of the power does not matter. For us, the trading margin on that traded power matters. So for us, it has been a stable situation, and if the rates of the power are low, then we see that the volumes really go up. So for us, that is a good development, and that is why I see that in terms of per unit margin, it is likely to remain stable. And in terms of volumes growth, we see a good growth coming in, and we are likely to maintain that momentum.
Sir, actually what Sharad meant was there was a time when you used to enjoy 9 to 10% of EBITDA margins, if I'm not wrong, back in 2021, 2022. So are you saying that this 7% is the new normal EBITDA margin that you're going to see for next, at least for medium term?
That was an aberration of the COVID period. If you understand, at that point of time, all the physical, activity in the power trade markets was at an ebb, and we were largely a very big beneficiary of entire digitization of the power markets. But that was an aberration. If you see, then our, growth is in the range of 7 to 9%, and I see that being maintained. That much I can say.
Understood. So 7 to 9% is the margin trajectory that you're seeing. Also, sir, if you could, guide us when it comes to trading volumes, because I heard you saying that you're expecting a good spike in volume. So what is the trading volume growth expected for, the rest of FY26 and FY27?
You see, the overall power demand in the country is likely to grow by 5 to 6% per annum. That is what I expect. And the short-term trading or overall trading market is likely to go a couple of points more than that. So that is what I would see. And since we are a dominant player in the trading space, a lot of that is likely to come to us. So I would say that anything more than 7%, 8%, I would be happy.
Well, that's a pretty interesting take on that front. But speaking of the cross-border electricity business, that is, we are having our neighboring nations, and almost 15 to 20% of revenue also comes from this segment. Give me in details, what's the growth outlook looking like for this? We have heard a lot of, energy agreements being announced as well in hydroelectric segment, and even some in thermal also when it comes to agreements. But what is your view and the growth outlook for this segment of your business?
There are three things, and basically there are three countries with whom we are having a power trading relationship: Nepal, Bhutan, and Bangladesh. If we take one, each one separately, so in the Bangladesh, we are currently utilizing our transmission corridor to the full. So there is, no potential of further growth of that market with the Bangladesh. We are currently supplying around 200 megawatts of the RTC power to the Bangladesh, and I do not see that going up. Beside other things, there is transmission congestion also. With Nepal and Bhutan, there is a tremendous potential to grow the trade, overall power trade. PTC would be a part of that journey also. Up till now, we have been largely importing the power from Bhutan and Nepal also. But now, during the winter season, when there is no hydro generation, we are into the business of supplying them power also. And I see that trend growing because there is a seasonality and there is a complementarity. So whenever opportunity arises, we sell them power. Whenever opportunity arises, we also import the power, and we are a dominant player in that market. So with Nepal and Bhutan, I see growth happening. Both the countries have got very big and ambitious plans about further development of their hydropower potential. So, but these projects do take a lot of time in commissioning. So I would not say that immediately you can see anything, but gradually the trajectory is very clear that these two countries are likely to grow their hydropower potential, and that means a lot of trade would increase with these two countries.
The renewables, sir, considering renewables forming a rising share when it comes to India's generation mix, are you exploring green certificates or carbon trading linked services to enhance the margins and your current contribution from renewables?
You see, renewables, I mean, whenever any energy is being sold, so there are two markets. One is the GDEM market and another is the DEM market. And whatever energy, I mean, we are trading a lot of that is green energy also. So that is one thing. Regarding this RE certificate, we are already deep into that market. We do provide these trading services to our clients, and right now I am not having the number, but that is a decent number that we already provide the RE trading, RE certificate trading services to our clients.
Pretty interesting take on that RE front and your important views coming in, especially for the technological readiness which you have stated in our show against the largest player. Thank you very much, Mr. Manoj, for taking out your time and giving the views for PTC India and the growth outlook going ahead. But let's revise the entire show. What are the three important takeaways coming in? And Varsha, very big statement coming in KYC. Market coupling, HPX market share is expected to increase from 1st January. But another statement is very important, is that the company is technologically very strong for market coupling. And interestingly, BSC is the technology partner for the company as well. And overall, the volumes are likely to grow, but nothing much on margins. Margins are likely to be stable. That means from the historical numbers, it will be on the lower side. So this is very important statement coming for the company. And HPX, as we know, they are holding 22% stake in the company. And that is where most of our conversation was there in KYC. But we have got the gist of the entire conversation at KYC. That's all, folks. Thanks for tuning in to KYC only on NDTV Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है. और रहमान
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
Hi, thanks so much for joining in. You're watching Your Money Matters on NDTV Profit, and my name is Alex Matthew. As the name suggests, this show gets you everything that you need to know, actionable insight into how to manage your money better. And today I'd like to talk to you first about health insurance. This is something that a lot of people say you should buy before you even make a first investment. But what is the kind of cover that you should get? And how should you construct that cover? Because you can, for example, take a full base cover of 1 crore rupees, or you can take a certain amount of a cover as a base cover, and then you can do a super top up. It's much cheaper to do the latter, but there are drawbacks to that approach as well. Joining me to talk about what the ideal approach should be is Nikhil Jha, the co-founder of Hercules Advisors. Nikhil, you had a very interesting working that you shared on social media, and which is why I wanted to talk to you about this. And you took about a 30-year, and this is a hypothetical scenario, a 30-year-old with a 10 lakh base cover and a 90 lakh super top-up and a 1 crore base policy. The difference is quite considerable. In fact, you would pay double the premium in the second scenario. Why is there such a big difference?
So when we consider a super top-up plus base policy, so that will be quite cheaper as compared to a total full base full base policy. So let's take an example. If you are taking a 10 plus 90 super top up plus base policy, it will cost you near about 15,000. Similarly, if you take a 1 crore base policy, that will cost you near about 30,000. So why it's so? So in super top up policy, it has own limitations on room rent. You cannot claim more than single private room. There will be sublimits on cancer treatment, like you cannot claim more than 3 lakhs, 5 lakhs or whatever. So it varies from one policy to another. Third and main important thing in the super top up policies are non-consumable items are not covered in the super top up policy. So that is the main reason why super top up policies are cheap. So if you are looking for a policy with a good coverage, we'll definitely advise you to go for a higher coverage of base, not for the base plus super top up. But yes, if you are looking for a cheaper policies that will build you a corpus of 1 crore at an early stage with low premium, then you can look for the super top up policies. But remember, super top up policies are very good while paying the premium, but while getting any type of claims, it will quite complicate you because you have to run 2 policies, you have to survive 2 waiting periods, everything. So it is always better to run a single base policy of good sum insured value like 25 or 50 lakhs. That will be very good for you.
Okay, I want to get into the details of some of these issues that you've highlighted in the limitations that you've pointed out for a super top up, because I think a lot of people go out and do the first scenario where you take a limited base policy, especially because they also depend on their corporate policies, right, Nikhil? Because you have 5 lakhs to 7 lakhs to 10 lakhs in corporate policies on an average. So they say, okay, I have that, and beyond that I will take, then the next safety net is my base policy, which they'll take as 5 or 10 lakh rupees, and then they'll add to that maybe a 30 or a 40 lakhs or a 50 lakhs. In your case, you've talked all of the way about a 90 lakh super top up. But what are the limitations that you've pointed out on a super top up, and why do they exist?
Yeah. So let's take a example of claim. Then we can clearly understand how it works.
Yeah.
So let's take an example. We have taken a 10 lakh plus 90 lakh super top up policy, and your single bill comes to 30 lakhs. Okay. So on that scenario, how it works? So first 10 lakhs from base policy will get full amount. The remaining 20 lakhs, there will be sublimits on room. You cannot claim more than single private room. Second, there will be sublimits on whatever the treatment that you have taken, like robotic surgery will not be covered, or immunotherapy will be not covered. Many treatment related to cancer will not be covered on the super top up policies. That is the second thing. Third,
is that always the case, Nikhil? Is that always the case? Or
99% of the super top up policy hold this type of scenarios, this type of sublimits in the policy.
But why is that? Because ultimately, yes, this is an avenue for the health insurance company to offer you a product at a lower premium. But
exactly.
Then if I'm doing this, I might as well get a slightly better option, right? Because even in the super top up, there should be an avenue like there is in other insurance products, Nikhil, to build on certain things over that, right? So you have riders that you can associate with that, and you can perhaps pay a higher premium. Does that not exist for super top-ups?
So in one of the newest policy for super top-up in the market is from ICICI. On that policy, the limitations are less, but still have to conclude what are the terms and conditions to be fulfilled. That policy have certain riders to carry out the room modifier option, that you can claim more than single private room, or the consumable items are also covered, but yet to get all the good pictures about the claim part. So there are still policies available in the market with full claim settlement guarantee, with all the claim protector riders, all the consumable riders are available, room modifier riders are available in the super top up policy, but still to get a clear picture on claims part, because never seen a super top up claim and getting full settled. So have to look onto particular scenario while taking any type of claims. So we have to wait.
When you mention no restoration lost benefit, what does that mean?
So restoration means, let's take an example, Alex. If you have taken a 10 lakh policy in the month of November, so this policy will be valid till next November, right?
Yeah.
So if you have taken a claim of 8 lakhs in the month of January, so on that scenario, what will happen from January till next November, you are left with only 2 lakh rupees.
Correct.
Right? Because of restoration, when in base policy, restoration is there. So again, if you get hospitalized in the month of March or April, again you will get 10 lakhs more. Whereas in super top up policy, it doesn't have.
Okay, so it gets exhausted.
Exhausted, right.
And super top up is generally associated with, does not necessarily have to be associated with one person, right? So for example, in a hypothetical scenario, Nikhil, I can say that I am taking a base policy of 10 lakh rupees. My wife is taking a base policy of 10 lakh rupees, and jointly we are taking a super top up of 90 lakh rupees. Is that how it works?
Yeah, it is how it works. So even one person has taken a claim, it will be counted as a deductible part. So there is a deductible that we have to survive. So if you have taken a 10 lakh deductible and between two, any of the member has been taken that deductible out, means whatever the claim amount will be like there will 10 lakhs. So if you have taken 10 lakhs from your corporate policy or from the base policy that you are holding, another member can use the sum insured from the top-up policies.
Okay, that's important. And when you say no claim bonus, no claim bonus is not applicable on super top-up?
Right. So what is meant by no claim bonus? When you don't take any claim, so most of the policies in the insurance industry right now, if you are taking a 25 lakh policy, next year it will be 50, then after 75 lakhs, then after 1 year, so every year 25 will be added into your policy. Okay. Whereas if you are taking a super top-up policy and you are taken a 90 lakhs top-up, there will be no claim bonus. So that 90 lakh will remain same.
Okay, but that isn't the case for a what is the calculation for a base policy super top not super top up no claim bonus for a base policy? If for example if I've got a 10 lakh policy base policy and I have not made any claims, it's possible that my premium goes up. Will my premium go down or will my coverage go up? How does that work?
Your coverage will always go up. Okay. There will be no decrease in premium in any of the policies. Okay. There are 2-3 policies available in the market where if you have not taken a claim for next 5 years, like if we talk about the care super care. So on that policy, what happened? If you have not taken the claim for next 5 years, on that scenario, your first year premium will be reversed back to you. Okay. But that is not so great in terms of if I can advise you to get that policy, because if you have not taken any type of claims for next 5 years, it will be like you are not getting any idea how the policy is going to be worked out.
Yeah, you don't have an idea. You don't have an idea about the coverage, you don't have an idea about claim settlement, about the process. So if you were to rank, Nikhil, and we'll come to the advice that you have for my viewers about the ideal way to go about doing this. But if you were to rank policies and you were to say that you need to look at these 4 or 5 metrics in order of priority, what would they be?
So there will be 5 things that I always want all my followers to get into that, all your viewers as well. So first one will be, in your policy there should no room rent capping on your policy. So you are eligible to any room you want while taking any type of hospitalization, because you never know what type of room is available in the hospital or not while taking any type of hospitalization, right? So your policy should not have limit on your room. That is the first thing. Second, there should not be a co-payment in the policy. What is meant by co-payment? Co-payment means between it will be a part payment between you and the insurer company. Okay, so if you are taking a 10 lakh rupees claim, most of the co-payment option will be 20%. So what is meant by that? 8 lakh will be settled by company, remaining 2 lakh you have to pay from your pocket. So in your policy, there should not be a co-payment in your policy. Everything should be settled by company. You don't have to pay a single penny from your pocket. That is the second thing. Third one, there should not be any sublimits on any type of diseases. What is meant by sublimits? It means on particular disease, there should not be a limit of 1 lakh rupees or 2 lakh rupees or 5 lakh rupees. So if you are taking any type of claims, you can claim up to the sum insured whatever you are holding right now. Okay. So that is the third. Fourth one will be consumable items should be covered in your policy. What is meant by consumable items? So in all the policies across industry, there are certain things which are not going to be covered. What are those? That are gloves, cotton, mask, syringe, all that stuff. So it will cost you near about 10-15% of your entire bill. So in your policy, this consumable rider should be there. Then only your claim will be 100% payable by the company, or else you have to pay 10-15% out of your pocket. Okay. Fifth and last main important part will be no claim bonus. Your policy should be having good no claim bonus. Why so? So if you are taking a 25 lakh policy, as per current scenario, 25 is good enough policy. Okay. But down the line of 10 years, Alex, this will be nothing because of considering the medical inflation of 10 to 14%. Right? So if your no claim bonus is 100% every year and it goes max up to 10 times or 20 times or whatever, so down the line of 10 years, it will be 2.5 CR.
Yes.
Okay. So considering the medical inflation also down the line of 10 years, this 2.5 CR ka value will be near about 1.25 CR, right?
Yeah.
So at that point also, you will be having good coverage.
Sure. So I have a follow-up on that last bit and then the piece of advice that you might have, Nikhil, which is that assume that I've had a no-claim bonus for 3 or 4 years in a row. and my coverage therefore has gone up, my cover has gone up. If I make a claim in the 4th or the 5th year, does it reset back to the first value, or does it reset, or does it not increase from the 4th year value?
Yeah, so there are certain policies, sir, where even if you claim or don't, your sum insured is going to be doubled. But whereas there are certain policies in which if you are going to claim, that particular amount will be reduced from your policy and rest will be carried forward as it is.
Understood. And most of the time it is a latter?
Yeah, it is a latter.
Most of the time.
Most of the policies.
And therefore, just to go back to the first point that you were making, if you are 30 to 35 right now, you probably get a good rate on your insurance policy. Should you go out and get a pretty hefty amount in your base policy, and then down the line you bolster that with a super top up? Is that the way to do it?
No. So what my honest advice will be there, if a person with age group between 20 to 35, the premium will be less as compared to 45 to 60.
Sure.
So what my honest advice will be there, for them, the minimum sum insured should be 25 lakhs.
Okay.
That will be the adequate cover I am looking at. No base plus super top up, nothing.
Just base.
When you are crossing, sorry?
Just base 25 lakh.
Just base 25 lakhs. Okay. But when you are comparing the age group between 45 to 65, where the premiums are quite on higher side, on that scenario, I can definitely ask you to take a base plus super top up policy if your financials are not good.
Understood.
But if your financials are good, then go for the base 25 itself.
Fantastic. Okay. So I'm glad that you've joined me today, Nikhil, and this is an important conversation to have. And thanks so much for those 5 points that everybody should pay attention to when they're going out to get a health insurance policy.
Right.
All right, now that was on the health insurance side, and remember what I said, a lot of advisors will tell you to go out and get a health insurance cover before you even go and make your first investment. Try and do that, particularly when you're younger, because it's much cheaper to get your premium and your policy. But let's talk about the second part of this show, which is about your investments and the strategy that you should employ. It's always a good idea to diversify your portfolio. You've probably heard this said in the past by a lot of veteran investors, and there's a reason why they say this. You're talking about diversification by adding a variety in your portfolio in terms of asset classes. So here we're talking about equity, we're talking about fixed income, we're talking about gold, and we're talking about possibly real estate, but not necessarily physical real estate. So we'll talk about some of this in the second part of today's conversation. Joining me is Rohit Mattu, who's the National Head Retail at Axis AMC. Rohit, thanks so much for taking the time. And let's talk about this, because I was looking at the latest AMFI data, and very encouragingly, I think a lot of people are buying into the hybrid strategy, are buying into even the multi-asset strategy, which has meant very strong results, particularly over the last several months because of gold, but also it's a good thing because they're looking for diversified funds. What do you think about that?
No, I think, first of all, thanks a lot, Alex, for having me on the show. Actually, market has become a bit matured. If you say, in the past, what used to happen, people used to follow trends quite a bit. But then I think lots of financial literacy has made it a point that clients have become a little wiser, and there are lots of advisors or the partners who are suggesting those kind of plans to our clients. And that's how you see this, again, lots of interest coming into multi-asset. As a strategy, obviously, multi-asset is something, it's an all-weather strategy, because past 25-30 years have told us that not at all points of time all the asset classes run in tandem. Usually there are contra plays which happen. There was a time period when equity used to do well, but at the same time probably that time gold will not do well. When gold does well, sometimes equity will not do well. So it is always prudent that clients make that shift to the multi-asset strategy, because that's where it becomes an all-weather strategy with them. The volatility is lesser, the risks are taken care of, because when one asset class doesn't do well, something else is working for you. So it's an engine, it's a three-paced engine where one of the engines is working and ensuring that you are taken care in terms of the return expectation, and at the same time the risk volatility which otherwise you are paying.
Yeah, let's talk about some of these aspects in a little more detail, and I want you to look back particularly over the last 1 year to 3 years and discuss the importance of what you just said in the context of movements of these asset classes, because on the one hand, you've had gold, which is a decadal story, if at all, and quite a bit of that has happened over the last 5 years as central banks around the world have started buying more of this asset, and they've been in the process of de-dollarization seemingly, and that has pushed the prices much higher. And the Indian household has benefited, and so have investors into multi-asset portfolios as well. But there's also fixed income, where you've had a significant benefit of the monetary policy shifting to the downside, and there's even more room in the engine or fuel in the engine for a bit of a pop heading into the next few months. And all the same, you've had equity that's not done particularly well over the last 12 months. So put all of this into context.
Yeah, so you're right, Alex. For example, let's take example of gold, for example. Everybody is talking about gold for last 1.5 years has done significantly well. But there was a decade from, say, 2010 to 2020, the gold average CAGR was just 3.7%. So it didn't do anything at all. Last 5 years, the CAGR is around almost 14%-ish because of obviously a stellar performance of almost 50+% last 1 year. At the same time, if you see from FY22 to 24, Indian equity markets had a brilliant run, bull run. We saw broad basing of market. We saw all the sectors, most of the capitalizations doing really well, small caps doing really well. But then again, we've had last 1 year, which has been very, very tough. At the same time, on the fixed income, as you said, because of the monetary policy, because of the way our inflation has been brought under control, and still inflation as we talk is around 2%, which gives some more headway to the central banks to do some policy intervention. But our belief is now probably the long duration play is not there to play. But then, yes, there is still some headway which we can play because of the monetary policy easing. So we've seen so many times that markets, one leg of the market does exceptionally well, some other leg of the market doesn't do well. How do clients balance this? For the clients, it's a big dilemma when to get into which asset class. It is also a dilemma for clients sometimes whether they should invest in small cap, large cap, mid cap, which are the themes which will do well. And that's where multi-asset kind of a strategy plays really, really well, because it's the fund manager who is ensuring that he's switching within the asset classes without putting too much of tax incidence. I think that's also one of the very, very important factors here. It becomes a very tax efficient way of investment. And secondly, there's an expert who's looking at the markets almost on every single day basis and there's an expert who's trying to take that decision on your behalf. So that gives more credibility to that decision.
I'm looking at the sheet of the Axis Multi-Asset Fund, and there is allocation to gold ETF, there is silver as well. I'm just wondering what the strategy is currently and how the fund house is looking at the allocation strategy as we stand in November of 2025.
So as of now, our gold plus silver allocation is around 15% odd. Looking at where the market is, we may not be wanting to increase that allocation as of now. But then there is still, we believe that gold definitely there is lots of leg room to do well over the next few years, because as you said, there is lots of talks on de-dollarization, lots of things happening. Central banks wanting to wrap up their gold reserves against the currencies. So that ways, we still think that gold should do well over a period of time. But then looking at the recent uptrend in the gold, obviously we are a little skeptical. We want to take a pause there for some time. We are happy with the allocation as of now, what is there. So the commodity will be around 15-16% as of now. But we are coming up with one more FOF multi-asset fund where it will be very dynamically managed by our fund managers. There we can go up to 35%. Obviously not that fund managers will go straight away to 35%, but that's the leeway and dynamic approach which we can have there in the multi-asset FOF category, where we would be taking a longer term view on the asset and trying to see where we can take the opportunity to ramp up the numbers there.
And the tax incidence will be easily manageable in an FOF kind of format, wouldn't it?
The best part, some of the key advantages of a FOF structure is one, you're not relying only on one fund manager to take calls for you. Because it's an FOF, the fund managers can go to the best fund managers, best funds within the AMC and try and see how they can diversify the risks there. They can also play various themes on the equity side of it, right? And whenever they feel that markets are overheated or the debt side of it is overheated or sometimes the commodity side of it is overheated, they can quickly shift. For example, on the equity side, we can come as low as 10%. Not that we will, but then there is an opportunity that in case we feel that markets are not doing that great, that the dynamic flexibility is there that I can come down to 10%, and still clients who hold on to the fund for more than 2 years, their taxation will be 12.5%. So that's the big advantage you have, that you can play very, very dynamically there. You can play various themes within the fund because there's no allocations as such, because in any of the other active equity funds, you have to go with the fundamental attributes of the fund. If you have a mandate to invest in large caps, you have to be majorly into large caps. You can't deviate from that. Correct. But a fund of fund structure gives us that opportunity and that flexibility that we can maneuver ourselves between debt, equity, and commodity, which makes it a very, very efficient tool for long-term investors.
Okay. Maybe the next time we speak, we'll talk a little more about that. But I do want to ask, and this is a counter question, right, Rohit? A lot of people, particularly in the equity markets, tend to look down their nose at a multi-asset strategy, right? They say that, look, we believe in the India growth story and we want to be wholly equity. And this is coming from families that have invested in equity for the longest time. So they say, why should I shift out? If they have to rotate, they might rotate from the broader end of the market if they're feeling conservative to the large cap space. They say that they will be able to conserve their capital on that front. Why do you think that having a certain allocation, even if it is 10 to 15 to 20% into fixed income, is absolutely necessary to have?
Alex, the good part about this strategy is that when you backtest all these models, what it gives is that your standard deviation is almost half of what a normal diversified equity fund will have, and still the return expectation is maybe 100 bits less than a diversified fund. So you are taking almost half the risk of an equity fund and making returns which is almost as similar to an equity fund. That's why it makes very, very, so it's as I said, it's an all-weather investments which a client is doing, and it also gives the exposure of the commodities, which generally we tend to sometimes miss out because we don't try to time gold as an investment. Obviously, as a jewelry and as a household jewelry, we keep buying that, but then it gives a great opportunity for people who are not very aggressive. And there is a segment of client. Believe me, there are lots of clients who are first-time investors. India still is at what nascent stage. We are just 5.35 crores of investors who are unique investors who are investing in the equities. There are lots of first-time investors. There's lots of euphoria coming in from women investors, and almost 50% of our new clients who are coming into the markets are women. So for them, probably this is the best way to start their investment journey so that accidents are lesser, because volatility will be lesser, the consistency of the returns will be there, and there is some engine working for you at some point of time, so you don't have to wait. For example, somebody who had invested only in equity last, say, September, he would be sitting either on a 1 or 2% profit or maybe in losses also. So whether a new client who has come into the market in September 24 would want to be in this market when he has seen that he used to invest in FD, for example, to make 5-6% and he's not made anything, maybe he'll dissuade from the market and feel that, no, I'm better off being
good point. That's a good point.
I would say they should come and invest into multi-asset, because this will give them a good experience of participating in the growth trajectory of Indian markets. Absolutely. And India as a growth story. At the same time, they don't have to go through the same kind of volatility, same kind of risk. So the experience is better and the longevity of that client will be better.
You made a strong case, and I think the next time somebody says, I have a 100% equity portfolio, I know what to tell them. Rohit, thanks so much for taking the time. Pleasure speaking with you.
Pleasure is all mine, Alex. Thanks a lot. Bye-bye.
All right, well, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. This is NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank
I
you.
think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
We're speaking today about Biocon's numbers, and joining me is the MD and CEO Siddharth Mittal. Mr. Mittal, thank you so much for speaking with us here at NDTV Profit. We'll get into the Biocon Biologics part of the business, which you look at closely in some details. But first, just a word on the overall numbers. The consolidated numbers look fine on the face of it. But if I move away Biocon Biologics and look at Syngene, etc., I think expectations were penciled in at higher from the street.
Well, I think we have delivered in line with the expectations, at least that we had set. I really can't comment on what the street was expecting. I think both our businesses, generics and biosimilars, delivered a very, very strong 24-25% growth, and or the CRDMO business delivered 2% growth over last year, which was in line with the plan and in line with the expectations that we had set. So on a consolidated basis, a very solid 20% growth, and a sequential basis, again, a very solid 9% growth. And I think, this growth, of course, there have been many drivers which contributed to that this growth, and we expect this growth momentum to continue in the second half. So I think we are, at the board level, the management level, quite happy with the set of numbers that we have delivered.
Let me focus a bit on biosimilars and of course Biocon Biologics as part of it. 60% plus of the revenue contribution coming in from there, your largest growing or I think fastest growing space as well. Do you expect the revenue contribution to grow going forward?
I think overall as a percentage, we have seen, as you mentioned, 60% revenues come in from biosimilars. And I think the overall revenue growth of 25%, we expect the growth momentum to continue in the second half and the coming years. And there have been many, many new launches. We have had 4 new launches in the US itself this year. We have several new launches coming up in various markets, including Europe and rest of the world. And I think also our base portfolio or the base products which were launched earlier also continue to see more demand, including insulin. I think insulin, there is a huge tailwind as we see more and more innovators focus on GLPs, and that opens up for us to play in that space. And I think in the coming quarters and years, we are very well placed to benefit from this opportunity in the biosimilar space.
Can you give us details of the 4 biosimilars that have been launched?
So we had biosimilar bevacizumab in our oncology portfolio launched in the US. We also launched biosimilar Aspart as an interchangeable insulin in the US. We launched biosimilar ustekinumab, and we had biosimilar aflibercept launched in Canada. I think these 4 products did contribute to the growth we have seen in our North America region.
You also launched denosumab, I hope I'm saying it correctly, which treats osteoporosis and cancer-related ailments as well. What is the kind of scope that you see from this particular launch and the revenue contribution?
See, it's very early days to comment. We do have a settlement with the innovator which will allow us to bring this drug to the US next year. So I think, of course, we have launched in other markets. So for me to give a guidance at this stage will be a little difficult, as the market will ramp up over a period of time. As we know, biosimilars and like generics does take some time to ramp up. Of course, it depends on also number of other biosimilar players when we launch the product. But we are quite confident, as we've seen, again, a very strong oncology and a very strong diabetes through insulin franchise in the US, that we will leverage that benefit or the whole infrastructure that we have set up to benefit from the future launches.
Okay. The settlement with the innovator, you see it coming in time for the launch that you're planning next year, or do you have some timeline in mind for it?
I think the terms are confidential, but yes, we do have a timeline and we will be there in the market, at that time.
Okay. Just let me talk a bit about the biologics part of the business. What are the margins for this portion of the business that we've seen and the growth there for the quarter year on year?
See, our core margins, which is excluding R&D, was at 32%, and EBITDA margin was a very solid 25%. And there was a peak of 4% compared to last year in the EBITDA margin. I think, of course, the revenue growth and all the focus that we have had in optimizing our operating costs, because a lot of the costs are fixed costs and they've already been invested. So as we see more and more revenue growth, gross margin growth, that will contribute to increase in the margin percentage. And that's why we've, compared to last year, we have seen 400 basis point increase in EBITDA.
And do you see that as sustainable or growing? Are you seeing 25% as the sort of margin for this part of the business, which is a bulk of the overall?
No, I think logically, again, that as the revenues continue to grow in the coming years and the fixed cost does not change significantly, we will continue to see expansion in the EBITDA margin. But of course, the existing business also has price erosion which continues. So there will be a net impact on the margins, but it will be in the positive direction.
That was exactly my question. As you know, I have this pricing pressure, especially in the US. How are you defending those margins?
I think in biosimilars, the business tends to be more sticky compared to generics. I think in generics, the price war or the competition is more intense, unlike biosimilars. So the patients and the payers and the PBMs, of course, look at continuity of supply, reliability of supply, unlike just generics, where price plays a much more dominant role. And I think that's the reason when you look at products such as biosimilar trastuzumab or biosimilar pegfilgrastim, despite 5-6 players for these products, we continue to hold over 25% market share very steadily. And same is the case in Europe. I mean, if for the products that have been launched over the years, we have seen a very steady market share despite new players coming in for the same products.
What is the US contribution right now to the biosimilars business, the US exposure?
It's roughly 40% plus.
Okay. So recently there is a fast tracking for biosimilars that the US FDA has announced. How is that going to help you? What is going to be the impact for you?
See, what this it's not really fast tracking. It allows companies who have a very robust preclinical data and phase 1 data and who can submit a very robust scientific file to get a waiver on a phase 3 trial. Now, that would help companies to reduce the cost of development because significant cost goes in phase 3 trials, and also it will shave off a couple of years to conduct those trials. And I think we are very well placed. We have a portfolio of 9 to 10 products that we've been able to bring to this market, and we do understand what the regulators are looking at. Our scientific capabilities that we have built over the last couple of decades definitely places us very well to benefit from reduced costs and reduced timelines.
As we wrap up, I want to talk to you a bit about the overall debt reduction plan that has been put into motion with Goldman Sachs, Kotak, etc. Where do you expect debt levels to go to as far as H2 is concerned?
See, I would call or I'll segregate this entire thing into two. One is cleaning up the balance sheet by giving exit to the private equity investors or the structured debt that we had, whether it was Goldman Sachs or whether it was Kotak and Edelweiss. And I think that we are very well placed to close that by end of this year. We've already given exit to Goldman Sachs and Kotak, and recently we entered into an agreement with Edel to give them an exit this year. So I think by end of this year, we would have no structured equity investors. And that will leave us only with the bank and the bond debt, which is roughly 1.2 billion. So the bond of 800 million, it's repayable only in 2029. So we still have 4 more years for that repayment, and the remaining 300 to 350 million of term loan and some working capital lines that come up for repayment starting second half of 2026, again in an escalating way, or in a it starts in 26, goes up to 28, 29, and starts small and grows up in the coming years. So I think those debts or repayments would be done from the internal accruals. We've seen again a good revenue growth and EBITDA margin expansion, as I mentioned. So cash flow conversion will lead to the repayments. I think we are also coming to an end of our capex cycle. The majority of the capex have already been invested in. So I think the free cash flow will definitely help to bring down this debt over a period of time.
So then what is the margin guidance looking like for you to close off FY26 with all of these factors coming in? Your capex cycle has sort of come to its close. Your interest costs are going to come down. Where do you see that moving to?
I think overall margin guidance has multiple paths, so I would not want to give a guidance. All that I can say is that we will continue to see margin expansion. We have indicated that the interest accrual on the structured equity, we will see a full year benefit starting FY27, which will shave off interest by almost 300 crores. Now, of course, as the capex cycle comes to an end and you capitalize these facilities, we start seeing expenses come in the P&L, and that's what we.
With
with us Mr. Harsh Jain, who is the founder of Grow. Harsh, stellar listing by Grow. So what do you have to say about the many investors who have actually got confidence in Grow's growth for their own investments?
See, we build Grow for the customers, to solve their problem, how they can invest and they can build wealth over time. Now with this, I think we're in an opportunity where a lot of our customers are also able to become our shareholders. It's a very important moment for us.
So now is the critical time also, Harsh, to also explain to your new investors that it's not just Grow, but even their portfolio and their investments is going to grow. Now you also don't have the compliance of giving the future outlook. What lies ahead in terms of growth proposition? I know you're expanding and diversifying into several segments, but give us a sense on your main bread and butter business growth propensity from here on.
No, so see, we see, India is a huge market with the penetration today. What we see is barely 2-digit, right? If you look at every developed countries, there's so many people in the country who have an access to capital market through different vehicles. It is mutual funds or ETFs or direct equity, even bonds, different products. And in the last 5-10 years, what we saw was the level of awareness and the education went really, actually the content penetrated across.
So Harsh, we have had this conversation before that the confluence of COVID and after demon, the capital market, investments, these two factors together created the right place for you.
But not really.
And of course your tech stack and you took advantage.
So what I want to tell there is that it is not just COVID or one event, because it changed the way people think, and it's not going. I mean, our strong belief is that change of thought is not going. So from here on, we see that the penetration should go. Really, it should continue. We don't need to have another COVID, and I mean, obviously,
now that
we don't need
stickiness is there.
Yeah,
now the stickiness is there. It's the way of our life.
Absolutely.
Now, regulatory overhang is one of the biggest risk factors, and the second one is obviously the market momentum, for which I will come to you later.
Sure.
But first, the F&O trading, and that has had an impact on your broking business. A large part of the broking business revenues were coming in from F&O trading. How do you see the impact? And also, very recently, government has come out with very positive statements where finance minister also said that we don't want to ban this segment, and even SEBI chairperson has said that we don't want to take any major decisions because huge investments are involved. Does it give comfort, and what are you expecting from the regulator, and how will it impact your business?
So first of all, regulation is not a risk in our business or in general capital market in the country. See, the way we see is that if people in India have to have access to capital market through whichever products, it's a derivative products or investing products, it's a passive products like an ETF, we are the platform which is giving them access to the capital market, and regulators also want to do the same thing. We are also doing the same thing. They want to expand the market. We want to expand the market. They want to make it safe for the individual, for the retail investors, and that's, they're our customers. We want to make it safe so that they retain with us. Sticks with it.
That is part and parcel of the business. But how is it impacting your performance, and therefore the shareholder return is what I wanted to understand.
No, absolutely. See, we are in multiple. We offer multiple products on our platform, and each product has its own business model, its own pricing, its own revenue, and there is a penetration that works on a platform. Like if 100 customer comes, how many of the customers are doing stocks, how many doing trading, how many are doing ETFs or mutual funds or different products. And each penetration will definitely change over time with the market conditions. It will change over the customer's conditions also, because they start their journey with one of the products and then they evolve, they get into different products. And the behavior of this, that's what the platform gives an advantage, because you don't need to do an SIP every single day. You don't need to, do trading every time. You can do investments, and then you can buy stocks for long. So that whole platform gives a comfort to the customers to stay for long time.
All right, but going forward, regulatory risk is a big one for your sector. And the second one is the overall momentum of the market. Now, since your inception of the company, 9.5 years, we have been in a fairly bull market. You haven't seen the Lehman crisis. Now the globe is also getting into uncertainty with tariff situation. We have seen some dampening of sentiment. So the dependency on these two factors, how at your end you are safeguarding the business for value creation of such a large number of shareholders for being able to tide over different situations like these?
So, I have seen those crises as an investor. I started investing in 2003, 2004, and I've seen some of those crises as an investor. But yes, definitely, we have had good years in the past, and on a longer term, I think we'll have good years as a country is growing, scaling. There will be for some quarters and some months where the market will go up and down. But as a business, see, what makes us resilient is the power of offering multiple products to millions of customers. So if you see that the markets are not very bullish and they are going downwards or sideways, you will see less people want to come in space, and there will be lesser new acquisition. But then you will see a lot of people who are existing are increasing wealth creation in their life, right? They are having more savings, so they participate even more. So the penetration, from a business point of view, the penetration amongst the existing customers goes up. So it balances out over time. I'm not saying that every month, every day is going to be exactly same, because we are in a capital market. We have to live with the fact that there's going to be movement, and this is part of it.
But in terms of other verticals of growth which are not heavily dependent on market momentum, how are you growing that, and what is the future potential of growth for the investors?
Yeah, so there are a lot of businesses, new businesses that we are, I think we already talked about it.
Yes.
See, when customers graduate from how they started their investing, now a lot of our customers are becoming affluent, and their need of the products and the services are also evolving. A lot of them want portfolio management services, they're looking for alternate investments, they're looking for advisory in some form and factor, and a lot of products which are, so far have been for HNIs.
Yes.
And we are building wealth. I think we already spoken about it. Wealth is one big offering that we will be.
So Fisdom was
required.
Yes.
Correct.
So Harsh, now wealth is not a digital first business so far in our traditional market. How are you going to crack that space with only digital approach? Because we have many big players in the wealth management business who have a very close network and relationship with big clients. So the competition is very stiff.
So we look at things in a very different way. So we don't think it from the supply or the manufacturer or the financial point of view. We see from a customer point of view. Are our customers digital? If they are digital, they want services to be digital. They want the experience to be digital. If it is not done, then we'll do it. But then the idea is that we should understand what customer needs and how their behaviors are changing, and we should build our services and our offering accordingly. And that's been the way Grow has been built.
Right, and when we talk about your acquisition cost because of digital play, that is on the lower side. You are doing cross-selling, and how I understand your business is also that you are using the technology to cross-sell the right products to the right people given their customer behavior. Now when we look at this particular aspect, the cohort has been the new age first timers in the market, the ones who invest a lesser ticket size also. How are you going to increase and upscale yourself because into a much higher margin play and a much larger play than more of a volume play as we are seeing with your pan-India presence?
See, we think a little differently. We don't think like cross-sell or upsell or anything. We just think that, we have to give it access to people. So, yes, of course, there are customers who are doing smaller amount of investments, but then there are customers who are doing large amount of investments.
Right.
There are some customers who are doing maybe 1,000, 5,000 rupees SIP, but you will also see people who are doing a 30,000, 50,000 or a lakh rupees SIP also. So once you are a platform and you build on a tech infrastructure, we as a company, we as a platform doesn't need to differentiate or between a low versus a high, because it doesn't cost us to serve all the same. So our focus has always been, can we add more products to our portfolio? Like we were talking about, right? Recently we were working on commodities. We did not have it on our platform, and a lot of our customers started asking, can they have commodities on Grow? And then we started building, and it takes time for us to build because we want to build the best experience. And once we have it, there will be few customers who will use it. Not everyone would.
So which of your verticals, and you're working on several of the verticals right now, you have MTF, you have NBFC play, you have wealth business, commodity trading, and of course the main broking business and mutual funds. What is going to give you growth in terms of performance going forward in the next couple of years?
See, so part of our core business is again giving access to capital market, and that has been going on. We'll keep on adding more customers to it. There's a lot more penetration, as we spoke about just now, is pending. So that growth is far more, left as what we have achieved so far. In addition, there will be few products that we'll keep on launching. You already talked about, there's a commodity margin trading funding we launched recently, that is growing, scaling.
Yes.
So there'll be a lot of these, and wealth offering, as we spoke about, that will also continue being our focus.
Which will be the biggest growth driver, and some numbers on the outlook for growth going forward?
So numbers I can't give right now. It will evolve, I think, once the products goes to the market and then people start using, and we'll know that. And yeah, I think core business is...
share, what is your aim now, Harsh? I'm sure with over 1,000 crores in your kitty now for capital expenditure, now you will be aggressive in the growth momentum. So how are you going to utilize it, and how much growth are we expecting in market share as well?
No, so we don't need to be aggressive. See, 80% of our growth is coming organic. And again, as a leader, you always get that trust and love of the people. So it is word of mouth that has been helping us far more in growth across anything. The part of the money that we'll do, of course, there will be some in continue building the brand and the trust with the people. And a lot of it will go in the technology, and some part of it go in the other products also that we're.
So Harsh, there's one company which gave a huge exit to its investors and has come back to the market to raise a huge amount of money for growth capital in 1 year's time. So therefore, my question to you as well, this 1,000 crores that you have raised through this IPO process, how long is it going to sustain when it comes to your capital expenditure plan?
No, we are a profitable company. We generate cash which we use to invest in more products, and even for MTF and other products.
Yes.
So the capital that we are raising is very specifically for these things.
All right. And when we talk about the customer stickiness, the active users, as well as the new acquisitions that you are doing on a regular basis, any insight on the growth momentum for that as well? We need some numbers at least, now that you don't have compliance restrictions.
No, it's not about compliance. I think it's more about, the way we look and the way we build business is very different. We look at the customer's need, what do they need, and we keep building. And if you're on a platform and you have multiple products, I think the idea is that if people are getting access to all the products that they need, and in the right and responsible way, and we continue doing that.
All right. You want to, just one more question, Harsh, before I let you go. A large part of the market is unorganized and is very competitive as well in terms of dealing with that competitive intensity. And of course, you have a tech stack which gives you that penetration. In terms of the competitive intensity, how do you see the market, and what moat does Grow offer to stay alive and ahead in the game?
See, I focus again. I'll tell you maybe at the cost of repetition, because see, if you see the market is huge, then the more important than the competition is that are we able to build a responsible channel for the retail customers to come and invest in stocks or mutual funds or whichever capital market product they do. So the bigger challenge, not just for us, for everyone, is to keep educating, keep helping people to be able to participate, and we continue building on that, and that will give us the, all the growth and the financial, all numbers are an outcome of that effort.
That's right, Harsh. In fact, the trust that you built with your shareholders with the consistent return, and the trust you built with your online customers with the safety on the platform, these two are the critical aspects for Grow, for the future growth. Many congratulations on a good listing. Thank you so much for joining us.
Thank you so much for having me here.
Thanks.
the NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive.